sales in the US. Class 8 trucks, of course, are the very large trucks that are sold in the US. But on the charts, on the technicals, Swati, what's the view on Bharat Forge? If you bought at levels of 1,275, would you sell or hold?
Alex, I will suggest to hold on this particular counter. Why? Because we have already seen a major sell-off rally from almost 1800 to 1000 levels, and from there onwards, we have seen a reversals. The short-term view is a little bit cautious. Definitely, the counter is likely to witness some sort of a more selling pressures, which might take us stocks towards to 1050, 1100. That will act as a very crucial supports level. So, as long as it sustains that levels, I will suggest to hold on. It will take some time to gain the profits in this particular stock because 1250 is acting as a crucial resistance levels. Once it manages to give the breakout of that downward sloping trend line, a trend reversal will be seen and which will take a counter towards to 1350 to 1400 levels. So my long-term view is definitely positive. You can hold on if possible. If a counter come down towards 2050 levels, try to average it out your position so that your buying price will come down and you will gain the profits as soon as it manages to give the breakout of 1250 levels on the higher side. So it's a hold from my end at the current market price.
Hold is a view on Bharat Forge. All right, Swati, point taken. We've got a next caller from Bengaluru. Prasad is calling us. Prasad, very good morning to you. How can we help you today?
Hi, Alex. Good morning.
Good morning.
Well, I'm going to look at some small cap IT stocks.
Okay.
In fact, I have 2 or 3 names, which is Hexaway Technologies or Cyient Limited. In fact, I also have another one which is Zensetech. I'd like to know the best one among these, or if they have any other suggestions, that's also welcome.
What is the time frame that you have in mind?
Around 1 year.
Okay, 1 year. So therefore, okay, so 1 year is either here or there, right? So are you looking for a fundamental view? Are you expecting earnings to pick up, or are you looking for a technical view? And chartically, do you want to know whether to buy?
Simply, I'd like to accumulate.
So
for the in such medium to short to medium term only.
I get that, but I'm saying, are you buying it because you expect that IT will come back into focus and there'll be an uptick because of fundamental reasons, or do you think that chartically it's a good time to buy?
Some of that, some of this, like I just want to accumulate some of it.
Okay, all right. Let me go across to Asta. Asta, in the smaller cap IT names, and Cyient is something that we've talked about in the past as well, yet earnings have to kind of pick up, right? So would you say that Cyient is a good pick, or would you pick Hexaware, or would you pick the third stock? Which was the third stock that you mentioned, Prasad? Zensar, right?
It's Zensar Technologies.
Got it. Okay. So, Asta, which would you pick out of these 3?
So I would like to go with Hexaware Technologies. Sure. Hexaware Technologies, if I talk about this counter, right from the time when the IPO came, we were positive on that. So what is the major attraction is that their client base is very, very strong. The kind of client base they are having with the kind of deal wins which this company is cracking is looking very attractive to us. So I think Hexaware is one of the counter whereby you can make a entry into with a price target of 950 at the initial.
Right, so that's the pick, Prasad, for you, Hexaware Technologies. Keep that on your radar. And by the way, in case you're interested in smaller cap companies, we have a show lined up for you every day, every market day at 1:30 p.m. The name of the show is Small Cap Buzzers. Small Cap Buzzers. So watch out for that at 1:30. Soumit Sarkar will take you through the in-depth analysis on each of these companies, and we also have often the managements of the companies joining in as well. The next question is Nivashini's question, and she's asking about Bank of Maharashtra, which incidentally was in focus today, if I'm not mistaken, on account of a QIP. Is that right? I think so. 100 shares is what she has bought at a price of 49.5 rupees per share, and she's looking to hold for a period of 2 years. Asta, what's the view on the fundamentals?
So fundamental view is positive on this counter because it was established. This bank was established in 1935. So they have a long history. In fact, what I am liking is about their NPAs because they have maintained their NPAs in a very decent way. So asset quality is looking very strong to us along with the margin expansion which we have witnessed in this bank. So I think it is a good bank to make a fresh entry as well as remain invested if someone has this bank in their portfolio. Price target which can be set for this counter is 65 rupees.
All right. So that's a view on Bank of Maharashtra. By the way, my memory is not failing me. It was a 2,000 crore QIP that was in focus for Bank of Maharashtra. HDFC Bank. And I do not know if you're going to have a view on this, Swati, because it's trading X bonus today. So would you have a view for a 6-month time frame? We've got somebody who's bought pre-bonus at 1,998. So I'm not very certain if you can give us a view. Can you?
Definitely. Since whatever the data on the technical front, I'm looking at we got a bonus of almost 1:1. Downside, we are witnessing some selling pressures from the higher level, or we can say the profit bookings are witnessing. It has a very crucial support nearby 940 level. So up to that level, the selling pressure is likely to be seen. Thereafter, we might witness some sort of a recovery rally because the counter will enter into the oversold zone. So the selling pressure will be, the intensification will come down, and again, we are likely to witness some sort of a bounce back or the positive rally, which will take a counter towards 2,000 odd levels. So view is definitely positive. Fresh longs are not recommended at the current market price, but if you're getting any deeps towards 940 and so levels, one can add on. But the overall view is definitely positive. Initial targets will be 1,000. Beyond that level, 1,050 can be seen. So the view is positive on the HDFC Bank.
Oh, okay. All right. So that's a view on HDFC Bank. We've got Sunena, who's writing in from Bengaluru, and she says that she's got a lovely surprise today from her father-in-law. He said that he's giving them a portion of his retirement corpus to all of his grandkids, giving about 8 to 9 lakhs to her son, and he's 8 years old right now. And so she's looking for good stocks to buy for the long term, which is at least 10 years, and max 2 or 3 stocks which she would like to utilize these proceeds to buy. Asta, it's a lovely thought, and I think the best way to use your wealth is to safeguard the future generation as well. And what better way to do that than to buy some of India's top companies? So would you be able to suggest 2 or 3 stocks that she can buy?
Sure. So first stock is L&T. It is all-time favorite, but not at current levels. I think L&T can show some more downfall from here also. So I think this stock can be accumulated, or one can buy this stock at the lower level of around 3,520 to 3,530 levels. So first of all, L&T is looking strong to us from a long-term perspective of more than 2-3 years. Secondly, in the banking space, ICICI Bank is an all-time favorite. So there also one can start looking for the opportunities. ICICI Bank, if I talk about this counter, this bank has posted very strong set of numbers, and kind of way back this bank has done, because we know they have got certain, global issues. I mean, their global portfolio was facing certain issues, and that's why this bank was not able to perform few years back. But now they have resolved all those issues, and I think this bank is looking very strong to us. So secondly is the ICICI Bank, which is looking very strong to us. In the consumption space also, we are very much positive about few consumption stocks in which Tata Motors, Tata Consumer is looking very good to us. So there also one can keep an eye on. And in the automobile space also, we are liking the counters like Maruti. So these are 3-4 counters which we are finding very attractive from the long-term perspective.
All right. Do stay with us. We have to slip in a very quick break. We'll be back on the other side to take more of your questions. And we also got a new listing to talk about. So do stay tuned.
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में, फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग, तब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें। गोल्ड ग्लास, क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
Tech has changed. So should your tech show.
They're the force behind some of India's most respected business empires. but you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold
buy time
ICICI
to invest?
CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims?
Welcome back. You're watching Ask Profit on NDTV Profit. Of course, this is a show that gets you answers to all of your stock-related questions, and we focus on quite a few stocks over the course of the program. And among them, we focus on the new kids on the block as well. Among them, today, there are quite a few to talk about, and I'd like to focus on one in particular. That is Patel Retail. It's listed with gains of about 15% at this point. It's trading higher than its issue price by about 15%. And we're joined by the management. धनजी राघवजी पटेल हमारे साथ जुड़ रहे हैं. पटेल जी, हमारे साथ बात करने के लिए बहुत बहुत धन्यवाद. And congratulations, successful issue के on the back of that. Namaskar. So can we talk about ये जो फ्रेश इशू आपने किया है, आपने कॉम्बिनेशन किया है 217 करोड़ का जो फ्रेश इशू है और 25 करोड़ के आसपास ओएफएस है. फ्रेश इशू का क्या करने वाले हैं, और ये आपका जो स्टोर नेटवर्क है, आपके पास अभी 43 आउटलेट्स है, वो कितना बढ़ा रहे हैं?
फ्रेश इश्यू हम लोग वर्किंग कैपिटल के लिए यूज करेंगे. आगे नए स्टोर आएंगे और मतलब वर्किंग कैपिटल का लिए यूज करेंगे उसको.
ओके. तो अभी आपके पास 43 स्टोर्स हैं, वो प्राइमरली कौन से रीजन्स में है? वो सबर्बन महाराष्ट्र में है, मगर कौन से रीजन में फोकस है आपका? और आगे जब आप स्टोर्स ओपन करेंगे
रीजन में,
हाँ,
बेसिकली
बताइए प्लीज.
बेसिकली ये थाना और रायगढ़ रीजन में है.
हाँ.
और आगे हम लोग पूना की तरफ देख रहे हैं और सबब मुंबई, जो बोरीवली के बिहोन, बोरीवली, पाइंदर, वसई, टायर 2, टायर 3 के तरफ हम लोग है ध्यान.
ओके. और पटेल जी, आपके पास अभी 43 स्टोर्स हैं, तो आप इस वर्ष में कितना बढ़ाएंगे ये नेटवर्क को?
43 था फॉर्म टुडे, आज 45 हो गए ले.
ओके.
और इस साल में हम 15 से 20 स्टोर ऐड करने का सोच रहे हैं. उसी में से 2 स्टोर आ गए ऑलरेडी.
हाँ.
और बाकी लाइनअप है सारे.
ओके. देखिए, आपके रिटेल के जो इंडस्ट्री में शायद सबसे बड़ा जो चर्चा होती है वो है ई कॉमर्स और क्विक कॉमर्स का जो असर पड़ रहा है, और आपका जो शेयर कम होते जा रहा है, ऐसे एनालिस्ट कह रहे हैं, लोग कह रहे हैं. तो आप उसको काउंटर कैसे कर रहे हो?
बेसिकली हम लोग का जो टारगेट्स एरिया है टायर 2 और टायर 3, तो वहाँ पे इतना पेनिट्रेट अभी नहीं हुआ है, लेकिन हम उसको डिनाई नहीं कर रहे हैं. हम लोग भी अपने प्लानिंग कर चुके हैं कि हम लोग का ऐप जो है वो कंप्लीट लगभग हो जाएगा 2-4 दिन में। और हमें एक एडवांटेज ये है कि मेरे पास जो एरिया में मेरे अपने जो स्टोर है मैं उसको डार्क स्टोर में ट्रीट करूंगा, और हम लोग भी कमिंग सुन मतलब थोड़े से समय में आ जाएंगे उस चीज में, जो उस चीज का ग्राहक का जो रिक्वायरमेंट है वो ग्राहक को हम कैटर करेंगे।
आप लोग भी उस लोकेशंस में क्विक डिलीवरी जैसे कुछ सर्विस ऑफर करेंगे, आप ये कह रहे हैं?
ऑलरेडी हम आज भी सर्विस वो दे रहे हैं, लेकिन हम लोग क्विक जो 10, 15, 20 मिनट वाली नहीं, ग्राहक आता है हमारा शॉपिंग करता है और उसको हम होम डिलीवरी कर देते हैं विद इन 5-6 घंटे के अंदर।
अभी आपका
ऑलरेडी हम वो सर्विस दे रहे हैं मेरे ग्राहक को।
जी जी। अभी आपका लिस्टिंग हुआ है, तो आपके मन में कुछ टारगेट्स होंगे टॉप लाइन बढ़ाने का? इस क्वार्टर में नहीं, अगले 2-3 साल में होगा कुछ आपके मन में, वो आप आपके इन्वेस्टर्स के साथ शेयर करना चाहेंगे?
बिल्कुल सर, हम लोग का आगे का विजन है, इसलिए जो आप अभी आपने पहले जो सवाल पूछा था कि 217 करोड़, तो वो आगे का हम लोग का प्लानिंग ही है कि उसको और आगे बेटर।
हाँ ओके ठीक है, तो आप नंबर नहीं देना चाह रहे हो मुझे? हाँ नंबर नहीं देना चाह रहे हो? पटेल जी कोई बात नहीं, हम आगे बात करते हैं। थैंक यू सो मच हमारे साथ जुड़ने के लिए और ऑल द वेरी बेस्ट।
Thank you.
Thank you. All right. Well, that's the management of the newly listed Patel Retail, and it's quite interesting, right? So they have supermarket chains, as he pointed out, in several parts of suburban Maharashtra. The aim is going to be to expand in places like Borivali and the tier 2 regions in the spaces that they operate in. And the way that they're countering quick commerce is interesting. And I think these are stores that have relationships in the regions that they operate in. And so it's certainly something to watch out for going forward as well. Asta, I wonder if you had coverage on this particular issue, and if you did, any thoughts that you have?
Yes, we did cover that. And in fact, I tell you, Alex, what we need to look when these kind of companies come who are having, presence in the retail stores, you just go their place and just look after the, footfall. So what I am getting, from my ground check is that, in fact, the footfall is very high. And they are in the, basically active in the Ambernath, Maharashtra region, and Raigad and Thane districts also in the Maharashtra. So there the footfall is high. And in fact, we have seen the kind of listing which it is showing right now. It itself depicts the kind of strength this company is having. My main, concern was about the valuation, because we find it a little bit on the higher side, because it is not completely a retail chain. 45% is coming from the retail stores, and I think 45% is coming from the non-retail part of the business, which is like, grinding, drying of masalas and wheat flour, etc. And remaining 10% from the trading activity. So I cannot give it the valuation of completely a retail store like Avenue, Supermart or a Vishal Megamart. And hence on that side, the valuations look to be little stretched. So idea here is those who have applied in the IPO, because even we have given the subscribe rating to this IPO. So just book partial profit in this company and remain invested in the partial quantity.
Okay, all right. So that's the comprehensive view on Patel Retail. You've also heard the management. Muthulakshmi has got the next question, and Trent, incidentally, is the next counter that we're talking about. And he's bought on the 24th of September at a price of 7,600. He's now incurring a bit of a loss. He's asking what the long-term prospects are and whether or not he should buy the current price to lower his loss. I wonder what the view is. Since the view is long-term, I'm going to have to come back to you, Asta. He's bought at elevated levels. Should he buy more at the current juncture?
Buy more, but not at the current juncture, maybe at the lower level. But yes, I am quite optimistic about this counter, and we believe that this counter is set to move till the level of at least 6,000 from here. So buying at the lower level of around 5,200 makes a sense. Now, if I talk about the fundamental of this counter, we know that this company is now expanding their west side in the Zudio stores, and I think those expansion will really yield the benefits in the longer term. And as we are already talking about the retail stores due to the Patel retail listing today. So again, this is one of the counter which we look positive to us, and hence we are recommending hold as well as buy at the lower level of around 5200 with an ultimate price target of 6000.
Okay, I have to come back to you, Asta, on this one because I'm pretty sure that you got a view on this one on Vikram Engineering. This is a specific question coming in from Rajan. Now, they did make the news because they announced a 5% dividend to equity shareholders on the 25th of August, which is a day before their IPO opened for subscription, seemingly on in a bid to bolster investor confidence. Now, the question that he has is whether it's the right practice to have just a day before the IPO, and what specifically your view is on this particular issue.
So view is positive, although I cannot comment on the company's decision to, announce this kind of things because this is purely company's decision. But yes, that I'm taking it in a positive way that this company is very much, concerned about their investors' wealth, I should say, and hence it will not, disappoint us. This is what I can take out from this whole event which has happened. Now, talking about the IPO, we are positive on this IPO because order book is very strong and it is one of the fastest growing EPC company. So we have given a subscribe rating to this IPO to our clients as well from the listing gain as well as long-term perspective. So a recommendation here is to go for this IPO from the listing gain as well as long-term perspective on the back of a strong financial performance. First of all, their return ratios, margin ratios looks to be very strong. And in fact, the pricing seems to be decent, not very low, but yeah, it is a decent pricing because they are coming at a price to earning multiple of 32. But if I compare it to the other industry peers, then I think it is a decent pricing. So overall, thumbs up from our side for the subscribe purpose.
It is a fair question to ask why the company is disbursing money at the same time that it is raising money. So, okay, so let's couch that for a bit. But Asta on the fundamentals and on the valuations is saying that she has a subscribe rating on the IPO. Maheshwar is writing in from Andhra Pradesh, or rather calling us, I should say. Maheshwar, very good morning to you. How can we help you today?
Very good morning. Sir, very good morning, sir.
Good morning. Please go ahead.
Sir, I am asking for BSC, sir. I am holding 1,000 shares at the rate of 2120.
Okay.
Can I add another 500 quantity, sir?
Okay.
At
the current
which price we can add? At which price can I add, sir? What is the stop loss?
Okay, I got your question. And just to confirm, what is your time horizon?
2 to 3 years, sir.
2 to 3 years, okay.
But
since you've asked for a stop loss, let me go across to Swati on this one. Swati, BSE has been in focus for multiple reasons. Stock under pressure today as well, down about 2.5%. 2120 is the buy price. Would you buy more at the current juncture?
First of all, Alex, the view is a little bit cautious. I will not suggest to take a long positions at the current market price. Yes, but any dips towards 2150 can be a attractive level to take a long positions, but not at the CMP. Downside, it has a very crucial support nearby 2050 levels. As long as it sustains about that level, the view we might witness some sort of a reversal in this particular counter. So by any dips towards 2150 or 2050 levels in that range, we might see some sort of a foundations building up. Upside, the initial targets from there onwards will be at around 2300 and beyond that level 2500 levels are the good levels to set as a target price. So buy on dip strategies will be implemented.
Got it. All right. I'm coming to you, Asta, on the next question. Sterling and Wilson Solar, it is a large part of its ownership is with Reliance Industries. The question is from Kumar, who's writing in from Frankfurt in Germany. And he's asking for the long-term prospects. He says that he's been buying at every dip, but unfortunately he's incurring a loss at this point of as much as 84,000 rupees. Should he hold on for the long term, and what are the prospects, Asta?
For the long-term prospects looks to be decent, but not in the shorter term because I think the results were not that very strong. So we are seeing some sort of a profit booking, but long-term perspective is looking good to us because here the time horizon is more than 1 year, 2 to 3 years, as you have said. So yes, one can, accumulate this counter at the lower levels also. But right now, what we believe that this counter, due to not very strong results, may fall more from the current level. 266 it is quoting right now. It can fall till the level of 250 to 240. So don't accumulate at this point of the time. Let it fall till those levels, especially 240, and then make a accumulation or a fresh entry into this company.
All right, thanks for that, Asta. And by the way, Prime Minister Modi is currently inaugurating Maruti Suzuki's first global battery electric vehicle, e-Vitara. And remember, this is an only for export product. So it's going to be sent to as many as 100 countries. And this is at the Hansalpur facility in Ahmedabad, and quite the prospect for Maruti Suzuki. Of course, it is one of the late entrants into the electric vehicle space, but because of the scale that the company operates in, the thinking is that it can scale up pretty quickly. It's interesting that they haven't really announced big plans yet for the EV space in India. But the possibility is, based on pricing, they could make inroads very, very quickly. So watch out for the implications for the likes of Tata Motors and the other players that operate in the relatively more affordable segment of electric vehicles. Remember that Nexon is a favorite at this point, primarily because of the pricing. But let's talk about the next question. It is from the energy space, and Raja is writing in from Hyderabad asking about Suzlon, and he's bought 600 shares that he's purchased at the price of around 65-66 rupees per share, and he's asking why the stock is not moving too much, or in fact why it has fallen to 57. Should he hold, accumulate, or sell? On the charts, what's the view, Swati?
Alex, the view is a little bit cautious, but the interesting observation is that the counter is forming a very cluster foundations nearby 52 to 51 levels. So up to that level, we might witness some sort of a selling pressures, but the long-term horizon will be definitely positive. I believe it has a strong potential to reach up to 63 to 65 levels on the higher sides. Not to exit your long positions. If you want to accumulate the counter, buy on dips towards 252 to 54 in that range, you can definitely take down the long positions, because the RSI is showing that the counter is entering into the oversold zone. So the depth is very limited from here onwards, but upside, yes, definitely 64 levels can be seen very soon. So the view is positive for longer term horizon.
Got it. All right. Rahul is calling us next from Visakhapatnam. Rahul, very good morning to you. How can we help you today?
Yeah, good morning, sir. Actually, I'm thinking to invest in 5-star finance for long term.
Okay.
So I just want to know, is it good to hold, is it good to enter for long term, or any other better counter in NBFC space?
Okay, I got your question. Asa, what's the view here? In the NBFC space, I mean, there are quite a few options. Which is your top pick? Would it be 5-star finance?
So in 5-star finance also, it is one of the decent space, but what we have seen that there was a drop in the asset quality. So I think that was weakened, but going ahead by the end of FY26, I suppose that that will be improving. So that is one of the point, that the asset quality has weakened, and that is why we have seen this counter not performing strongly. In fact, after the result arrival also. So my idea here is that due to the not very strong numbers, it may fall further, maybe till the level of 550 to 540. There one can accumulate this counter. Talking about other NBFCs, so I would really like to go with the Bajaj Finance, because in the whole NBFC space, Bajaj Finance is such a counter which is always looking strong to us on the basis of a strong asset quality with a strong margins. So I mean, these two counters one can look upon, 5-star at the lower level, and Bajaj Finance can be the another counter if anyone wants to make a entry.
Got it. Bajaj Finance is something to watch out for, especially in the context of everything that is happening on the GST front. One would assume that if consumption gets a boost, this is something that you should watch out for. NBFC players that operate in the consumption space. Gaurav Baheti from Hyderabad in Telangana is asking about the next counter, and he's got Jyoti Labs on his radar. He's bought at a price of 310 rupees per share, and he's got 49 shares. He's wondering whether there's a possibility of it reaching 450 plus in the next 1 to 2 years. Swati, on the charts, is that a possibility?
Yes, Alex, definitely. It has a possibility to reach to around at 420 to 440 levels on the higher side. The interesting observation that we are witnessing a very positive divergence on the weekly charts. The stock has found a very strong formations of a support nearby 320, 330 levels, and from there slowly steadily it is rising on the higher sides. Also, the interesting fact is that it's giving the breakout of the upward downward sloping trend line. So, which all three, four factors parameters showing some sort of a trend reversals for the longer term horizons. So you can definitely hold on your long positions for immediate target for a long term horizon will be a 420 to 440 levels, and for the short term, the initial target is set up at 370. So I will suggest to hold on your long positions.
Hold on the long positions on this one on Jyoti Lab. All right, Rahul is calling us next. Rahul, very good morning to you. Rahul is calling us from Chennai, by the way. Hi. How can we help you today?
Hi, good morning, sir.
Good morning.
Sir, I want to check on KPL, KP Energy. I have 100 share at 390. I just want to add it up to 500 quantity. The valuation seems to be quite good, only like around 23G and all. And I've also seen the interview of management on your channel.
Yes.
And I can see like they are giving guidance of 50 to 60% revenue guidance growth. So probably EPS will also increase accordingly. So I just want to check I want around 50% gain if I hold for a 2 years period. Is it good time to accumulate, or it can fall down below? Any idea or any thoughts on that?
Okay. Since it's a relatively small count, and I appreciate that you watched the interview on our channel, I don't know if Asa has got a view. It's sub 3,000 crore, but it's Surat based and it's in the wind power generation infrastructure space. Do you have coverage, Asta? And if so, would you hold for a period of 2 years? What are the prospects?
So this is among one of the few companies which is offering, back-to-back integrated services. So I find that is to be very strong. And another thing, that point is very strong. And another thing is about the financial performance. They are, consistently giving very strong financial performance. In fact, in the quarter gone by, that is Q1 of FY26 also, their profit has risen to more than 100%, if I'm not wrong with my figures or data. So I think strong financial performance along with the fundamental this company is having, I think it is a good investment option also. The only problem is regarding the valuation, and that is why I think we are seeing it is falling also. So yes, one can make an investment entry into this counter, but at the lower level of around 415 to 420 odd levels.
Got it. All right. So that's the view on KPEL. KP Energy is the name of the counter we just talked about. And sticking with the power theme, and I think we're getting a lot of questions today on that power theme. Tata Power is the name of the counter that we're talking about next, and this is for a period of 1 year. Uma Raghunathan is writing in, and she's writing in from Bengaluru. Uma wants to know whether to hold. She's bought at levels of 360. What's the view on the charts, Swati?
Alex, long-term view is definitely positive. Short-term, as of now, the counter is under the formations of the cup and handle pattern formation. So some period it will be consolidated within the range of a 350 to 400 levels. So up to 50 points consolidation can be witnessed, and thereafter we might witness some sort of a breakouts level. So the near-term view will be a cautious, but any momentum above 400 level will see the trend reversal, and which will take our stocks towards to 440 to 450 levels. So for at least minimum 2 to 3 months, the view is bit cautious. Thereafter, we might witness some sort of a positive momentums, which will take a counter on the high side. So it's all from my end.
All right. Shivaji is calling us from Andhra Pradesh. Shivaji, very good morning to you. I'm curious, are you Maharashtrian?
क्या सर, हम हिंदी में बात करेंगे सर थोड़ा.
आप हिंदी में बात करेंगे. आप महाराष्ट्र के हैं?
नहीं सर, हम महाराष्ट्र नहीं सर, आंध्र प्रदेश से बोल रहे हो सर.
अच्छा.
आंध्र प्रदेश.
हाँ नहीं, आपके नाम सुन के मैंने सोचा कि आप महाराष्ट्र
शिवाजी फ्रॉम आंध्र प्रदेश.
शिवाजी फ्रॉम आंध्र प्रदेश. बताइए क्या सवाल है आपका?
हम मेजगटा शिपयार्ड में 30 शेयर खरीद लिया था सर.
ओके.
जो एवरेज रेट है 3,160 सर.
ओके.
अभी ये होल्ड कर सकते हैं, ले सकते सर, बाय कर सकते सर.
ओके. आपका टाइम फ्रेम क्या है? आप कितने समय तक होल्ड करना चाहेंगे?
हम और 2 महीने तक होल्ड कर सकते सर.
ओके. आपने ये लेटेस्ट न्यूज़ पढ़ा था ना कि कल उन्होंने क्लैरिफाई किया था कि जो 70,000 का जो ऑर्डर था उनके पास आया नहीं अभी तक. आपने न्यूज़ पढ़ लिया था?
पढ़ा नहीं सर, पढ़ा नहीं सर.
ओके, पढ़ा नहीं तो ठीक है. सो दैट इज द रीजन व्हाई द स्टॉक इज अंडर लिटिल बिट ऑफ प्रेशर. फॉरगिव माय अमेजिंग ability at different languages beyond what I normally speak. Let me ask Swati on the charts then, since he's got a short term view, ये होल्ड करना चाहिए या सेल करना चाहिए इस टाइम पे?
देखिए काउंटर्स में ओवरऑल अभी शॉर्ट टर्म के लिए व्यू कॉशियस है मेरा। हमें सेलिंग प्रेशर देखने मिल सकता है क्योंकि अगर आप पास्ट 1-1.5 महीने का भी डेटा देखोगे तो टेक्निकली 20 DM में मूविंग एवरेज, जो शॉर्ट टर्म मूविंग एवरेज हम देखते हैं, उसका काफी स्ट्रांगली रेजिस्टेंस फेस करते हुए नजर है। ऊपर 2800 के लेवल्स वो ब्रेकआउट नहीं दे रहे और नीचे में 2600 के लेवल्स का सपोर्ट काफी फॉर्म। तो ये 200 पॉइंट के रेंज में ये पर्टिकुलर स्टॉक खेल रहा है। ब्रेकआउट ऑन आइदर साइड विल डिसाइड द क्लियर ट्रेंड ऑफ द मार्केट। सो एज ऑफ नाउ मुझे लगता है कि थोड़ा वेट करना चाहिए, कोई आप बिगवाली नहीं करनी चाहिए। अगर कोई भी डेप्थ आता है 2550 2600 के रेंज में तो आप एड ऑन कर सकते हो ताकि आपका बाइंग प्राइस नीचे आ जाएगा। ऊपर पॉजिटिव मोमेंटम हमें 2800 के अबाव ही देखने मिलेगा। जैसे ही ये ब्रेकआउट देता है ऑन द क्लोजिंग बेसिस तो अपसाइड डोर्स ओपन हो जाते हैं 3200-3300 के लेवल्स के लिए। तो अगर आपका नजरिया एटलीस्ट 1 साल के तरफ है तो डेफिनेटली आप होल्ड ऑन कर सकते हैं ये पर्टिकुलर स्टॉक।
Okay, the stock was up over 2% in trade yesterday. This is because of or the expectation that the company had received an order in collaboration with the German company ThyssenKrupp to manufacture submarines. But it has clarified overnight to the exchanges that no such order has been received, and it is not in fact in talks with ThyssenKrupp at this stage, which is why the stock has erased all of the gains that it made yesterday. Our next message is coming in from Arjun, who's writing in from Kolkata, and he's got a view that he's seeking on Apollo Microsystems for a period of 7 to 8 months. And since it's less than a year, I will come to you, Swati, on the charts. At 242 or thereabouts, would you suggest a fresh entry?
No, not at all. I will suggest fresh entry because yesterday only we have seen all-time high. We have seen a very spurt rally within a span of 8 to 10 trading sessions from almost 180 to 255 levels. The counter is really positive, but fresh long positions are not recommended because the risk-reward ratio is not favorable. If you're getting any dips towards to 220 to 200 level in that range, you can definitely go for a long positions, but not at the current market.
All right, so avoid taking a fresh entry based on the, wow, so 42% over the course of last month is Apollo Microsystems. Manoharan is calling us from Chennai. Manoharan, very good morning to you. How can we help you today?
Good morning. I have bought 200 quantity of Wockhardt Pharma.
Okay.
At average price of 600.
Okay.
So whether it's a hold or sell, or what is the future prospect?
When did you buy this, sir?
I have bought just 1 year before.
Okay. 1 year before, and your buy price, okay. So let me just see. So therefore, you're asking on the fundamentals. Let me just check. The name of the counter is Wockhardt Limited, right?
Yes.
Wockhardt Limited. All right. And the current price is, so therefore, you're sitting on significant gains. Am I right?
Yes. It went up to 1,900.
Yes.
It has fallen due to the correction in the market.
Yes.
Whether it's crossed the high made this 1 month before, or I have to sell it.
I got it. So you're looking for a short-term view on the stock so that you can understand whether to book profits at this stage. Am I right?
No, I can hold it for long term also.
Okay. So then let me get you a fundamental view, Manoharan, on the fundamentals of Wockhardt. Asta, you want to weigh in on this? He's bought at a very attractive level of 600 rupees per share.
Right. So talking about the results were quite okay. 1% growth on quarter-on-quarter basis in the top line, etc. But in fact, what is the major feature of this company is that they are continuously expanding in the antibiotics as novel antibiotics, as well as diabetes biosimilar. So that is looking to be very, very strong to us. Some of the patents have been filed. New product launches are there in the pipeline. So all seems to be very strong on the futuristic point of view, and hence my idea here is to stay invested in this counter for the price target of somewhere at around 1,520 at the present point of time.
Yeah, all right, so hold on, Manoharan, is a view on Wockhardt. It is time now, ladies, for the rapid fire round, and I'll throw as many questions at you as I can over the course of 2 minutes. The first question is on J Kumar Infra. J Kumar Infra, 699 is, I believe, the buy price. Yes. Would you hold or exit with the time frame of 6 months? Mudli wants to know. Swati?
I will suggest to hold on this particular positions with keeping a stop loss of a 620. Upside momentum can be seen towards to 670 to 700 levels. So it's
okay.
overflow.
Shanti Gold is the name of the counter. 235 is the buy price. Arif wants to know whether to hold or exit. What's the view, Asta?
Hold is the strategy from my side for this counter with the price target of 250 to 260.
Crompton is the name of the counter we're talking about next. If you have a short-term view, would you add more at these levels? Sunita wants to know. What's the view, Swati?
My view is positive. You can add on at the current market price. Upside levels can be seen up to 360 levels.
Okay, Tata Motors, we've got Ajit who's writing in from the Ajit who's asking whether it can be accumulated at this stage. What's the view, Asta, on the fundamentals?
Yes, accumulation can be done, but at the lower level of around 650.
Angel One, we've got Sudhir from Mysuru who's incurring a loss at this stage. He's asking whether to hold or sell. Swati, on the charts?
You can hold on this positions. Downside, it may come down towards 220-250, but that will act as a very good support levels. So you can hold on to a particular counter.
Garden Reach Shipbuilders is the name of the counter. 2565 is the buy price. Would you hold for a period of 1 year? Swati, what's the view?
See, if your buying rate is at a lower level, you should book your profits, because I believe that the selling pressures can be seen, which may take a counter to 2200 and so level. So it's a second one price strategy should be implied.
Okay, that was James's question. Sushila is asking about an NIACL. Bought at levels of 202 rupees per share. Would you hold, Asta, on the fundamentals?
Sorry, I don't track this counter, so cannot comment on that.
Swati, any view on NIACL?
Yes, the counter is under the consolidation phase. You can hold on by keeping a strict stop loss of 180 rupees. Upside can be seen towards 230 to 220 levels.
Okay. Asta, Swati, as always, absolute pleasure having you on the program. I think we've covered quite a bit of ground today. We've done over 30 questions. So thanks so much for taking the time. And that brings us to the end of this edition of Ask Profit. It's been an absolute pleasure bringing it to you. Do stay tuned. Up next is Know Your Company, and this is NDTV Profit.
गोल्ड क्लास ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशी ताई, ऐसे बॉय मिलते मुंबई में? चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
Tech has changed. So should your tech show.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Tech has changed, so should your tech show.
Hello and welcome. You're watching KYC. I'm Harsh Saita. With me is Puneet Javeri, and we're going to today talk about an auto company which is guiding for 20% sustainable growth, or rather, let me change that a bit, tweak that a bit. They're talking about 2x the growth of their industry, and it's on a very small base. They're tapping into export as well. So all of that likely to aid the numbers overall. But let me start off with what I want to know with regard to SJS Enterprises. Very, very strong clip of growth is what they're guiding for. I want to know whether they're doing the 20% sustainably is what one can expect over the next 5 years. The second piece is with regard to Walter Pack. Now this has been, this acquisition has dragged the business a little bit where Q1 FY26 is concerned. I want to know, and that's because of client concentration. I want to know whether that can turn a corner and how quickly can it do that. The third piece is with regard to client concentration. Is there a thought process within the company to acknowledge that and to change that is what I'd want to understand. Fourth one is with regard to margins. They do 26% margins, so high growth clip plus high margin plus a unique business. It meets all of those parameters. I want to understand whether those margins can be maintained and what the downside risk could that well be. Fifth piece is with regard to growth. Where will it come from? Current client cohort or a change in product mix, or a little bit of both? I'd want to try and understand some of those levers. Sixth piece is with regard to competition and moats. And I'm rushing through this because we've already done the interview. It's a long one and we want to make sure that you listen to the entire interview. So that's the sixth piece. The seventh piece is with regard to CAPEX and revenue visibility. How much of CAPEX is getting penciled in and how much can the top line go to given this CAPEX? So no future CAPEX till what point in terms of top line? All of that and more on KYC today. Let me start off with about the company. What it does, it designs, develops, manufactures decorative parts for vehicles and appliances. I'm going to quickly tell you briefly what it means. Your car dashboard, on it there is of course the speedometer. They manufacture that part of the car. They manufacture the glass on top of it. So all of those parts. Your steering wheel has the logo of the car on it. So does your two-wheeler, and therefore all of that is what they typically manufacture. Logos, overlays, dials, all of these. And it's a fast evolving business, because if you see some of the new age cars which are coming through, and some of the more expensive ones, the higher ticket ones, they have digital logos as well. So all of that is what they've pivoted to. In terms of product categories, that's quickly coming up on your screen. It has decals, graphics, 2D dials, 3D dials, which is typically a display on the car, and the branding on the vehicle. Domes and 3D badges, overlays, which is typically your logos, different types of logos both in 3D as well as in 2D, aluminium badges and in mold parts, which is high quality, durable branded parts within a vehicle on the appliances of the vehicle, giving it its nice shape, or the branding inside the car. All of that is taken care of. Optical plastics and cover glass, which is lots of glasses all around the car as well as on your other appliances. I'm restricting this to cars, but they also do other appliances, and that's a fast growing piece. So for example, your two-wheeler, on top of the dial you'll have the glass, which is what some of this is. The lens mask is typically the mask on top of, say for example, your headlight on the car or the bike. The mask on top of it, which is a transparent plastic mask, is also manufactured by them. Chrome plated, painted parts on the exteriors, handles, etc. All of that is taken care of by them. The aftermarket transformation. Now, this is a large market. We've come to acknowledge it. And the aftermarket, there are a lot of customers looking to transform their vehicles, make it look newer, jazzier, cooler. All of that is taken care of by them, and illuminated logos. I did speak about that. The revenue mix quickly coming up on your screen. Two-wheelers is around 39%, currently was at 34% in FY25. Passenger vehicles around the 37 to 40% number. Consumer is around 18 to 20%, and others is around 6% odd. That's the broad breakup of the revenue. The geographic mix, currently domestic is around 92% with exports of around 8%. Exports expected to double in terms of overall mix in the next few years is what they're targeting. They're targeting a 15% export number very, very quickly. Now let me allow Puneet to start off with the income statement in terms of the metrics.
Well, definitely. It's been a very strong performance by the company over the last 3 to 4 years. From FY22, the revenue has grown at 27% CAGR, and that's passed on to the margins as well. Over 26 to 27% is what they've done in this particular time frame. Profits subsequently have grown at 28%. So this acoustic as well as aesthetic products that they manufacture for automobiles has been working very well, essentially with the premiumization of this particular space, and that's visible in the company's numbers as well. So there's no doubt it is a big thumbs up given on this particular metric. Balance sheet, Harsh.
So equity quite decent in terms of its size, 680 crore, fast growing because it's extremely profitable in the sense it's got a strong profitability. Also, it's trading at around 6 times book value, so something to be taken care of, but very, very low to no borrowing. Your cash bank balance is also decent. There's some capex in the pipeline. We'll speak about that with the management. Cash flow, Puneet.
Well, again, cash flow, we spoke about the profits that subsequently almost doubled in the last 3 years. The cash flow from operations also has gone from 87 crore all the way up to 163 crores in FY25. We've seen the cash flow to profitability or ratio as well on your screen right now doing very well, while net cash flow, while lower, has been lower because of the investments that they've done over the last few years. They've also done roughly about 45 crores of capex. They're expecting to do that in FY26, but that largely seems to be investing for the future. So we've given this a thumbs up as well based on the company's future outlook, as well as the efficiency with investments, which is showcasing in the numbers as well.
Excellent. Let's talk about return ratios, and you see that above the 20% mark, no questions asked, and therefore a thumbs up. It's a sustainable 20% given that there is some bit of confidence with regard to margins, and if that continues, top line growth, margins, well, no reason why this should not be sustainable. Shareholding, Puneet.
Now, shareholding has largely been stable from the promoter family. We've seen from roughly about March of 24 when they've held 21.8% stake. We've just seen in the previous year that private equity firm Everstone had actually sold roughly 29 to 30% of their shareholding. So you see the promoter holding has actually gone down from 50% to 21%, but that's largely the exit of the private equity investor. Promoter family continues to have confidence in the business. We've also seen subsequently this selling by the PE fund lapped up by foreign investors. Roughly from 5%, they've gone to 17% in terms of their shareholding, while the investors, roughly 1/3, remains with the general public as well. So keeping an eye on these niche businesses has been one of the key aspects of individual investors, and that seems to be visible in the numbers as well.
Street cred, you look at a 12% 1 month return, 60% 6 months, year to date is 21%, and 1 year is 38%. Since November 2021, since listing, it's a 3-bagger for investors. Clearly a thumbs up, no concerns here. Puneet, I'll allow you to take both valuations and coverage.
Well, let's start with street coverage first. It has 8 buy calls and none of them are hold. The other key aspect is that currently, out of the 8, we've picked out a few brokerages like JM Financial, Elara, as well as IIFL. These were some of the ones which were very well known to the street as well. all of these have a very positive outlook on the company. Roughly the target price ranging from 1400 all the way up to 1700. For Elara, they've actually raised that post quarter one earnings as well, which was in the end of July. So it is a positive outlook on the company, and you'll hear from them as well. In terms of valuation, while there is not so much comparison available in terms of listed players, because the company also mentions that this is a very wide industry. A lot of players do a lot of smaller aspects of the business, but with SJS largely organizing it and getting it under one umbrella, that seems to be one of the company's moats, and currently trading at over 34 to 35 times price to earnings. For FY26, based on the coverage from the analysts, it trades at roughly around 28 to 29 times price to earnings. And while there are much more established players amongst the auto ancillary space that trade at similar valuation, the lack of any one particular company with this kind of segments as well as granularity seems to be why Street is giving this kind of valuation to a company sub 5,000 crores in terms of market cap. But hence we've given this a neutral on that aspect, but it's definitely positive on the growth the company is projecting.
Excellent. Let's therefore stack up all of the rating parameters, and it gives us a very, very healthy 6.5 out of 8 on our KYC ratings. We spoke with Sanjay Thapar, both Puneet and myself, the Group CEO and ED at SJS Enterprises. Listening to that entire conversation. So you've guided for very strong growth. FY26, yes, you've given that guidance of 20%. So I'm trying to understand a slightly more long-term perspective here. For how long can you continue to grow at this kind of clip? Because as your base grows as well, and you're growing at nearly twice the industry, can you continue to clock this 20% kind of growth clip is what I want to understand first off.
Let me put this a little bit in perspective. So the global market for aesthetic decorative products is close to about $4.7 billion. And at SJS, we've historically, over the last 3 years, we have a revenue CAGR of close to 27.2%, which means that we've outperformed the underlying industry by a factor of 2x or more than 2x actually. The industry in the same period has grown just 10.5% if I combine the volumes of two-wheelers and four-wheelers put together. So we are quite hopeful that because of the trend of premiumization, our focus on new products and new technologies, which are higher in value and higher in value add, we will continue to grow around the same clip. So that's what my expectation is.
Oh, so would 5 years be the right kind of view or visibility to take in terms of this 20% growth guidance? Can we pencil in that next 5 years at least the 20% growth clip will continue at the very least?
We don't guide in terms of percentages. So what we say is that there's an underlying industry that we will outperform. So our guidance for the current year was that we will be 2x of the industry growth, and we'll continue doing that. So think of us as a high growth, high profit company, which is still tapping the opportunity set globally. So we've positioned ourselves as a global supplier, and we are very excited about the opportunities that lie ahead of us.
Mr. Thapar, very good morning to you. Thanks so much for joining in. It's Puneet this side. We spoke recently post our quarter one earnings as well, and largely you seem to be quite positive with the acquisition of Walter Pack as well as your consumer business as well. Given that you are outperforming the industry, you're roughly at about 760 odd crores for FY25 in terms of revenue. Could we anticipate that this could lead to almost doubling in the next 3 to 4 years, given the new products that you integrated are still to see a bigger impact in your existing businesses? So could that be a fair assumption given the strong margin profile as well?
I think that's a fair assumption. So I'd be disappointed personally if we don't double our sales in that period of time. So yes, directionally, you are absolutely right.
And Mr. Thapar, essentially in terms of growth, it's quite obvious that you are outperforming the industry. Just talk a little bit about Walter Pack as well as the consumer business, because your auto business is growing at a fair clip, and that's well known. With chrome plasting as well as something that you've spoken about is a very big business, as well as with the export opportunity. Which business do you think will lead the growth for you specifically? Is it these two new verticals that you expect? And what is the expectation of some that you can quantify for the consumer business as well? What can we look at?
look, the way we look at ourselves in terms of a growth opportunity is through the lens of the customer. So what does the customer want from a global supplier? He wants a company that can offer him the best-in-class products at a cost that is very competitive and with no delivery hiccups. So over the years, we've proven a supply chain capability. I export to more than 220 locations across 22 countries, whether it was COVID, whether it was the container blockage. So we've earned that trust. So that makes us very confident that we are a company who's recognized by marquee OEMs across segments, whether it is automotive, whether it is consumer. So we've grown well, and we have a track record of growing large mega accounts. Coming back to Walter Pack, so I think that is a game changer as far as us. So we've, with that acquisition, created a capability set that we lacked at SGS, both in terms of tooling for complex in-mold formed parts, also some specialized know-how in terms of 2K molding. And that is a carrier, think of it as a force multiplier for SGS, because we have a very strong printing background, printing on different substrates. And with this acquisition, we've actually, what we've done is we've created a very niche set of components. And Walter Pack is one of the very few suppliers, Walter Pack Spain I talk of, is one of the very few suppliers globally in this area of in-mold formed decoration parts. And with this acquisition, I think we are at the forefront in terms of technology. These are expensive parts, but we see the trend of premiumization that happens in India. So typically you launch high-end expensive parts in premium top-end segment of vehicles. Slowly customer demand for such aesthetics percolates down to the mid-segment and the entry segment. And we see the market growing very rapidly once that happens. So we are, I think, strategically in a very good position as far as Walter Pack goes, both in terms of technology. This is a long lead item because the tooling is very complex. It takes close to about 8-9 months to make a tool. So I would say in the period of 4-5 years, you should see significant contribution coming from the in-mold form parts. We see a lot of demand for chrome plating, especially in the export markets. So we could possibly see a lot of business growth in that area as well. And largely to say, what are the growth drivers? So four-wheelers as a business segment will grow very rapidly for us, as will consumer businesses, thanks to the new technologies that we are launching.
Mr. Thapar, on Walter Pack, Q1 was a slightly softer quarter. When do you start to see recovery there? Of course, reasons well known. There's some bit of drag coming in with regard to clients. When do you see a recovery there in terms of your top line? And what does Walter Pack do to your margins? Are you able to maintain that 25-26% kind of margin number?
I think we've proven that. So historically, we've maintained margins north of 25%. So 25-26% is what historically we've delivered. Maybe 3 years or 5 years now, and after the acquisition of Walter Pack as well. So I think the truth lies in the numbers. So Walter Pack is an important component to our overall strategy. Where do we see? So since this was an acquired business, there's a legacy set of customers that we have. So as a company, we de-risk ourselves by saying we should not be too dependent on one single customer. So in fact, consolidated basis, no customer constitutes more than 15% of my top line. But that is not true for these subsidiaries that we have. These are basically acquisitions. So there is a legacy set of customers. So we are fast gaining traction with other customers as well. And I expect that balance of customer concentration should also reduce over time. And we already have good visibility for orders that are coming in. But as I said earlier, Walter Pack parts are large in-mold form parts which require tooling time. So I would imagine that over the next 1 year or so, we should see Walter Pack coming back and it being a more diversified play, reducing the customer concentration that we currently have.
Mr. Thapar, one question on your kit value specifically, because we've spoken about this in the past. You were at somewhere around 1,200 to 1,500 for passenger vehicles. You've now gone to roughly between 4,000 to 5,000 post Walter Pack's acquisition. Now, you've had some huge guidance. You're mentioning that this will double in the next 3 to 4 years. Could you specify if this will be done via new products like cover glass amongst others? Or will this be with increasing your current business with your current clients, the top 7 to 8 that you cater to? So where should the growth come from?
So growth comes from both these areas that you mentioned. So yes, displays continue to be a very strong opportunity set. SGS is well poised to address this market because of our inherent nature of the products that we've done for a number of years. So aesthetic parts, and cover glass is also an aesthetic part that requires printing. And we are in the process of examining what more can we do in the cover glass business. So we don't want to restrict ourselves to cover glass. The overall displays as a category is very interesting for us, and we are positioning ourselves to address that market. The kit value that you mentioned, you're right, from 5,500 odd rupees potentially per four-wheeler. It is likely to go up to 10,000 per vehicle over the next 3 to 4 years. And SGS is, I think, strategically absolutely in the right direction.
And Mr. Thapar, just a follow-up, what would be, the kind of addition that you think that cover glass could do to your products? Is it one of the most game-changing aspects? Because it seems to be that your current products are adding a lot of value, but this one is a high, the price of that per vehicle is also high and the margins are also better. So what kind of addition do you think that could get you?
So my guidance really is that we continue adding new products. So cover glass is one, in-molded electronics is another area that we are working on. So all these are new technologies. At the moment, there's nobody who makes cover glass in India. So as we move forward, I think we will have an early mover advantage, and they will continue to deliver revenues for us. But our revenue growth, even in the other lines of businesses, are very strong. So we have a great opportunity for cross-selling. So every time that I order a new customer, I have maybe 14 different product technologies that I can offer to them. So our ramp up is pretty rapid. And every time that we acquire a new customer location, so there's a lot of opportunity for growth. So where the growth will come from will be both. This cover glass business and display-related businesses will grow, as will our other product lines that we've created over the past years. So it's a secular growth. But as I said earlier, automotive four-wheelers are likely to drive growth because they're larger products and larger cover glass, larger everything. So both interior and exterior. So that's a great area that we've pivoted to. So maybe 5-6 years ago in 2019, 70% of my sales came from two-wheelers, which we've successfully transformed, and now it's equal weight. So maybe 35-36% from two-wheelers and 35-36% from four-wheelers. So I think I'm quite happy with the way we've been able to pivot the company.
So where does this go in the next 3 years? Do you continue to add product lines, and therefore that will not only expand your market share within this segment, but also allow you to capture market share in other segments? Is that how one should think of SGS?
Yeah, our products are fairly agnostic to the end use. So typically if you have a treadmill, that requires overlay we make. So those are the markets that we've not addressed yet. But growth will come across all segments. So it's hard to call out any one area, but broadly, appliances and four-wheelers will drive growth for us, especially in the export markets. India, of course, we continue to retain our position and consolidate our market position.
Mr. Thapar, just one final question from my side. Essentially for two-wheelers as well, you mentioned that the share has gone down from roughly 70% in 2019. You are adding new clients. You've added Hero in the last couple of quarters. Could you just give us some sense of the competitive intensity in this space, because it's a high volume product. We're also expecting some kind of cost increases because of ABS. So what does that do for you, for example, in terms of the cost increasing essentially? So what is the current conversation that you're having with clients, and who are you actually competing with? Because for the first time you've gotten Hero, and Hero sells over 50 lakh motorbikes. So just some sense on that sense as well.
No, so let me correct you. Our two-wheeler business has not come down. It has increased.
The share of course, four-wheelers has also increased. Understood, sir. The overall revenue.
Businesses have grown tremendously, so therefore that weight has come down. So that's the point. Yes, we are very optimistic about Hero, so that's a good addition to our portfolio. And we continue to develop new models for them. And as I've stated earlier, we would potentially look to consolidate and gain a significant market share with that, as is our endeavor with all customers. So coming back to ABS does not impact us really, because what we do are PVC films and special materials for their logos. So there is not much of a challenge in terms of ABS, because we don't do plain vanilla molding. You know, the business that we are in is high value add decorative products that are long lasting. And that is what is our DNA as a company. And that translates into, it's a very complex business, batch mode operation. So competition intensity is extremely difficult. So there is, I don't know of a single company in India or overseas which has as many products as I have in my portfolio. So we have close to about 14 different technologies, and most of the competitors that we have focus on just one or two. And I think what helps us with that is to position ourselves as the supplier to go to when a designer looks at improving aesthetics in a vehicle. So they're happy to do that. We have a styling studio which designers come and work along with our designers to formulate specs. And we do this pro bono. So we also have rapid prototyping capability. So we supply products with a very short turnaround time, and that I think engages us even more deeply with our customers very early in the development.
Well, he also spoke about CapEx, and he said that CapEx, which is in the pipeline over the next 2 years, will take their top line from the current sub 800 crore to 1400 crore nearly. So that's broadly the guidance. But, that's all the time we have from Puneet, myself, and everyone who puts this show together. Thanks so much for watching. Hope you found it productive. Of course, stay with us on NDTV Profit.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में, फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग। जब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
Tech has changed. So should your tech show.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies.
The markets move fast.
And so should your portfolio. Expert insights, Real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live. Ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
The US outlines plans to implement a 50% tariff on products from India ahead of the deadline. PM Modi says we'll find a way out despite the pressure. And a tepid day of trade on Dalal Street. Nifty sub those 24,900 levels. Sensex also sheds over 500 points. Most sectors in the red. Auto FMCG remain resilient. PM Modi is going to be launching projects worth 5,400 crore rupees in Gujarat. Also flags off Maruti Suzuki's first global battery electric vehicle, e-Vitara, for export to over 100 countries. And the government is looking at an inventory-based model for e-commerce exports. Sources say this will in fact let e-commerce giants buy products directly from Indian sellers to sell overseas. Commerce Ministry holds meetings with different stakeholders. Good afternoon. Thank you so much for tuning in to Markets at 12 with me, Shreyanshi Singh. First things first, let's take a quick look at the markets. And markets, in fact, holding on, Nifty, in fact, holding on sub those 24,900 levels. And that's the kind of move that we're seeing coming in. In fact, almost all sectors holding on to a tinge of red as we speak. That's largely the kind of sectoral picture also that you're seeing emerging. As you can see, there's only FMCG, MNC as well as auto that have a tinge of red at this point in time. So that's largely the kind of picture that you have. Even when you take a look at the Sensex, let's also quickly take a look at the Sensex, because there also you have the Sensex shedding about 500 odd points, 540 points at this point in time. So that's largely the picture coming in as far as some of those indices are concerned. But when you take a look at the sector, the stocks, in fact, to keep in mind, there's a Britannia that's gaining about 3.5% there, about 3.5% gain coming in for that one. Ola Electric also, that's also in top gear, because you have that stock that is up about 6% as well. From within the Nifty 50 pack, there's an HUL, Nestle, Eicher Motors, Maruti Suzuki, as well as Hero MotoCorp and Tata Consumer holding on to a tinge of green, up anywhere between 0.5% to 2.5%. When you take a look at this list of losers as well, there's a Shriram Finance, Sun Pharma, Dr. Reddy's, Tata Steel and Bajaj Finance, some of your top losers from within the Nifty 50 pack. But let's also move on, get you a very important story, because you do have key ministries that are likely to meet the PMO at 3 p.m. and this is ahead of the 50% tariff hit. In fact, we do have Rishabh who's joining in with those very important details. Rishabh, this is something that we have all been keeping in the spotlight. This is something that we're watching out for. What makes it to the agenda when it comes to this meeting?
Right. The main agenda of this meeting is expected to be a review of the export promotion mission that was actually announced in the budget in February and hasn't been launched yet. But what we're hearing is that it could be launched with a 25,000 crore rupee outlay. Now, remember, this comes with two sub-schemes. One is Niryat Protsahan and one is Niryat Disha. Under Niryat Protsahan, the main vessel of support for exporters will be export credit finance. That is number one. And under Niryat Disha, you have targeted support for export compliance, for diversifying to newer geographies, branding, marketing. You have trade promotion stuff coming under Niryat Disha. So about 10,000 crores is what we're hearing has been assigned for Niryat Protsahan, about 14,500 crore rupees for Niryat Disha. This export promotion mission is awaiting clearance. It is currently with a panel within the finance ministry, the expenditure panel. They are going through it, and it will continue. Then it will move to the cabinet for approval for a faster rollout. So that is what we're picking up in terms of this key meeting today.
Well, absolutely. That is one meeting that we're keeping an eye on. But Rishabh, stay with us for now, because the government, in fact, is also examining inventory-based models when it comes to e-commerce exports. Tell us a little bit more about this one as well then.
Right, the government is also looking at the feasibility of running certain pilot-based programs that basically entail large e-commerce operators like Amazon and Flipkart to operate as an inventory rather than a marketplace model that they have been following so far. Now, under these discussions, this will require the easing of FDI rules or foreign direct investment rules, because currently companies can only operate in a marketplace sort of a model where they cannot be holding inventory on their person. But we are seeing that might be seeing a little bit of a tweak, because that is the representation that certain industry leaders in the e-commerce sector like eBay, Amazon, Flipkart, the likes of eBay and FedEx have also made in terms of representations to the government. What this will allow is it will ease sort of the access that small exporters and small MSMEs get via platforms like Amazon. Remember, a payment cycle for a small vendor on a platform like Amazon could come up to about 21 days. It could take about 21 days for them to receive that amount of money. But if they sell it directly to an Indian entity like Amazon, which will have an entity based in India, that payment cycle will be reduced drastically and definitely will have an impact on profitability. What will also happen is that Amazon, this will help Indian businesses also facilitate customs clearance processes faster, and it will give sellers greater access to international markets. So this is a proposal that is at the deliberation stage right now. Nothing has been decided, but we have our eyes peeled on it.
Well, absolutely. Nothing is certain when it comes to these updates. But tell you what, we'll keep getting more updates as soon as they trickle in. For now, let's also take a look at some key commentary that we, in fact, are getting in when it comes to the retail space, because the word that is coming in from the management of V2 Retail actually is that they should see an uptick in demand because of GST relief. In fact, that's the word coming in from Akash Agarwal, who's a whole-time director and CEO of V2 Retail. He also highlights that GST reforms are a win-win for both consumers and businesses. Let's go across and listen into a slice of that conversation.
I think this is a win-win for both consumers and businesses. Simpler tax slabs reduce complexities for the businesses also. So it makes compliance easier. So we feel, higher consumption and higher compliances should offset any near-term revenue loss for the government. But yes, although 94% of what we sell already is below 1,000 rupees, so we're already in the lowest tax bracket. But it boosts affordability for the consumers. So at the end of the day, they have more disposable income. So we should see an uptick in demand. So we are very positive about this.
All right, then let's move on. Let's shift our focus to the primary market space, because it's actually 4 listings that you've seen for Dalal Street debuts. One of them, of course, is Gem Aromatics, and that's a company that has made a muted market debut. The company, in fact, listed with a 2.5% premium on the NSE. In fact, let's also get in Agnidev's conversation with Yash Vipul Parekh, who's the MD and CEO at Gem Aromatics, to also try and understand what he talks about, the plans for expansion, growth roadmap as well for the company after the listing.
I'd like to ask you to explain for the benefit of our viewers, what exactly is it that your company does? You know, you just got listed, there will be more investors waiting to jump in onto the company. So what exactly does Gem Aromatics do?
So we make ingredients that go primarily into flavors and fragrances, and with our new capacity expansion happening for our unit number 3 in Dahej, under 100% subsidiary Crystal Ingredients, we will be going in for far more value-added chemicals, specialty molecules and performance chemicals as well. So in essence, the bulk of the business as it stands today is making ingredients that go into flavors and fragrances.
Right, so flavors and fragrances, but with the capacity addition, is it the same industry you will be staying in, or are you expanding beyond the given niche?
Right, so the new capacity expansion, majority of it is happening at our unit number 3, which is in Dahej, Gujarat. We would be expanding both in flavors and fragrances, and also in the value-added chemistry. There are a lot of, in the value product chart, there are a lot of other adjacent products that go into performance chemicals as well. So we would be entering there. For example, we would be going from phenol to anistol. And I'm becoming a fairly large producer of that particular chemistry on vapor phase-based molecules, highly technology-driven, with a focus on catalysis. So yes, we would be going into adjacent specialty chemicals as well.
And what kind of a revenue windfall do you see coming from this capex? I know you can't talk future numbers, but in general, like if you can give me a ballpark estimate.
I don't know if I can do that at this stage, but by all means, certainly the capacity expansion that we had planned to a large extent that has been successfully completed. And as we are ramping up, we expect a major bump in our capacities to be operational as of August 2025. So we'll see that uptick happen reasonably soon.
Right, so moving on, I'd like to ask you about the use of your IPO proceeds. If I understand correctly, a part of that is going into debt reduction, which also includes your subsidiary Crystal. But can you tell us more about this subsidiary and how it works in tandem with the parent organization?
So there are a lot of, we have, as company, we have always focused upon forward, backward and lateral chemistry. So whatever we were doing in our existing product portfolio, how do we forward integrate into, let's say, L-menthol into a cooling agent, which would be ideally used by the confectionery segment. That's an example of forward integration. If we were making a product called synthetic anethol, how do we go ahead and make a backward integration from there and bring in cost efficiency? If you're making a natural version of a particular product, how do we make a synthetic version? So in essence, we try to figure out how our existing units, all of them can be working in tandem and provide a holistic solution to a customer. So in other words, if a customer is thinking about mint, clove, for example, they will always have to consider Gem as a reliable supplier of this.
All right, and there you go. That's the word coming in from one of the 4 companies that have listed, made their Dalal Street debut today. But let's move on. Let's get you the list of stocks that you should be keeping on your list at this point in time, that you should be looking at, because there's Sai Life Sciences, that's the first one. And that is where you do have the US private equity firm, that is TPG, that is likely to exit the company. You're talking about a block deal that is worth about 2,600 crores thereabout. TPG Asia is the one that is going to be selling 14.7% stake, and it's going to be at 860 rupees per equity share. So 860 rupees per a piece is what you're looking at in terms of the floor price. That is at a 5.2% discount to the last closing price on NSE. So that's one stock to look at, Sai Life Sciences. As you can see, that counter is down about 4.5%, taken a sharp knock. That's one counter, but let's also quickly take a look at Protein eGov, because on the flip side, that's the one where you've seen an order win boost coming in, because that stock is up about 8.2% on the back of that order win to the tune of about 1,100 crores from UIDAI. And this is an order for establishing and running district level Aadhaar Kendra. So that's clearly working out very well for the stock. As you can see, 8.5% thereabout uptick coming in for Protein eGov. But let's also quickly take a look at Mazagon, because on the flip side, you do have this counter that has in fact issued a clarification when it comes to the negotiations with the Defense Ministry. They've given a clarification following those media reports of the company's 70,000 crore rupees submarine order, and you do have them clarifying that there have been no negotiations with the Defense Ministry. So that's the key wording coming in as far as Mazagon is concerned. That stock as well holding on to losses of about 2% coming in at this point in time. So those are the 3 stocks that you should be taking a look at, except the ones that we've already discussed. But tell you what, In the spotlight is the PM speech at this point in time. PM Modi, in fact, is going to be inaugurating Maruti Suzuki's first global battery electric vehicle, that is e-Vitara, for export to over 100 countries. Let's go across and listen in to the word coming in from the Prime Minister right now.
श्रीमान केइची ओनो-सान, सुजुकी मोटर कॉरपोरेशन के प्रेसिडेंट तोशिहिरो सुजुकी-सान, मारुति सुजुकी इंडिया लिमिटेड के एमडी हिताशी ताकेउची-सान, चेयरमैन आरसी भार्गव, हंसलपुर प्लांट के सभी कर्मचारी, अन्य महानुभाव, देवी और सज्जनों, गणेश उत्सव के इस उल्लास में आज भारत की मेक इन इंडिया इस यात्रा में एक नया अध्याय जुड़ रहा है। ये मेक इन इंडिया, मेक फॉर द वर्ल्ड, हमारे उस लक्ष्य की तरफ एक बड़ी छलांग है। आज से भारत में बने इलेक्ट्रिक व्हीकल्स 100 देशों को एक्सपोर्ट किए जाएंगे। साथ ही आज हाइब्रिड बैटरी इलेक्ट्रोड मैन्युफैक्चरिंग भी स्टार्ट हो रही है। आज का ये दिन भारत और जापान की फ्रेंडशिप को भी नया आयाम दे रहा है। मैं सभी देशवासियों को, जापान को, सुजुकी कंपनी को बहुत बहुत बधाई देता हूं। एक प्रकार से टीन एज का आरंभ होता है और टीन एज पंख फैलाने का कालखंड होता है, सपनों की उड़ान भरने का कालखंड होता है और टीन एज में ढेर सारे ख्वाब उभरते हैं। एक प्रकार से पैर जमीन पे नहीं होते हैं टीन एज में। मुझे खुशी है कि आज मारुति टीन एज में एंटर कर रहा है। गुजरात का मारुति का टीन एज में प्रवेश यानी आने वाले दिनों में मारुति एक नए पंख फैलाएगा, नए उमंग और उत्साह के साथ आगे बढ़ेगा, ऐसा मेरा पूरा विश्वास है। फ्रेंड्स, भारत की सक्सेस स्टोरी के बीज करीब करीब 13 साल पहले बोए गए थे। 2012 में जब मैं यहां का मुख्यमंत्री था, तब हमने मारुति सुजुकी को हंसलपुर में जमीन अलॉट की थी। विजन उस समय भी आत्मनिर्भर भारत का था, मेक इन इंडिया का था। हमारे तब के प्रयास आज देश के संकल्पों को पूरा करने में इतनी बड़ी भूमिका निभा रहे हैं। साथियों, मैं इस अवसर पर स्वर्गीय ओसामू सुजीकी-सान को हृदय से याद करना चाहूंगा। हमारी सरकार को उन्हें पद्म विभूषण से सम्मानित करने का सौभाग्य मिला था। मुझे खुशी है उन्होंने मारुति सुजुकी इंडिया का जो विजन देखा था, वो आज हम इसके इतने बड़े विस्तार के गवाह बन रहे हैं। साथियों, भारत के पास डेमोक्रेसी की शक्ति है और भारत के पास डेमोग्राफी का एडवांटेज है। हमारे पास स्किल्ड वर्कफोर्स का बहुत बड़ा पूल है, इसलिए कि हमारे हर पार्टनर के लिए विन विन सिचुएशन बनाता है। आज आप देखिए, सुजुकी जापान भारत में मैन्युफैक्चरिंग कर रही है और जो गाड़ियां बन रही है वो वापस जापान को एक्सपोर्ट की जा रही है। ये जापान और भारत के रिश्तों की मजबूती तो है ही, भारत को लेकर ग्लोबल कंपनियों के भरोसे को भी ये आपके सामने प्रस्तुत करता है। एक तरह से मारुति सुजुकी जैसी कंपनियां मेक इन इंडिया की ब्रांड एम्बेसडर बन चुकी है। लगातार 4 साल से मारुति भारत की सबसे बड़ी कार एक्सपोर्टर है। अब आज से ईवी एक्सपोर्ट को भी उसी स्केल पर ले जाने की शुरुआत हो रही है। अब दुनिया के दर्जनों देशों में जो ईवी चलेगी उसमें लिखा होगा मेड इन इंडिया। फ्रेंड्स, हम सब जानते हैं ईवी इकोसिस्टम का सबसे क्रिटिकल पार्ट बैटरी है। कुछ साल पहले तक भारत में बैटरी पूरी तरह इंपोर्ट होती थी। ईवी मैन्युफैक्चरिंग को मजबूती देने के लिए ये जरूरी था भारत बैटरीज का भी निर्माण करे। इसी विजन को लेकर 2017 में हमने यहां टीडीएसजी बैटरी प्लांट की नींव रखी थी। टीडीएसजी की ही नई पहल पर इस फैक्ट्री में 3 जापानी कंपनियां मिलकर भारत में पहली बार सेल मैन्युफैक्चर करेगी। भारत में बैटरी सेल के इलेक्ट्रोड भी लोकल लेवल पर तैयार होंगे। ये लोकलाइजेशन भारत की आत्मनिर्भरता को नई शक्ति देगा। इससे हाइब्रिड इलेक्ट्रिक व्हीकल्स के कारोबार में और तेज गति आएगी। मैं आपको इस ऐतिहासिक शुरुआत के लिए अपनी अनेक अनेक शुभकामनाएं देता हूं। साथियों, कुछ साल पहले उस समय तक ईवी को केवल एक नए ऑल्टरनेट के तौर पर देखा जाता था, लेकिन मेरा मानना रहा है ईवी कई समस्याओं का ठोस समाधान है। इसलिए पिछले साल मैंने अपनी सिंगापुर विजिट के दौरान कहा था, हम अपनी पुरानी गाड़ियों को, पुरानी एम्बुलेंसेस को हाइब्रिड ईवी में बदल सकते हैं। मारुति सुजुकी ने इस चुनौती को स्वीकार किया और केवल 6 महीने में एक वर्किंग प्रोटोटाइप तैयार कर दिया। अभी मैंने वो हाइब्रिड एम्बुलेंस का प्रोटोटाइप देखा भी है। ये हाइब्रिड एम्बुलेंस पीएम ई ड्राइव स्कीम में पूरी तरह फिट बैठती है। लगभग 11,000 करोड़ रुपए की इस योजना में ई एम्बुलेंस के लिए भी बजट निर्धारित किया गया है। हाइब्रिड ईवी से पॉल्यूशन भी घटेगा और पुराने व्हीकल्स को ट्रांसफॉर्म करने का विकल्प भी मिलेगा। साथियों, क्लीन एनर्जी और क्लीन मोबिलिटी ये हमारा फ्यूचर है। ऐसे ही प्रयासों से भारत तेजी के साथ क्लीन एनर्जी और क्लीन मोबिलिटी का एक रिलायबल सेंटर बनेगा। साथियों, आज जब दुनिया सप्लाई चेन डिसरप्शन से जूझ रही है, ऐसे समय में लगता है कि भारत ने पिछले दशक में जो नीतियां बनाई वो देश के कितने काम आ रही है। 2014 में जब मुझे देश ने सेवा का अवसर दिया, उसके बाद से ही हमने इसकी तैयारी शुरू कर दी थी। हमने मेक इन इंडिया अभियान शुरू किया। ग्लोबल और डोमेस्टिक मैन्युफैक्चरर्स दोनों के लिए देश में अनुकूल वातावरण बनाया। भारत में मैन्युफैक्चरिंग एफिशिएंट और ग्लोबली कॉम्पिटिटिव हो, इसके लिए हम इंडस्ट्रियल कॉरिडोर्स बना रहे हैं। हम प्लग एंड प्ले इंफ्रास्ट्रक्चर बना रहे हैं, लॉजिस्टिक पार्क्स बना रहे हैं। भारत कई सेक्टर्स में मैन्युफैक्चरर्स को प्रोडक्शन लिंक इंसेंटिव का बेनिफिट भी दे रहा है। साथियों, हमने कई बड़े रिफॉर्म्स के जरिए इन्वेस्टर्स की पुरानी कठिनाइयों को भी दूर किया। इससे इन्वेस्टर्स के लिए इंडियन मैन्युफैक्चरिंग में इन्वेस्ट करना आसान हुआ है। इसके परिणाम हमारे सामने हैं। इसी दशक में इलेक्ट्रॉनिक्स प्रोडक्शन लगभग 500% बढ़ा है। मोबाइल फोन प्रोडक्शन 2014 की तुलना में 2700% तक बढ़ गया है। डिफेंस प्रोडक्शन में भी पिछले दशक में 200% से भी ज्यादा की वृद्धि हुई है। ये सक्सेस आज भारत के सभी राज्यों को, हर एक राज्य को भी मोटिवेट कर रही है। उनके बीच रिफॉर्म्स को लेकर, इन्वेस्टमेंट को लेकर एक हेल्दी कंपटीशन शुरू हुआ है। जिसका लाभ पूरे देश को मिल रहा है। और मैं हर मीटिंग में, व्यक्तिगत बातचीत में और सार्वजनिक रूप से सभी राज्यों को कहता रहा हूं कि हमें प्रोएक्टिव होना होगा, हमें प्रो डेवलपमेंट पॉलिसीज बनानी होगी, हमें सिंगल विंडो क्लियरेंस पर बल देना होगा, कानूनों में रिफॉर्म्स को बल देना होगा। और ये कंपटीशन का जमाना है। जो राज्य जितनी तेजी से अपनी पॉलिसीज को नीट एंड क्लीन रखता है, इफ्स एंड बट्स के बिना रखता है, तो इन्वेस्टर का विश्वास बढ़ता है। इन्वेस्टर आने के लिए हिम्मत के साथ आता है। आज पूरी दुनिया भारत की तरफ देख रही है। ऐसे में कोई राज्य पीछे नहीं रहना चाहिए। हर राज्य ने अवसर लेना चाहिए। ऐसे कॉम्पिटिशन हो गए हिंदुस्तान में आने वाले इन्वेस्टर को सोचने में तकलीफ हो कि मैं इस राज्य में जाऊं कि उस राज्य में जाऊं। इतना क्लियर कट होना चाहिए कंपटीशन। इससे देश को लाभ होने वाला है। और इसलिए मैं सभी राज्यों को निमंत्रण देता हूं कि आइए, रिफॉर्म की स्पर्धा करें, गुड गवर्नेंस की स्पर्धा करें, प्रो डेवलपमेंट पॉलिसी की स्पर्धा करें और हम 2047 विकसित भारत बनाने के लक्ष्य को तेज गति से पार करने में अपनी भागीदारी सुनिश्चित करें। फ्रेंड्स, भारत यहीं पर रुकने वाला नहीं है। जिन सेक्टर्स में हमने बेहतर परफॉर्म किया है, हमें उनमें और बेहतर करना है। इसके लिए हम मिशन मैन्युफैक्चरिंग पर जोर दे रहे हैं। आने वाले समय में हमारा फोकस फ्यूचरिस्टिक इंडस्ट्री पर होगा। सेमीकंडक्टर सेक्टर में भारत टेक ऑफ कर रहा है। देश में इसके 6 प्लांट्स तैयार होने वाले हैं। हमें सेमीकंडक्टर मैन्युफैक्चरिंग और आगे लेकर जाना है। साथियों, भारत सरकार ऑटो इंडस्ट्री के लिए रेयर अर्थ मैग्नेट की शॉर्टेज से जुड़ी कठिनाइयों के प्रति भी सजग है। इस दिशा में देश के सामर्थ्य को बढ़ाने के लिए हमने नेशनल क्रिटिकल मिनरल मिशन भी लॉन्च किया है। इसके तहत देश में अलग अलग जगहों पर 1200 से अधिक खोजी अभियान चलाए जाएंगे। क्रिटिकल मिनरल्स को तलाशा जाएगा। साथियों, अगले सप्ताह ही मैं जापान जा रहा हूं। भारत और जापान का रिश्ता केवल डिप्लोमेटिक रिलेशन से कहीं ऊपर सांस्कृतिक और भरोसे का रिश्ता है। हम एक दूसरे की प्रगति में अपनी प्रगति देखते हैं। मारुति सुजुकी के साथ हमने जो जर्नी शुरू की थी, वो अब बुलेट ट्रेन की स्पीड तक पहुंच चुकी है। भारत जापान पार्टनरशिप की औद्योगिक संभावनाओं को साकार करने की बड़ी पहल यहीं गुजरात से हुई थी। मुझे याद है, हमने 20 साल पहले जब वाइब्रेंट गुजरात समिट शुरू की थी, तो उसमें जापान एक प्रमुख सहयोगी था। आप विचार कीजिए, एक डेवलपिंग कंट्रीज का एक छोटा सा स्टेट उसका इन्वेस्टमेंट समिट और जापान जैसा डेवलप कंट्री उसका पार्टनर हो, ये दिखाता है कि भारत और जापान की नींव कितनी मजबूत है। और मैं आज जब ये वाइब्रेंट गुजरात की यात्रा की याद कर रहा हूं, तब मेरे मित्र यहां बैठे हैं, वो पहले भारत में एम्बेसडर हुआ करते थे 2003 में। आज वो भी यहां मौजूद है। अब वो रिटायर्ड हो गए हैं, लेकिन उनका भारत प्रेम, गुजरात प्रेम वैसा का वैसा है। मैं उनका भी स्वागत करता हूं। गुजरात के लोगों ने भी जापान के लोगों का उतना ही आत्मीयता से ख्याल रखा। हमने इंडस्ट्री से जुड़े रूल्स एंड रेगुलेशंस जापानी भाषा में प्रिंट करवा कर दिए। जब मैं गुजरात में था, हर छोटी चीज पर मैं ध्यान रखता था। इवन मेरा जो विजिटिंग कार्ड होता था ना, वो भी मैं जापानी में बनाता था। जो वीडियोज बनाते थे हम प्रमोशनल, वो वीडियो को भी है जापानी भाषा में डबिंग करवाता था। यानी मुझे मालूम था कि मुझे इस रास्ते पर बड़ी मजबूती से आगे बढ़ना है। और मैं सभी राज्यों को कहता हूं, आसमान खुला है भैया, आप भी मेहनत करो, आओ मैदान में, बहुत फायदा होगा। मुझे याद है शुरू में जब जापान के हमारे साथी आते थे, तो मैं नया उनकी निकटता मेरी बढ़ती चली जा रही थी। उनकी हर चीज को मैं समझ पाता था। मैंने देखा है कि जापानी लोगों का एक नेचर है कि उनको अपना जो कल्चरल इकोसिस्टम है, वो उनकी पहली प्राथमिकता होता है। उसमें जापानी फूड चाहिए। ये जैसे गुजरात के लोग हैं ना, उनका भी ऐसा ही है। वे गुजरात में कहीं सैटरडे संडे को कहीं न कहीं रेस्टोरेंट में खाने की आदी है, तो वहां जाएंगे तो मैक्सिकन फूड मांगेंगे, इटालियन फूड मांगेंगे। लेकिन गुजरात के बाहर कहीं जाएंगे तो गुजराती फूड खोजते रहते हैं।
All right, and there you go. That's the Prime Minister talking about Make in India for the world, monitoring the situation also when it comes to rare earth magnets. In fact, he's also talked about how clean energy and mobility clearly are the future. That's all the time that we have on this edition of Markets at 12. Thank you so much for tuning in, but you don't go anywhere because Profit Bazaar takes all the action forward.
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशी ताई, ऐसे बॉय मिलते मुंबई में? चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
गोल्ड प्लस क्लियर ग्लास, कार हो या नियर, सब कुछ दिखे क्लियर।
Tech has changed. So should your tech show.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies,
Markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold
buy time to
ICICI
invest in that?
CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the Hi, thanks so much for joining in. You're watching Profit Buzzers on NDTV Profit. My name is Alex Matthew. It's a little bit of a tepid day of trade for the Indian equity markets ahead of the midweek market holiday. But let me start by wishing you season's greetings. And if you are bringing Ganesh home tomorrow, let's hope that he brings prosperity into your homes and for the rest of the year as well. He is known as the breaker of barriers. Let's hope that he does so for you as well. But for the equity markets right now, you have the equity markets trading lower by about 0.7% for the benchmark Nifty 50. The Bank Nifty, as you just saw on the screen, down about 1% or so, and the broader markets also trading with cuts. But they have recovered from the low point of the day. You have the mid-cap index, for example, that's trading with cuts of about 1% or so, I would think. And you have the small cap index that's trading also with cuts of maybe a little over that, 1.3% or so for the Nifty small cap. Take a look at the market breadth, because that should be indicative of what we're seeing right now on the screen. And you have more declines than advances. However, that gap has somewhat closed over the course of the last couple of hours, but it remains pretty wide at this point. Most sectors are currently trading in the red. Whether you look at the banking index or you look at the defense index, which is trading with the most cuts, down about 2% at this point. You have realty that's also under a little bit of pressure. And if you have a few sectors that are trading in the green, it is the FMCG index and the auto index that is just about trading flat. Of course, Maruti Suzuki trading at very close to the high point of the day. You had the Prime Minister that has just inaugurated their facility in Ahmedabad, which is going to be manufacturing the e-Vistara. And of course, this is a vehicle that's going to initially be exported to 100 countries. This is a significant development because it is the first battery-operated car from the stable of Maruti Suzuki. They are late entrant in the space, but as you know, their distribution capabilities are better than any other automotive company, and so therefore they could close the gap even in the domestic market when they do choose to sell that vehicle. We've got Prashant Tapse, who's a Senior Vice President Research Analyst at Mehta Securities, joining us. Prashant, thanks so much for taking the time as always. I wonder what you make of the tone and tenor of today's trade, because it seems like there's a little bit of caution, there's a little bit of wondering, I think, whether or not the imposition. Much for taking the time as always. I wonder what you make of the tone and tenor of today's trade, because it seems like there's a little bit of caution, there's a little bit of wondering, I think, whether or not the imposition of that tariffs will actually come across. We have had the notification overnight from the US that says that at 12:01 Eastern Standard Time, which is 9:30 IST, those higher tariffs will come into play, and perhaps to a certain extent that is having a bearing as well. What do you make of trade?
I think again, yes, markets are on the cautious note. The headlines, you just made it out. But again, there are some expectations saying that there may be some kind of harsh dialogues or harsh update from the Trump administration with respect to some kind of tweaking of the percentage of taxes. So I think worried investors are taking some kind of profit out of this market and taking some kind of hedge position towards the next week. But because this week is very much crucial for us, tomorrow is a holiday for Ganesh Chaturthi. Again, we have a event on Thursday for expiry. Again, there is a GDP update. So overall, this weekend we have very crucial time for the market. So investors are, as well as traders are taking some kind of profit out of the markets.
How do you say that in Marathi? Wish you a happy Ganesh Chaturthi.
Alex, I am a South Indian guy.
like me. Okay, but I know a little Marathi. I'll have to learn how to say that, and maybe I will See, I've got somebody telling me Ganesh Chaturthi cha Hardik Shubhechha. Very good. So we learned something new today. All right. Vodafone Idea is trading with cuts of about 8.6% at this point, under pressure on account of the fact that it's unlikely to receive any benefit or relief on its AGR dues, and Indus Towers as well, which is usually something that moves in tandem with Vodafone Idea. Anytime there's negative news, it moves lower, and so Indus Tower also trading with cuts. Let's pull that up on the screen as well. It's trading with cuts of over 3%. I think it was at one point of time. It continues to do so, down about 3.6%. Let me ask you about Indus Tower rather than Vodafone Idea. Prashant, what do you make of this one, and would you buy it at any dips, if at all?
I think yes, one should buy Indus Tower on every dip, but not at this level. Again, I'm expecting at least 320, 315 can be a level where a risk-reward ratio can be better for the reward as an investor. So good stock, but not at these levels.
Not at these levels is a view on Indus Tower. Let's talk about a stock that is buzzing though. One of the stocks of the day, arguably, and this is Protean eGov. This is on the back of a significant order win for the company, and it is up about 8.6% or thereabouts. Let's bring on Jasmeet to give you a sense of what this order is about. Jasmeet, what are the details here?
Well, right, yes, thank you for that. The stock is buzzing and it hit almost 12% intraday. Let's quickly understand why is this happening. While this is happening on the back of order win, company has won an order worth 1100 odd crores. While the order is from the Authority of India, where they are providing Aadhaar Kendra services. While this services will be provided across Andhra Pradesh, across 188 districts. While the service includes providing enrollment, walk-in based interviews, as well as Aadhaar updation, and this service is spread across 6 years. That means the total revenue of 1100 crores over the span of 6 years. While let's understand a bit history about this particular company. Company had recently lost PAN 2.0 order, which was worth roughly 1500 odd crores, and the share had plunged from 1400 odd rupees up until 800. While now this is a positive news for the company. Apart from this, company has recently won an order worth 100 crore as well. Now when you look at the key financials of how the company performed for FY25, we see the revenue is around 830 odd crores, while when you look at the profits, they stagnate around 94 odd percentage. So it's something to watch out for how the stocks react going ahead in the market today.
All right, yeah, it is trading with gains of close to 8.5%. Of course, it was higher in trade. It's given up some of those gains, but still holding on. And I do want to talk about IT as a pack, because in trade yesterday, Prashant, this was very clear as the big winner. Today, of course, some of that is being reversed, and you have 7 out of the 9 constituents of the Nifty IT that are trading with cuts. Tech Mahindra, Emphasis losing the most ground, 0.75%. Wipro also about 0.7% lower. Infi also about 0.6% lower. TCS, Persistent are bucking the trend and just about staying in the green. I wonder if you would initiate a long on any of these names, and if so, which would they be? Because I think a lot of people on the fundamentals are starting to turn positive once again on some of the IT companies.
Yes, after this meeting of Fed chairman, there was some kind of hints of the interest rate cut in the month of September's meeting. So that gives some kind of comfort level for an analyst to have a H2 as a better second half for IT companies. Where if the interest rates are cut again, the companies which are based out of US will have some kind of room to spend more on the IT expenditures. So that can be a business opportunity for all the Indian IP companies. So that is one reason why all the analysts are getting some kind of optimistic, which was not there few months back. So overall in this pack, I think TCS should be one stock. One should focus more on that, and even Infosys. So I will go with the leaders only, time being, considering the market conditions.
Got it. All right, Prashant. So let's take a pause right now. We've spoken about a few stocks. We will speak about more. But for now, let's take a mid-market check on the F&O space. And Vansh is joining me in studio to tell you about the key developments here. Vansh, one aspect has stayed the same, which is the fact that you have FIIs that continue to remain more short than long on the Indian equity markets. But then what's the latest in the option space as well?
So basically, we have seen the FI long-short ratio at the lowest level since the beginning of the August expiry. Now, clearly, we can see the long-short ratio standing at 85%. Now, in terms of Nifty, if we talk about, we are seeing a strong resistance in terms of 25,000 mark, which is a psychological level, and 24,700 mark, which is acting as a strong support. So clearly, this is what the markets are indicating in terms of the FNOQs that we are looking at.
Got it. All right. Vansh, thanks so much for getting us that quick update. Let's talk about a couple of other counters that are in focus, and one of them is Edelweiss, and this is a stock that was buzzing right from the start today. It's a large deal that has taken place, a block deal that has taken place, 6.43 million shares exchanging hands, and dealers have indicated that it was Rashesh Shah that sold the shares. Abacus has bought those shares. The stock is up about 4%. And there's another large deal, and you have Sai Life Sciences that is in focus. TPG, of course, set to exit, or is said to have exited Sai Life via a 2,640 crore deal. And of course, this is a US-based private equity firm, TPG, which is set to exit the company completely, and the stock under pressure, close to 5%. Any comment, Prashant, on Edelweiss? It is in focus for various reasons, but today, of course, on account of that large deal, would you initiate at this point?
I think yes, this block deal is giving some kind of very comfort level, and the shift of the management on the stake, and Abacus is buying that stake. So I think that is giving a lot of positivity in the markets, and wealth management as well as the capital market segment is very attractive. Again, in the valuation terms, I think this is one of the cheapest, financial capital market stock which is available right now. Even technical, I think 200 DMI as well as 50 DMI, both are getting triggered on the positive side. So as a trader, as an investor, I think it's a good level to start buying with a target of at least 120, 125.
You know, in the automotive space, of course, we've been talking about Maruti Suzuki, but another in the electric vehicle space that is buzzing is Ola Electric. And let's pull that chart up. In fact, if anything, let's pull up the longer term chart. Of course, it's up 5% in trade today, but it's moved quite dramatically, and it's had quite a bit of chop and churn in the recent past. You see the gain in the last month is as much as 23-24%. The latest update, of course, has to do with PLI certification for its Gen 3 scooter portfolio. This is something that is causing the stock to run up today. But in the recent past as well, there were news points of a large investor or large mutual fund buying shares in Ola Electric, as a result of which you had the stock price that moved up very dramatically. Puneet joining in to tell you about the latest development with regard to the PLI certification. How significant is this, Puneet? And they have been losing market share. Do they ramp that up? What are the signs that are pointing to?
Well, definitely. Thank you for that. Now, this is a key update, Alex, and that's because of a twofold aspect. One, as you rightly said, market share has been losing for the company over the past few months, as well as the profitability aspect. This will, identify and help the second part, which is the profitability, because they've got an PLI for, the Gen 3 scooters, which is the ones which are the latest models which you see across. And this platform is roughly 40% cheaper than the first variant to manufacture. Hence, the higher the sale of this particular variant, the more profits they earn. And essentially, with PLI, this will add roughly 1.5% in terms of gross margins in Q2 itself. That's what the company had mentioned if this does get before September, which has happened now. So that's one key positive. The other aspect is gross margins. They were 25.6% in first quarter of FY26. The management has an ambitious target of roughly about 35 to 40% by this year itself, and that will be done with the help of PLIs like this. So the production link incentives, largely the company is targeting to sell over 3 lakh vehicles, and hence a majority of them will be this PLI certified Gen 3 scooter. So that's a key positive again. The other aspect is with the advent of the batteries which will be used in these particular products, and our colleague Tamanna did speak to the management about it. This will start from September itself. So multiple avenues of cost are getting targeted, and this is just one of them.
Oh, yeah, absolutely. You said it. Thanks so much for that, Puneet. In fact, let me go across to Prashant to find out what he thinks about the recent momentum. 20+% in the span of a month. It's recouping some lost ground. Is this a good moment to start buying into Ola Electric, you think?
if the investor is very much optimistic about EV and one should have one stock in the portfolio, I think Ola as well as Ather should be the stock one should have in his portfolio. Again, after continuous underperformance in the stock from last January till date, I think two triggers which the anchor has already mentioned. One is the battery, which is going to be part of the vehicles very soon in 1 or 2 months. Again, the PLI scheme, which also triggered and gave some kind of visibility for the stock for the next 1 or 2 quarters where the profitability can increase. So this is as a surprise for the market. Again, this was not assumed the way how the market share was losing from top 1 to top 5. So this surprise is giving some kind of comfort level for a risky investors to add on these levels.
Got it. All right. Let's talk about one of the listings today, and this is Patel Retail. The last I checked was 15% higher. It is around 14% higher at this point. And of course, this is a supermarket chain that operates in suburban Maharashtra. I spoke with the management, in fact, Dhanji Raghavji Patel earlier today. And here's what he had to say about his store expansion plans.
बेसिकली हम लोग का जो टारगेट्स एरिया है टायर 2 और टायर 3, तो वहाँ पे इतना पेनिट्रेट अभी नहीं हुआ है, लेकिन हम उसको डिनाई नहीं कर रहे हैं. हम लोग भी अपना प्लानिंग कर चुके हैं कि हम लोग का ऐप जो है वो कंप्लीट लगभग हो जाएगा 2-4 दिन में. और हमें एक एडवांटेज ये है कि मेरे पास जो एरिया में मेरे अपनी जो स्टोर है, मैं उसको डार्क स्टोर में ट्रीट करूँगा. और हम लोग भी कमिंग सुन मतलब थोड़े से समय में आ जाएंगे उस चीज में, जो उस चीज का ग्राहक का जो रिक्वायरमेंट है वो ग्राहक को हम कैटर करेंगे. ऑलरेडी हम आज भी सर्विस वो दे रहे हैं, लेकिन हम लोग क्विक जो 10-15-20 मिनट वाली नहीं, ग्राहक आता है हमारा शॉपिंग करता है और उसको हम होम डिलीवरी कर देते हैं विद इन 5-6 घंटे के अंदर.
Got it. All right. So that's the management of the newly listed company. But let's stick with a conversation on retail. And as the festive season kicks in and the GST reforms are set to be announced, we had an exclusive visit or exclusive chat with Nilesh Gupta, who is the director of Vijay Sales, on how he's gearing up for the festive season. Listen into a snippet of that conversation.
Today we are at a very special location. We are at Vijay Sales store talking about the new GST reforms and the boost in consumption that is to follow, and of course the festive demand and how are the sales looking like. And to discuss as to how things are faring at Vijay Sales, we are joined by Nilesh Gupta, who's the director at Vijay Sales, joining us now. Always a pleasure speaking with you, Mr. Gupta.
Thank you for having me here.
My first question to you is that, I want to understand that with regards to this new GST reform that we're talking about, where GST will come from 28 to that 18% mark for ACs, plus your 32 plus inches TVs as well as dishwashers. How is the industry viewing this, and how is this move being welcomed by the industry?
So I think the industry is viewing this as a Diwali gift by the government. Definitely, both the categories are very important.
Yeah.
The 32 plus televisions as well as the air conditioners.
Right.
And especially in the light of the air conditioning summer season not doing so well because of the rains, erratic rains, I think this is going to be a real breather for us, and it will definitely boost the sales.
In terms of the overall view as well, from a Vijay Sales point of view, from a retailer point of view, how do you think that this consumption boost, it's not just GST alone, there's lots happening that the government is in fact doing to boost the consumption, right? There was income tax cut, there was also rate cuts that's coming, there's 8th pay that's going to come in, plus this new GST reform, lots done by the government to boost the consumption. How do you think this will incrementally benefit Vijay Sales? If you can give us a perspective in terms of percentage as to what growth can come in from this consumption boost.
So what we are seeing is already the income tax rate cuts which were announced in the finance budget has translated into extraordinary sales for us. So the sales have gone up, and we are already seeing, in spite of a poor summer, we are already seeing a growth of around 10 to 12%, which otherwise would not have been possible. And now with this GST cut coming in, the positivity all around happening in the country, and the very fact that we are able to stand on our own irrespective of what's happening outside, I think it's a very positive impact. And in consumer durables especially, what matters most is not whether the consumer has money or not, but what matters is sentiments. So right now the consumer sentiment is up, plus he has money in the pocket. So it's a double whammy. So we expect a real good sales to begin once the GST sets in.
Got it.
Okay, so that's only part of the conversation. Of course, you can catch the entire conversation later in the day or on our YouTube channel. We have to slip into a very quick break. We'll be back on the other side with Profit Buzzers, of course, and he'll be back to tell you about tariffs, markets, and a lot more. Do stay tuned.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में, फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग। तब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
Tech has changed. So should your tech show.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Tech has changed. So should your tech show.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio,
relationship between the two countries. We have also seen in recent years an intensification of the engagement between Indian states and Japanese prefectures, and an engagement focused on this particular aspect has also been planned for during the visit. Overall, the visit will consolidate our long-standing friendship. It will open fresh avenues of cooperation and reaffirm our shared commitment to peace, prosperity, and stability, both for the two countries as well as in our shared Indo-Pacific region and beyond. Let me stop there, and I'll turn the microphone over to my colleague, Secretary West, to brief you on Prime Minister's visit to Tianjin for the SCO summit.
Thank you. Namaskar. I will now share some information about the upcoming SCO summit. Prime Minister Shri Narendra Modi will visit Tianjin, China, for the 25th meeting of the Council of Heads of State of the Shanghai Cooperation Council, the SCO, on 31st August and 1st September 2025 at the invitation of His Excellency President Xi Jinping of China. The SCO was established with the primary goal of countering three evils of terrorism, separatism, and extremism, which continue to remain a challenge. Today, as a regional platform, there is a broader range of sectors of cooperation among the SCO members. The SCO comprises 10 members. In addition to India, they include Belarus, China, Iran, Kazakhstan, Kyrgyzstan, Pakistan, Russia, Tajikistan, and Uzbekistan. There are a number of dialogue partners and observers also. India has been a member of the SCO since 2017, and earlier it was an observer since 2005. During the period of its membership, India has held the chair of the SCO Council of Heads of Government in 2020 and of the SCO Council of Heads of State during 2022-2023. India engages actively with various institutional processes and mechanisms of the SCO and participates in the ministerial meetings and other dialogue formats. Prime Minister Shri Modi has participated in various previous SCO summits, in 2018 in Qingdao, 2019 in Bishkek, 2020 in Moscow in virtual format, 2021 in Dushanbe in virtual format, 2022 in Tashkent, 2023 New Delhi virtual format, and in 2024 Astana Summit, External Affairs Minister had represented the Prime Minister. The theme of the 23rd SCO Summit, which was chaired by Prime Minister Modi, was towards a secure SCO. And here the secure stands for security, economy and trade, connectivity, unity, respect for sovereignty and territorial integrity, and environment. So this gives an idea of the range of issues that are of priority for India in the SCO. During India's presidency in 2023, SCO had adopted a joint statement on cooperation on countering radicalization leading to separatism, extremism, and terrorism.
So that's Honorable Prime Minister's visit to China and Japan. That's the briefing that Emmy is bringing to us. But the big story of the day, 50% tariffs from tomorrow. You have US, which has gone ahead and notified the additional 25% tariff on India from the 27th of August, and this will be effective 9:30 a.m. Indian Standard Time. And this is just one day before US President Donald Trump's 50% tariff hike that takes effect on Indian exporters. Prime Minister Narendra Modi also delivered a resolute message from Gujarat. He addressed a public gathering, vowed unwavering support for India's farmers, small businesses, dairy producers, declaring no matter how much pressure comes, we will find a way out. Let's quickly first listen in.
मेरे छोटे छोटे दुकानदार भाई बहनों से कहूंगा, मेरे किसान भाइयों से कहूंगा, मेरे पशुपालक भाई बहन से कहूंगा, और मैं गांधी की धरती पे से बोल रहा हूं, मेरे देश के लघु उद्यमी हो, किसान हो, पशुपालक हो, हर किसी के लिए मैं आपको बार बार वादा करता हूं, मोदी के लिए आपके हित सर्वोपरि है। मेरी सरकार लघु उद्यमियों का, किसानों का, पशुपालकों का कभी भी अहित नहीं होने देंगी। दबाव कितना ही क्यों ना आए, हम झेलने की अपनी ताकत बढ़ाते जाएंगे।
Pressure may rise, but we will bear it. That's the word coming in from Honorable Prime Minister Narendra Modi. Joining us to discuss further on this, we have Mr. Pavan Kumar G, President, Seafood Exporters Association of India, Ravikant Kapoor, who is from the Vice President at FIO, R.K. Vij, who's the President Emeritus, the Textile Association of India, and Mr. Indranil Pan, Chief Economist at Yes Bank. Welcome to the show, gentlemen, and always a pleasure to speak to you. Mr. Pan, let me first come to you as well and take the first question with you. You know, initially the anticipation was that India did have a 20 to 21 day window to negotiate, and that is what everyone was looking at. Now that tariffs do come into effect tomorrow, maybe it gets rolled out later, no one knows yet. What is your read of the situation, number one, and do any of your estimates in terms of growth, GDP, etc., change from here on?
Well, on your second question, we are not really changing our GDP numbers yet. Because I think the critical issue is, yes, the tariff takes hold, but on the other side we also have a GST regime that is coming on. So we are talking about two different segments of the economy, one being very significantly negatively affected, which is the export segment, and the downside implication of that on employment in the country, because most of the exports to the US that we are talking about is also labor intensive exports. So there is a downside implication in terms of the employment as well as the purchasing power of the population. But on the other side, we are likely to neutralize that to a certain extent by the GST regime. So it's a very difficult story at this point in time, and there are two diverging sort of pulls that are present in the economy on the growth side. And from that perspective, we have still not altered our headline GDP number, though some of the internal numbers may actually be changing. The other important issue is that while the GST positively impacts from a price perspective the services sector, we still don't have tariffs on the services sector. And that restricts itself to the goods sector. So that should be another enabler in terms of the headline GDP number that we look at. In terms of the overall hit purely from the tariff, we are estimating a 0.2 to 0.4% sort of hit, depending on about a 20% sort of exports to the US from India being critically impacted. That's the first round hit that we are estimating.
0.2 to 0.4% in terms of GDP hit, Mr. Pan, is basis 25% tariffs, so you're saying basis 50% tariffs?
So it's basis the 25% tariff. It's very difficult to assess what happens in terms of the 50% tariff. I think other guests on your panel will be more sort of suitable to answer this particular question. So at 25% tariff, what I've heard from exporters is that they'll possibly be able to absorb a certain bit, and they would not really cancelling orders. But the situation may drastically change with the 50% tariff, and therefore I would expect other guests on your show to actually sort of pin down in terms of the sectoral perspective how it impacts the overall performance of the sector.
Absolutely. So that's going to be more important. In fact, let me also get in Ravikant Kapoor, Vice President for you. Ravikant, welcome to the show. My question coming to you is, negotiations have been going on. You have, as an association, you have been in touch with the Commerce Ministry as well. What is it that you're picking up now from an impact perspective, representing the exporters? Do you think there is a way forward from here on?
There's always a way forward, but I believe that we have to take it one by one. We have to look at the current situation as it is. It is really a major disaster for exporters to the US. It's still a fresh wound. The pain will set in. It will take some days and weeks, probably some months, if they do not come to any settlement. And for the exporters, we do not see any alternative, especially the ones who are levied the 50% reciprocal plus the earlier normal duties. It is something that we have to now look at: damage containment, hand-holding by the government. The first thing that's going to hit you is what do you do with all your inventories? What do you do with your documents which are of goods on the high seas? It's going to lead into a kind of a financial situation where a moratorium will definitely be called for and should be done within a day, because people need to know what they're going to do. It's also going to affect employment in a big way, because the ones that are paying duty are apparel, they are leather, they are carpets, they are shoes and chemicals. So these are the ones where there are big employment running into crores of people. So how are they going to be managing it? And a lot of this is going to the US, which has been a primary market. Employment, I just mentioned, is another problem. Cash flows have also to be seen. Government will need to come to ease the stress. I don't like looking to government for subsidies, but in these matters of need, they are the ones who have to come forward and do something. But at the same time, let me tell you, in spite of all these things, even a few days ago we were thinking, we still need to stand by our government and we'll take it on the chin as it comes. We do not want any nation in the world to think that they can split India and they can make us feel the pain. Whatever it is, we will have to endure it. These are brave words, but we would need support from the government to see that no lasting damage is done, because you will need the same exporters to come forward.
Absolutely. I think this is something which is important. In fact, let me take in a question with Mr. R.K. Vij, President Emeritus Textile Association. Mr. Vij, how do you think is the textile industry prepared now, taking into consideration that the tariffs do kick in? Because the concern over here is that US as a country does have alternatives apart from India when you talk about textile as a sector. Here, the question now is India becomes less competitive. Is the solution to move to other markets, or do you think the quantum that India used to export to the US as well will go down? The China plus one strategy, all of that is on the backyards now.
You are very right that with this 50% tariff on Indian product, specifically textile, the textile is this gives a employment after agriculture. Is the maximum employment comes from textile, and of course we are exporting to US $10 billion of carpet, home textiles, knitted fabric, woven fabric. That is a situation is there. The big markets in India is Panipat, Ludhiana, Bhadoi, Surat, and major is Tirupur. From Tirupur, we are about 60 to 70% of our cotton garment we are exporting at a price. So, of course, that problem is very difficult. But we Indian, we textile will overcome this problem. As during the COVID, we overcome this problem. We will overcome this problem. How to overcome this problem? There are two parts are there. One part, what we as a textile owners we have to do, and what we need to support the government only for 3, 4, 5 months. So the first point is that what we should do, we should find out the new market immediately. We should develop new designs We will reduce our cost. We will find out the domestic market. Our domestic market is very, very strong. So we will, because if 10 to 12 billion in a year, so 1 billion per month, 3 billion, we have to consume, export our goods are to consume in the domestic market. Now, what we expect from the government? We are thankful to our respected Prime Minister that the long pending GST problem is going to solve in the month of September. The 12% GST rate they are abolishing, so 5% and 18% will be there. So textile already in the today's newspaper was there, the 5% textile will come. My only submission from because in a textile, we have 25 units all over India and they are giving us the feedback. The textile comes in the two parts. One part is textile industry and one major part is the man-made fiber which come under the chemical ministry. The textile ministry, the raw material is viscose and cotton. And for man-made fiber, which is world over, it is growing. And we have to grow in India also. The basic raw material is PTA MEG, which comes under the chemical ministry. So we want only one GST rate. So there should be no inversion of duty, which we are facing from the last 7 years, because we are buying at 18% and we are selling at 12%.
Got it.
So this is the we request. The second thing we request for the MSMEs.
Stay with us. Because I understand, from what you're also saying, that GST benefits that do come in the reforms that you are talking about as well, they will somewhere help the exporters counter the impact of tariffs. But that's with the textile sector. Let's look at even the seafood sector as a whole. We have Mr. Pavan Kumar, the president of the Seafood Exporters Association, joining in. Mr. Kumar, if I have to talk about seafood exports as well, companies like Avanti Feeds, Apex Frozen, Waterbase, these are from the listed names. They have exposure to the tune of almost around 14 to 60% that comes in from the US markets. Even there are unlisted players as well. How are you looking at the industry shielding itself from the tariffs now, taking into consideration it's into effect tomorrow?
Yeah, hi, good afternoon, everybody. Before we dive before I answer your question, the first thing I would like to say, as seafood exporters, we 100% support our Prime Minister's mission in India first. The country's interest comes first, and we as an exporters association, we 100% support our Prime Minister. We are we are with him in this fight. Yes, as one of my panelists said, we'll take all these challenges head on, and we will find solutions for them. To answer your question, definitely yes, the seafood exporters are impacted. The total exports of seafood across the world is about $8 billion, of which $3 billion goes to US market. That is about 40% of our market is US market. And that is impacted. And this, of course, the people talk about this 27th deadline, but the 27th is for containers which are on board and which are on board on the mother vessel. That means our deadline has started about 2 weeks ago. So in the last 2 weeks, most of the shipments, all the buyers have put all the shipments on hold, and there are no shipments which are going to US. Yes, this is a big hit for the seafood industry. And to tell you, seafood industry employs about 28 million people, either directly or indirectly. So this is a labor-intensive business. And we expect the government to do a little bit of hand-holding so that, we tide over this kind of, I don't say a crisis, a scenario which is developed over the last couple of months.
Okay, that's interesting, but let me, you spoke about the support that the industry wants to give Prime Minister Narendra Modi. Now, with that, a couple of relief measures that are in for the exporters also, which are on the cards. In fact, one of my colleagues has got this exclusive story where the Commerce Ministry, along with a few key economic ministers, will be meeting the PMO at 3 p.m. today. And the meeting is to focus on the possible relief measures for exporters, and this will propose export promotion mission status. The review is going to be likely because the outlay on that has been increased to 25,000 crores, which is still lying with the expenditure side of the ministries. Taking that into consideration, Mr. Pan, how do you look at it? Do you think your GST benefits, the other relief measures that are being worked out for exporters, will be able to negate the impact in terms of growth?
Obviously, fully not, because in the sense, if I hear representatives here on your show also, for example, the marine products, there's a very significant sort of outflow that happens in terms of exports to the US. You can't expect the whole amount to be absorbed domestically. We also heard the textile segment. Now, textile segment, my understanding is, and I may stand corrected, there are certain textile manufacturers in India who cater to very principally the European and the US markets, and their standards, quality, design, and therefore pricing is totally different than what can be absorbed by the Indian market. So it's a very sort of difficult scenario, I would say, if you are expecting the whole amount of the loss of exports to be converted into Indian demand. Now, typically, this is a pressure that has come, which is in respect to the prices. And therefore, we should attempt to reduce the price pressure on the exporters if we have to even today, look at exports going forward. So, and I think all the economic agents here needs to participate, starting from the exporter as well as the consumer, in terms of dividing the total cost that has to be borne by the exporting sector. To that extent, I think the duty drawback scheme for the exporters may actually be brought back. We can be looking at interest subventions. The larger issues in terms of newer markets, upping the productivity, and therefore looking at more value add within the export sector, while in a longer term perspective definitely serves the purpose, but can't really do much in terms of taking out the immediate pain for the exporters.
Understood, understood. We are running short of time, but Mr. Vij, your closing comments, 30 seconds.
Ma'am, I'm just telling you, 25% penalty, we want the government, at least for the small manufacturers of the government, government should give a duty drawback of 10 to 15% only for a small period of 4 to 5 months who are exporting to USA. This is the one thing, and they should release some amount of liquidity to us and refund our GST, which has blocked in our books.
And that is something I think all the industries will want as well. Mr. Kapoor, anything that you would want to add?
Yes, ma'am. I would like to say that we have to think also long term. Immediately finding new markets is not so easy. But the Atmanirbharta that the PM has been talking about is very important. We are already talking about energy, and I think that is the number one problem that we are facing today, and that is the grave one of the whole charge today. We have been talking of using ethanol, electric vehicles, solar, wind. We would like to add nuclear to go up in a big way. And also, lastly, we are blessed with a lot of coal reserves. I think we need to look at that and start using our coal. At least President Trump has been talking of green coal, whatever that means. But we must certainly look at that as an energy source, and we should not shy away from it. If nations around the world want to pressurize us on oil, let's go back to coal and see through research and development what we can do with it. I think having an energy security in-house or inland is very, very important also.
Absolutely. I think and lots that the government is trying to do as well. But thank you, gentlemen, so much for joining us on the show, running out of time. And with your ask, in fact, yesterday, RBI governor also said that they have been easing out the norms and have made sure that there is enough liquidity in the banking system. He also said that he will pay more attention to the sectors exposed to the tariffs. Let's quickly listen in as we wrap the show.
There are few sectors, if these tariffs remain, then there will be a few sectors. 45%, as you are aware, are outside the tariff regime, but the remaining 55%, some of them, like gems and jewelry, textiles, apparel, shrimps, MSMEs that you mentioned, there will be some, there can be a potential impact on them. The government on its part has set up, and I mentioned, alluded to those reforms that the government is looking at. The government is also looking at free trade agreements, some of which has already been in the works for some time. And we, on our part from the Reserve Bank, we had, as you are aware, we have been on an easing cycle We reduced repo rate by about 100 basis points. We have provided ample liquidity to the banking sector, and whatever else is required to support the growth of the economy, and including those of sectors which are impacted more. If it so happens, we will not be found wanting in our job.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कैसी ताई, ऐसे बॉय मिलते मुंबई में? चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
Tech has changed. So should your tech show.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest.
Hello and welcome. You're watching Small Cap Buzzers on NDTV Profit with me, Somit Sarkar, and my co-anchor Anushi. Well, if you look at the markets, the Nifty is struggling around the crucial 24,800 level, while the Nifty Bank Index, that is down more than 500 points in trade. When it comes to sectoral indices, other than Nifty FMCG and Nifty Auto, all the sectoral indices are trading in red. But now let's head across to Anushi to get in more details on what are the stocks that have been buzzing when it comes to the small cap segment.
Samit, as you just mentioned about the benchmark indices struggling to keep hold of that mark, something of that thought is playing out with the mid cap and the small cap indices as well. Now, if you look at the Nifty mid cap 150 and the small cap 250 index in pressure, down about 1% is what we are looking at, and small cap 250 seeing even deeper cuts over here. Just some of the names that we are pulling out, where we are seeing some of this pressure building up in terms of mid cap 150 losers. We are looking at the likes of Vodafone down about 8.4%, and this is on the back of DOT, not AGR relief not being on cards for the company. So that's why we are looking at pressure building on this stock. 4% downtick in KPR Mill as well. In fact, the stock is down about 17% in this past month itself. Indus Towers, another stock that we are seeing pressure building onto in the mid-cap space is what we are seeing. Coming to the small-cap 250 picture, if you are looking at JK Paper, which was in focus yesterday, up around 15% or so, is now seeing some bit of correction, down about 5%. Yesterday, the update was in terms of, there being a more update in terms of how there would be minimum price bands to curb cheap imports coming into the picture. Angel One is again another stock seeing about 4% of a downtick as well. Now, if you're looking at some other active securities in picture, we have the new listings which are in focus. That includes the likes of Patel Retail. If you're looking at that, that's up around 14%. Vikram Solar again 11% up. And Protein eGov is another stock in focus, and this is on the back of a significant order win that we we are looking at. So this is the overall picture that we are seeing in terms of, the small cap and the mid cap index building up. But over to you, Samit.
Well, thank you, Anushi, for that extensive market check. Well, let's go across to our first management on the show today, Gurusharan Singh, the Chairman and Managing Director of RSCL Geartech. So, firstly, to start off with, FY25 was, we have seen a subdued performance, just 1% revenue growth. Margins were also kind of lower compared to what we had seen in the previous year. What is your outlook when it comes to FY26? Any guidance you can share on the revenue growth number, margin front?
Yeah, good afternoon, Somit. First of all, it's really my pleasure to interact with you. But yes, you are right that last year the margins were really the top line and bottom line were under pressure. But there were global challenges, and the US election and all such stuff was the real effect on this market. But now things are really looking up. First of all, our Indian domestic scenario is really improving a lot, and I really feel that the coming year should have a very, very good year for the automotive sector per se and auto components manufacturer in particular, because we have actually a global presence. Because if I speak about my company, we have a global presence. And we have a very, very good renowned place in our domestic market in our core business of, like you have already displayed, transmission gears and shafts and all that stuff for premium segment of motorcycles, fast cars, commercial vehicles. And so I personally feel this year should be better than the previous year.
Any numbers if you can share with us, any revenue target that you have for FY26, any target that you have for EBITDA margins?
Yeah, this year we should be growing at least 15 to 20% as compared to last year, because as you rightly said that last year we had a very, very nominal growth of only 1%, but this year we have our targets to grow at least 15% year on year. And of course, our EBITDA margins also should be better, because the market dynamics are really going very positive, because as I explained, that both overseas and as well as domestic segments are really showing trends of growth.
Hi, Mr. Singh. This is Anushi joining in as well. You spoke about the 15 to 20% growth of this year. Just want to understand this in deeper. What are the key drivers which will lead to this kind of top line growth? And if you can give us a range also, margins we are seeing fluctuating in the range of 20 to 25% for FY26. What's the kind of number that we should have in place?
I'll be very honest with you, all these, first of all, these Indian markets are very, very flexible markets. Volatility is there into the global markets. So, of course, whether it's a top line or a bottom line, it has to be range bound. But our target is that like you said, that 20 to 25% is the EBITDA margin. So if you really see, so 20 to 23% should be the average line. So plus or minus 1 or 2%, it has to be there. And we always maintain that our EBITDA margin should be a plus 20. And of course, one always wishes for highest margins. And coming on the top line, yes, as I said, 15% is a range bound, plus or minus 1 or 2% here or there will always happen. Because, market dynamics are really, today markets are not very, very, I'll say they are not very, very, you can't predict them what's going to happen tomorrow, because there's a volatility across the globe and there are geopolitical scenarios.
Right, sir.
Despite all this fact, yes, Indian markets are really going very strong.
Right. So as you were mentioning that you are a global player, and we can also see that you have tie-ups with multiple global auto OEMs. So any issues that you have faced since the Trump tariffs have come into effect, and any logistical issues, anything, any conversations that you have had with your clients regarding sourcing or changing the changing a sourcing strategy, anything on that front?
So, first of all, I'll explain you that if I really see our company, we are not having much exports to US. Our real exports are to Europe and to Japan. So rather, since European FTA is now around the corner, so rather we see that there will be a uptime coming for us. But coming back to US tariffs and all, because eventually, even if the European market, European OEMs are producing the product, so it's not for the European market, they are for across the globe, and US as such is a major player. But we personally feel that between Europe and US, tariffs will not be that robust or sorry, that strong, which the way US is putting tariffs for India or some other select Asian countries. So eventually, I personally feel that Indian as a Indian industry, it may have some effect of the tariffs, but I personally feel that eventually this tariff thing should settle down. But coming to the shifting of businesses or global strategies, we are into technology product exports. OEMs will not really change strategies so fast because their validation times are very, very long. Anything to change from one source to another, from one region to another, any time taken is not less than 1.5 to 2 years. So no customer will really change the strategy on such short-term things. But we personally feel this tariff thing is a short-term thing. So rather we see we are getting many new RFQs from resourcing of products from European buyers, even from American buyers as well. So, we feel that globally the strategies are being redefined, and India as a country has to come as a beneficiary out of this. Because I personally feel, if I really see my company, our company is really getting the new business opportunities out of this global scenarios happening. So this is, if I really place this situation into the entire of Indian industry, I personally feel all the industry will be getting benefited out of this scenario.
Right. Mr. Singh, just want to understand on that part, any new order wins or projects that are in particular focus, because, if there were discussions ongoing with a big two-wheeler manufacturer as well. So just want to understand the kind of scale up that we'll see from there.
Yeah, I will be, in fact, we already disclosed in the stock market also, we already tied up with the very, very large two-wheeler manufacturers from India. Because as you may be knowing that we are actually catering to premium segment into the automotive industry, whether it's two-wheelers or the passenger cars or the commercial vehicles. If I really, since we are discussing this two-wheeler business, because, Indian aspirations are now increasing. We personally feel in coming times, ICE engine with 250cc plus engine size will really have a very, very exponential growth. As you have seen that many new brands are coming in India. Our Honorable Prime Minister has already launched, along with the British Prime Minister, for this Norton, where TVS Motors has launched, taken over this Norton as a company, and now this Norton is being launched in India and of course for global market. And likewise, since I'm bound by NDA, I can't disclose the name, but that is another major premium motorcycle manufacturer, and if I am correct, they are probably world's one of the largest premium two-wheeler manufacturer. So this is how that premium two-wheeler industry is really set to grow in coming times in a big way. All the Indian OEMs are really focusing on higher cc of engine size with ICE as a basic technology, and segments may range from 250cc, 300cc to up to 1.2 liters. Like Norton has really launched is going to launch a 1.2 liter motorcycle in India. Probably this is going to be the first motorcycle being produced in India for such higher engine size. And likewise, all other OEMs are also doing the same.
Right. As you can see in your revenue split, around 39% of your top line comes in by catering to two-wheeler segment. Given the fact that there are talks of GST rate being cut for two-wheelers that are less than 250cc, any breakup that you could give us or any idea that you could give us how much that can benefit you? How much do you cater to less than 250cc bikes and how much do you cater to more than 350cc bikes?
I wish this, the government's thought process on GST really takes shape for the automotive industry. And if really two-wheelers, because right now two-wheelers are attracting 28% of GST, and now there are talks, I do not know whether it's going to happen, but yes, if it really gets down to 18%, I personally feel this will be a very, very big boost to the automotive industry in two-wheelers, on test cars. Because, I will just give you an example. I was sitting with one of my customer, and customer made one statement that their two-wheeler customer come to a dealership will change the brand or the change the model just for 500 rupees to 1,000 rupees. And if really the customer gets now 10% reduction on GST, I can very well imagine that it's going to be a very, very big boost to the two-wheeler industry. And coming back to our industry, since we are already catering to majority of two-wheeler industries because we have two major customers already, Yamaha and Piaggio. We are already working with them as a single source supplier for many, many other products. Likewise, we are working with TVS for their BMW motorcycles and of course, again, for the premium segment. And this new edition for this Royal Enfield, such this new two-wheeler platform really is going to give us a big boost here.
Mr. Singh, just my final question to you is about the promoter holding that I'm looking at. Like last quarter in March, that was around 51% or so, and that has come around 43%. So just want to understand the shift in terms of the promoter holding which is there.
Yeah, so in fact, if you really see our numbers, we actually organize some preferential allotment for from the primary market for basically raising some fresh equity because gear industry is a very, very capital intensive industry. And although until now we were managing through our borrowings and our debt to equity ratio was really very, very comfortable, but we still felt that it is a time has come where we draw the balance and we should raise some fresh equity by preferential allotment. Because of this, the promoter holding, it is not that we have diluted the shares, but since there was a fresh allotment of equity, so this has come down marginally. And one more thing, our company had equity from government of UP organization called Pickup. So they were also holding equity for last probably about 40 years. So since now company is really growing, so they also wanted to get some advantage of it. So they also diluted some of the equity into a secondary market. So due to these reasons, our promoter holding has come down. But if you really see personally, my own holding or the promoter group, we are maintaining our absolute numbers in the same numbers, and we really plans to increase it further. Yeah.
Okay. Thank you so much, Mr. Singh, for joining and sharing that perspective on the company. So that's our RACL Geotech in focus for you. With that, let me welcome in our guest for today's Chakri Lokpriya, Chief Investment Officer of Equities, LGT Wealth, joins us. Welcome to the show, Mr. Lokpriya. Firstly, I just want to ask about the company's overall outlook. Now, if you have seen FY25, overall muted growth, but the management remains focused on FY26 targets about 15 to 20% growth with margins of over 22%. What's your outlook on the stock?
Sorry, which stock you said?
This is RACL Geotech that we're talking about.
Okay, look, so basically, I think in terms of this company, given the fact, their exposure to the US is very low, that therefore their earnings are protected that way in terms of the next year. And, it'll take probably time for companies, including RACL, to find new markets and penetrate. And given that they're strong in Europe and Japan, they'll find the room to expand their markets further. On the other hand, so that way this company is protected, and, ICE engines will continue to be in demand, given the Trump's shift in policy away from green. And that again is to the benefit of RACL.
Right, another stock that remains in focus is Protean eGov. Now, this is after the company announced 1,160 crore of order win coming in from UIDAI, that is to establish and manage district-level Aadhaar Seva Kendras across 188 districts in India. Now, the contract spans over 6-year time frame, and it covers Aadhaar enrollment, updates and related services through both appointment-based and walk-in models. Now, let's go across to Jasmeet to understand more details about this new order win.
Well, right, yes, thank you for that. Before we go ahead and understand the new order win, let's quickly understand a bit about the company. While company operates in the IT service space where they create a public infrastructure in digital format, while the company was previously known as NSDL e-governance structure. Now, about the order win, company has won an order worth 1100 odd crore, while this order is spread across 6 years. While the order is from Unique Identification Authorities of India, where the order is received from Aadhaar Kendra. this order is to fulfillment of Aadhaar services that would involve walk-in enrollments, updation and other services, and this is spread across 188 districts of service. While if you look at the revenue per year basis, it's 6 years over the term of 1100 odd crores. A bit information about the company. Company had previously lost PAN 2.0 order, which was roughly about 1500 odd crores, and the share had plunged from 1400 odd rupees up until 800 rupees. While today, as we see, the stock has hit the intraday high of 12% already, and this new order one is a positive news for the company. While this is the stock in my radar for the day.
Well, thank you, Jasmeet, for that information on Proteinega. Well, let's move across to our next management on the show today, Mr. D. Balaji, Executive Director with Kingfast Science and Technology. Sir, firstly to start off with, on the fundraise, good afternoon, sir. So, firstly to start off with the fundraise that you have done, what are the plans how do you plan to utilize this funds that you have recently raised, and can you just give us some outlook on the company's growth plans as well?
First of all, we have already finalized the deal with SBI Mutual Fund. Okay, they are investing for 75 crore and another 25 crore from another fund. We have already called for the EGM for shareholders approval. The utilization will mainly go for building the second stage of our plant at Chakan near Pune, which will take around 187 crore. Then simultaneously, we will also be building a separate R&D block and an office and administration building, which will take around 44 crores. We are also looking for a land acquisition in Chennai. We would like to have a latest quality equipment installed at a new plant, which will come up at Chennai. The land alone will be coming to around 42 crore rupees. And for the Chakan and the newly built plant at Bhiwadi, we will be adding more lines. The Chakan second phase plant will have 6 lines, and Bhiwadi will have 7 lines, which will take 102 crores. Apart from that, the general corporate cost will be around 125 crore. That's how the fund is going to be utilized.
Right. And this capital expenditure plans that you have just announced, by when do you expect that to complete, and what is the kind of revenue potential that the company is seeing once the completion has been done?
Whatever the finance is being raised now, they will all get utilized in the year 2026, 27 and 27, 28. By the time these will be utilized, and we will also be enhancing our capacity from 1.82 lakh metric ton per annum to 2.72 lakh metric ton per annum. So that would be sufficient for the next 2 years. Later, again, we will be going for equipping our Chennai plant with the latest machinery. Our plan is to go for 5 lakh metric ton sale by year 2030.
Mr. Balaji, this is Anushi joining in as well. So considering these incremental capacities coming in the next 2 years, 3 years of timeline, just want to understand if you have a guidance in terms of, how the growth is expected to shape up in the next 3 years time frame, or even for FY26.
See, we depend both on auto and non-auto industries. Right now, if you see our market, we are catering to, our products go to 70% to auto industry and 30% to the non-auto industry. We have now made a lot of efforts to gain foothold in the non-auto industry and making inroads into every kind of appliances, home appliances, small appliances, and other industries also. With that, by 2030, we will be making the ratio of auto to non-auto to 60-40. That will really jump our share in automobile as well as non-automobile. Right now, we have a share of around 16% in automobile industry. If you look at the automobile industry, the CAGR of around 10% is what is happening now. But in the next 5 years, we are expecting to grow at around 14 to 15% CAGR, because it is not merely the number of vehicles that matter. We, in addition to the existing components, would also look at metal to plastic changeovers and some of the areas where we were not present earlier. That is expected to bring us more volume in the automobile. Today, we are there in almost all the OEMs of automobile industry in India. And globally, we are present in almost all the countries with all the auto majors. And talking about the auto space, the EV is going to be the future trend. While current share of EV is around 150,000 only in India, it is expected to jump to a significant number. by 2030, around 15 to 20% should be EV. And if you look at Kingfa, we have all the approvals in place for the EV vehicle.
Right.
We are a supplier to the top 5 EV vehicle manufacturers in the world.
Right, sir.
And we're very confident we can horizontally deploy it in India.
Right. How much does how much revenue do you currently get from EVs, and what are you expecting this number to be 2 years down the line, sir?
See, this goes with the trend also. Okay. Right now, we have presence in all the EV manufacturers in India. So with all their products, we are expected to go with all the new programs. So that is going to be sizable. If you look at that overall space, in auto industry itself, as I said, we will jump from 16% share for us to something around 27% share. See, currently, we are selling more than 1 lakh of ton to the automobile industry itself. We expect this to triple by the year 2030. And by around 2028, we will be crossing the 2 lakh metric ton mark.
Balaji, just want to understand, you have about 8% of contribution coming in from exports. Of this, how much does US contribute to the export mix that we are looking at? If there are any sort of challenges, in terms of the tariffs are in place from this particular market?
We have a plant at Detroit, USA. But right now, we export very little to the US. Our current exports are mainly to Thailand, South Africa, and Morocco. So the tariff-related issue is not a concern for us. Rather, it will be given opportunity to keep the supplies happening from India to other countries.
Okay. Thank you so much, Mr. Balaji, for joining and sharing that outlook on the company. So, Kingfa Science and Technology in focus on the back of its plans for FY26. Chakri, let me come to you on this one. You heard the commentary from this as well. It's not a company that comes often on the channel to speak about their outlook. Just want to understand from you, what's your overall take on this one?
Yeah, from hearing what they say, from an industry perspective, lightweighting of the automotive industry and other industries is an important trend. And there, plastic components play an important role where Kingfa is a fairly decent player. And, they're also fortunate the fact that they don't have US presence. And, lightweighting becomes even more important once the EV segment starts growing further, and their penetration component would increase accordingly. So given the fact that, they're well capitalized and they're raising some capital, should place them there.
Right. Well, thank you, sir. Thank you for joining us and giving us your perspective on the stocks that were discussed. Well, with that, it's a wrap on this edition of Small Cap Buzzers. Stay tuned and keep watching NDTV Profit.
Tech has changed. So should your tech show.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Tech has changed. So should your tech show.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time,
You're watching India Market Close here at NDTV Profit. I am Mahima Vachajani. With me is Neera Shah and her Saita. Let's take a quick look as to how the markets are doing. Clearly, well, markets are not cheering the move that was, made by the US government, and that's the draft order indicating that from tomorrow, India will attract a 50% tariff. As of now, there are no announcements whether that will actually be retracted or not. So, as of now, from 27th of August, India will be attracting 50% tariff on any exports made, and that is something that the markets are kind of penciling in right now. The wall of worry right now is Trump tariff, and on that note, the Nifty 50 is down by about 0.6%, testing that 24,800 levels. The Bank Nifty also in the red, down by about 1%. Testing the around 54,000 odd levels. Let's try to take a look at the Nifty heat map and see what counters exactly are doing. Some counters, especially the consumption names, that are the defensive names, doing fairly well. HUL, Eicher Motors, Maruti, Nestle, Hero MotoCorp. Eicher leading the pack with about 3.5% of gains. HUL leading the second in the line, up by about 2.6%. But counters that are not doing well include Sun Pharma, which is down by about 3.3%. Shriram Finance down 3%, Tata Steel, Bajaj Finance, Adani Ports, Indocent, Trent, BEL, all counters in the red and down by about 1.5 to 2%. Let's try to take a look at the sectoral heat map and see how sectors are doing well. Some counters in the green includes your consumption again here, because Nifty FMCG gains about 1.2%, Nifty Auto also gaining about 0.4%, but clearly the Nifty Defense is where the pain is actually. It's down by about 2%. Nifty Realty also down by about 2%. The healthcare, pharma space also not doing well on the back of the tariff worry. There's consumer durables, which is down by about 1.3%. Metals also seeing profit booking, as well as banks not doing very well, both PSU as well as private banks. So that's with regards to where the sectoral heat map is concerned. Let's try to pull up the advanced decline ratio, because that will tell you a picture as to how the broader markets are doing, and the graph has been widening throughout the day. There's right now 1,700 odd advances versus that of 550 odd declines versus that
advances.
The optimism in me is trying to gauge that. No, maybe that's the correct picture, but
maybe that happens on Thursday, Mahima.
Yeah, on Thursday maybe. But yeah, before that, let's try to pull up the India VIX as well, because that will tell you as to how the volatile market is today. There you go. Right now it's cooled off a tad bit, but at a given point in the day it was almost up 4%, and that indicates the kind of volatility that we are seeing in the markets. So that's with regards to the benchmark, as to where the benchmarks stand, but the broader markets clearly under pressure as well.
Yes, it is, and the advanced decline suggests so. Let's pull up the Nifty mid cap, and that will show what I'm talking about, 1% lower on the Nifty mid cap. So there's an underperformance which is visible over there, and it's been that way all through the day. So we are not seeing any sign of a recovery. That's one of the problems. The other piece is, of course, the Nifty small cap. Let's pull that one up, 1.3%. Very similar kind of a chart structure there as well. So not seeing any kind of recovery on the broader market benchmarks. Now let me talk about the BSE 500 top gainers, top losers. Of course, there are some big movers. KSB is up 10%. Britannia 2, Sheila Foam also buzzing, and Eicher Motors also up around 4%. But look at some of the losers, some big losers out there: a Swan Energy, a Rallis, a JK Paper, a KPR, and a Vodafone Idea. And some of these are ones which have really fallen sharply from the day's high. And I want to pull out those stocks. Let me first start off with something like a Karur Vysya. All good with regard to that adjustment, but we've seen a sharp fall in the stock price since the morning. It started at around 220 or almost 230 rupees a piece. It's currently at 215. Mind you, Karur Vysya has just undergone a bonus, a 1:5 bonus. That is 1 share for every 5 shares held. So that adjustment has happened yesterday, and that's already built into the price and the graph that you're seeing. So Karur Vysya in focus. Vodafone is the other one which has fallen sharply from the highs. This one has been one which has been quite volatile. The third one is KPR Mills. It featured on that list of top gainers, top losers on the BSE 500, and that one too has fallen sharply from the day's high. So we've seen these three as the top losers. Gains from the low: KSB, a Ratan India, a Sona BLW, and an Imami. Those are the ones which have seen sharp recoveries from the low. A KSB is there, an Imami is there, a Sona BLW, there you go. Really nice recovery from the lows of the day. And Ratan India, that's the fourth one on my list. And on volume, some of these, a KSB, a Ratan India, and a Linde India, also buzzing on the back of strong volumes. Neeraj, over to you.
Yeah, defending 24,800, I think that's the best way to put it. The question only is, can we build on from there, or will we have some bit of further pressure? Remember, volatility as well is kind of very, very flattish. It's not like really succumb to selling. The interesting piece is the globally exposed sector, which is IT, is down 0.5%, but banks are down about 1%. Let's get in our experts on the show to try and understand what to do in a scenario like this, because I think it'll be important, more importantly than anything else, to try and figure out if there is indeed merit in taking an exposure right now, or you wait for the time being. Tomorrow is a holiday for Indian markets, but the global markets are on. Don't be a braveheart. Don't go out and make very large trades at the current point of time, simply because the trade could completely unravel in the next 24 to 48 hours. What if, I ask you viewers, what if there is some bit of resolution between now and 9:30 a.m. tomorrow? So I think lots can happen, right? So let's wait and watch. Okay, but remember, while the tariff piece is on,
Sorry Neeraj for interrupting. Love the optimism though.
That's what bull markets are built on, right?
Absolutely.
Simple. Okay, but the optimism also stems from the fact that the government has done a lot now in the last few days to try and tackle this. And as the festive season kicks in and the GST reforms are about to be announced, well, I think one of our colleagues had a nice visit to Vijay Sales and a conversation with Nilesh Gupta, the director of Vijay Sales, on how he's gearing up for the festivities. What did he say?
I think the key takeaway for me was that he said that from last year's base, which was already a high base when it comes to festive sales, they are expecting a growth of 15 to 20%
post-GST.
Post-GST. And he said that if this comes into play on 22nd of September, that is first day of Navratri itself, he is very optimistic that this 15 to 20% will grow through. And I think that was the key takeaway of what he told me. In fact, listen to what he had to say himself. Today, we are at a very special location. We are at Vijay Sales store talking about the new GST reforms and the boost in consumption that is to follow, and of course the festive demand and how are the sales looking like. And to discuss as to how things are faring at Vijay Sales, we are joined by Nilesh Gupta, who is the director at Vijay Sales, joining us now. Always a pleasure speaking with you, Mr. Gupta.
Thank you for having me here.
My first question to you is that, I want to understand that with regards to this new GST reform that we are talking about, where GST will come from 28 to that 18% mark for ACs, plus your 32 plus inches TVs as well as dishwashers. How is the industry viewing this, and how is this move being welcomed by the industry?
So I think the industry is viewing this as a Diwali gift by the government. Definitely, both the categories are very important.
Yeah.
The 32 plus televisions as well as the air conditioners.
Right.
And especially in the light of the air conditioning summer season not doing so well because of the rains, erratic rains, I think this is going to be a real breather for us. and it will definitely boost the sales.
In terms of the overall view as well, from a Vijay sales point of view, from a retailer point of view, how do you think that this consumption boost, it's not just GST alone. There's lots happening that the government is in fact doing to boost the consumption, right? There was income tax cut, there was also rate cuts that's come in, there's 8th pay that's going to come in, plus this new GST reform. Lots, done by the government to boost the consumption. How do you think this will incrementally benefit Vijay sales? If you can give us a perspective in terms of percentage as to what growth can come in from this consumption boost.
So what we are seeing is already the income tax rate cuts which were announced in the finance budget has translated into extraordinary sales for us. So the sales have gone up, and we are already seeing, in spite of a poor summer, we are already seeing a growth of around 10 to 12%, which otherwise would not have been possible. And now with this GST cut coming in, the positivity all around happening in the country, and the very fact that we are able to stand on our own irrespective of what's happening outside, I think it's a very positive impact. And in consumer durables especially, what matters most is not whether the consumer has money or not, but what matters is sentiments. So right now the consumer sentiment is up, plus he has money in the pocket. So it's a double whammy. So we expect a real good sales to begin once the GST sets in.
Got it. The expectations earlier were that this announcement will come pre-Diwali in October. But now there are talks around that indicate that it will come on the first day of Navratri, that is 22nd of September. I believe this is a welcoming move again, because if it were to happen in October, a lot of sales could have been deferred and that would impact your Q2. Is that reading correct?
You are bang on. Had it come in October, because the Diwali sales begin from first day of Navratra. And then people are waited, especially those who are going to plan to buy larger size TVs and air conditioners. But since it's expected on the first day of Navratri, I think it will be a double whammy. Again, season plus price cut, plus the offers which the brands are going to give, which they give every Diwali, the retailers offers. I think this year we are looking at a bumper Diwali.
Absolutely. But in case this doesn't happen in Navratri and maybe pushes to Diwali, how do you plan to manage your inventory? Because I believe that you will have to, if it doesn't come in September, you will have an inventory overload and might have some costing impact for a month or two.
So I think costing impact of the inventory will not be there, because your input you are going to take whatever you are going to pay to the brands, and the output will be there, and the difference is going to be passed on to the consumer. So I think from cost impact to the retailers or to the distributor will not matter. So nobody is going to stop taking the inventory because in case there's a delay. But we hope that it comes on the first day of Navratri.
Absolutely. And from the first reading of it, since Ganesh Chaturthi starts tomorrow, how is the festive demand overall looking like? What is the first customer sentiment that has come in so far?
It's a very positive customer sentiment. And as I said, in spite of a poor summer, we're seeing a growth of 10%, which is very good. So I think consumer sentiment is high, the festive spirits are high, and we expect real good.
Well, that's on the consumer durable side of things. But with tariff coming into effect tomorrow, auto and auto ancillaries also in the line of fire. With the highest US exposure, here's Somit with the list of sectors that may get affected and stocks, of course. Somit.
Well, yes, US is one of the largest trading partners for India. Now, if you look at FY25, India exported goods worth nearly $86.5 billion to the US market, which is nearly 2.2% of India's GDP. Now, do remember that not everything that India has been exporting to the US market comes under the 50% tariff category. That 50% tariff category is applicable only on the 67% of the India's export to the US market. Now that translates to around 58% of $58 billion, which is nearly 1.5% of the GDP, and the remaining are the sectors that come under Section 232, and some of them are also exempt. Now theoretically, if you look at the products that come under the, theoretically if you look at the 50% tariff is expected to impact nearly 70 to 80 basis points of the GDP growth as per analysts, and the categories that are exempted are nearly are auto, some of the auto ancillaries, some electronic items which includes chips, mobile, some metal products, some copper and its byproduct as well. Now let's look at the sectors that stand to get impacted. The most auto and auto ancillaries have the highest exposure to the US market. Samvardhana Motherson, Balkrishna Tyres, Sansera Engineering, Apollo Tyres have US exposure of close to 3 to 18%. Apart from that, if you look at chemical stocks, those have exposure. UPL 20 to 25% of its revenue comes from the US market, SRF 20%, Jubilant Ingrevia 9%. But apart from this, there are multiple other companies that have a large exposure to the US market. To name a few, it's Aarti Industries, PI Industries, Atul, Navin Florent, Deepak Fertilizer, Gujarat Fluoro, SRF, Vinati Organics and Alkylamines as well. Apart from that, it's the textile sector that could get impacted the most because US accounts for nearly 28% of India's textile exports. And the companies that have the highest exposure to the US market, firstly it's Welspun Living with 63% exposure, Trident 38% exposure, KPR Mill 19% exposure, Alok Industries, Himmat Singha and Arvind have an exposure of anywhere between 37 to 83%. Then there are shrimp exporters and shrimp feed exporters that also get impacted. Avanti Feeds has a revenue exposure of 14%, Apex Frozen and Waterbase has a revenue exposure of anywhere between 40 to 63%. When it comes to consumer companies, very few of them have an exposure. Some rice exporters like LT Foods and KRBL have an exposure of anywhere between 10 to 39%. Tata Consumer has an exposure of close to 12%. When it comes to new energy companies, no impact largely on utilities and renewable energy developers, but some impact we could see on solar PV cell module companies because Vari Energies is one of the companies which has nearly 57% of its order book coming in from the US market, while Premier Energies just has 1% of its order book coming from the US market, but they had plans to expand in the US market, so that could get impacted going forward. And lastly, when it comes to the oil and gas space, no direct impact, but India currently sources around 35 to 40% of its crude requirement from Russia. And if they plan to change that, then the crude cost could increase by around $1.5 to $2 per barrel. And this increase in crude cost will directly impact the marketing margins of Reliance Industries and OMCs. Now, if you look at the EPS or the EBITDA impact for Reliance Industries on a consolidated level, it could be around 3%. For oil marketing companies, it could be around 10% because every $1 rise in crude oil prices impacts the marketing margin by around 0.5 rupees per liter for the oil marketing companies. But there are a host of other sectors that stand to not get impacted at all because of this Trump tariff, and those are the domestic focused companies, sectors like FMCG, telecom, real estate. Nearly 95% or more of their revenue comes in from the domestic market. IT services again does not get impacted because of Trump tariffs. Apart from that, there are sectors like capital goods, insurance, bank, power and steel companies which have most of their revenue coming in from the domestic market, and hence they do not stand to get impacted from the Trump tariffs.
Okay, important ones, and thanks so much for bringing us those details, Somit. Let's get in an expert voice to try and understand what to do in a scenario like this. What is it that they in their portfolios are doing? Manish Sonthalia, Director and Chief Investment Officer at MK Investment Managers, with us on the show. Manish, always good talking to you, and you know this, but thanks for taking the time out, especially today, because it's interesting that we are now on the cusp of the tariffs possibly coming in. The US has notified that they take shape and form unless something changes in the next, 18 odd hours. What does it mean for the markets?
So, Neeraj, the tariff of 50% has been digested by the markets with today's correction. It's an event which has basically played out. As you have rightly said, $86 billion, out of which $60 billion will likely get impacted, the rest being exempt. These are certain pockets which are likely to get impacted for till the point in time you have this 50% tariff. Now, the moot point is how long can this last? And you have to make some presumptions out here. I would believe that, US has a lot of investments into India. And this 50% tariffs mean that basically it is a sanction. And all of these guys are likely not to export anything with 50% tariffs. And by and large, if they have to absorb the entire 50% or even 25%, basically the margins are not going to come through. So particularly textiles, etc., they operate at single-digit margins. And if the buyer asks you to absorb 25% of this 50% tariff, obviously you can't run your business in a loss. Similarly for other sectors. So all in all, I would like to believe that this number of 50% will get whittled down somewhere down the line. You don't know when. but likely in the next 3 to 4 months to anywhere between what other countries are paying, by and large 15 to 20%. And electronics, pharma, specialty chemicals, these are some of the areas where a lot of exports go to the US. And mind you, there are going to be shortages, and supply chain cannot be really catered to on the alternative side in a hurry. And so I would believe that from a market point of view, nothing much to worry about. Assume that $60 billion, half of that will get whittled down in terms of impact. $35 billion will have to find a new market. Government will do its bit in terms of helping the exports to other markets. RBI will do its bit in terms of lowering further rates, enhancing liquidity, and that is how this whole mitigation of the tariffs is likely to play out. As it is 1.5 to 2% on GDP, the growth rate 50 basis point will be taken care of by incentives given by the government and the central bank. So I would believe it is a buy on dip market, buy at 25,000. There's nothing much to lose on the downside.
Okay, Mr. Manish, hi, Mahima also joining in. Just want to understand, considering the kind of year-to-date performance that, we've seen in terms of the benchmarks as well as the broader markets, what are you suggesting your clients right now to do? Are you keeping dry powder right now to maybe, see the right point to enter? Or are you deploying your money? And if yes, where are you deploying it?
So don't look at the broader markets index per se. Focus on individual stocks. That's the best way to go about it. I think if you look at the headline indices this year plus next year, average should be around 10% growth. And you couldn't give a better multiple than 22, 23 times on a 1 year forward basis, given the anemic earnings growth of 10 to 12%. Broader markets, again, the Nifty 150 mid cap, or it's in NSE small cap 250. You have to buy the 25, 30 odd stocks. There are ample stocks which are growing at 25 to 50%. There are also stocks which are growing negative. It's a pick and choose sort of a market. Focus on domestic themes. 77% of India is basically domestic. We produce and consume assets. Some of the areas like pharma, CDMO, etc., we have a right to win. IT probably has seen the worst. Real estate is swimming in the economy is swimming in liquidity. Credit demand in the system is not that adequate given the low cost of capital. Will find its way into speculative demand. So real estate, capital markets, all in all, these are NBFCs to say the least, and public sector banks. Now the private sector banks, because this quarter, first quarter, we've seen a bit of stress building onto lending financials balance sheet. MFI in any case was a worry. You still have another 2 quarters to go, for the full provision to come through. So there are certain pockets which look okay. Valuations is something which one needs to keep an eye for. This is the only big worry in the market. Not everything is viable, not everything is sellable. I think if we stick to reasonable price earnings growth multiple, given that markets today are trading at 2 times price earnings growth, there's ample room to pick and choose.
Got it. Manish, Harsh joining in. If I were to venture more towards IT and try and understand what it is that is in store for the IT sector and the space as a whole, there's just so many moving parts. So trying to understand possibly 25, maybe even a 50 basis point rate cut, would that be enough sufficient to drive the sector earnings and growth? Would that make a comeback likely in the next year?
So basically, the mid-tier IT companies are likely to fare better than large-cap IT companies because the buzzword is today AI disrupting jobs. And, large-cap IT companies are hiring maybe 500,000 or thereabouts sort of employees, and all of them are not reskillable. Because if AI is to disrupt segments of the IT, then people needs to be retrained. This is more doable in the mid-cap IT names. They would be more nimble-footed. And from that point of view, mid-tier IT companies' growth should be better than large-cap IT companies' growth. Not to say the least that order book positions for both large-cap and mid-cap IT companies are swelling. It's just that execution has been in a limbo for some time due to the slowdown issues facing the developed markets. but valuations at the same time have corrected significantly. And I think from this point of view, from looking at this lens, we think that there is ample margin of safety in the IT names. Whatever correction had to happen has already happened. And given that on a 1 year forward basis, these are trading at lower than historical valuations, are we venturing out more in favor of mid-tier IT companies than low-tier?
Manish, one final question. You attended a clutch of investor conferences, I presume. It is still the conference season. What has stood out? Last year, you had told us about the recycling theme, if you will. What has stood out this year?
Consumption. If you speak to entrepreneurs and, the conferences that we attended, ask one simple question: what do you make of the tariffs? He said that, everybody is gung-ho on the domestic market per se, more so after, our Prime Minister has announced the GST rate cuts. I would believe that consumption is going to come back big time. Last few years, especially post-pandemic, it is all about investment-related themes, right? Whether it be power, whether it be renewables, whether it be defense, railways, capital goods, valuations have gotten very full. This time around, the heavy lifting of growth for the economy, that 6% or 5.5%, given the impact of tariffs, will be done by consumption. Last 2-3 years, consumption has not done well because of very high inflation, very high taxes. That is moving at the margin in favor of the middle class. So all middle class related consumer is likely not only to see earnings boost, but also valuation re-rate. So from that point of view, automobiles, we already started seeing re-rating, fast fashion, QSRs, leisure, travel, hotels, a whole lot of them, health insurance. Some of these areas, the conferences, people and managements are quite optimistic.
Okay, Mr. Sondalia, thank you so much for giving us those insights, and clearly consumption is a theme to play, and the markets are cheering that today as well. The defensive play is doing its role. Thank you so much for taking out the time and speaking with us at NDTV Profit. Let's shift focus. Key ministers are likely to meet PMO at 3 p.m. ahead of the 50% tariff hit. Rishabh joins us with more details on that. Rishabh, what is the agenda?
Right, the main agenda of this meeting is expected to be a review of the export promotion mission that was actually announced in the budget in February and hasn't been launched yet. But what we're hearing is that it could be launched with a 25,000 crore rupee outlay. Now, remember, this comes with two sub-schemes. One is Niryat Protsahan and one is Niryat Disha. Under Niryat Protsahan, the main vessel of support for exporters will be export credit finance. That is number one. And under Niryat Disha, you have targeted support for export compliance, for diversifying to newer geographies, branding, marketing. You have trade promotion stuff coming under Niryat Disha. So about 10,000 crores is what we're hearing has been assigned for Niryat Protsahan, about 14,500 crore rupees for Niryat Disha. This export promotion mission is awaiting clearance. It is currently with a panel within the finance ministry, the expenditure panel. They are going through it, and it will continue. Then it will move to the cabinet for approval for a faster rollout. So that is what we're picking up in terms of this key meeting today.
All right, Rishabh, thank you so much for giving us those updates. We'll keep a close track on that story as well. Now, time to look at the stock of the day. Vodafone Idea in focus. The stock has cracked after the news around AGR dues. My colleague Soumit joins us with more details and the kind of moves that the stock is seen today and what's the cause.
Well, if you look at Vodafone Idea share prices on intraday basis, the stock was down nearly 11%, which is the biggest move that we have seen since May 19, 2025. Now, why this move we have seen in Vodafone Idea? Because earlier, in fact, last week, Thursday, Friday, there was this news report which suggested that company might get in some relief on the AGR dues, but yesterday or today's PTI report does indicate that Department of Telecommunication is not contemplating any such AGR relief to Vodafone Idea, and that's the main reason why the stock is down 11% in trade. Now, why this relief was very important for the company? Because this AGR dues needs to be company needs to start repaying this AGR dues from FY26, and if you look at the amount that the company needs to now pay, if you calculate the spectrum and the AGR dues, that amount stands at close to 19,000 crore rupees. That is the amount that they have to pay at the end of FY26, a total of spectrum and the AGR dues that the company needs to pay. Now, if you compare this to the cash EBITDA that the company generates, is just 11,300 crore rupees. So it clearly shows that the company might not be able to pay this spectrum and AGR dues by the end of FY26. So hence this was quite important. Apart from that, if you even look at the fact that the company has been trying to raise debt from the bank, but it has not been able to do so, and that has also led to more losses for the company so far, because the company has not been able to conduct more capital expenditure, and less capital expenditure has also led to lower network upgradation, which has impacted the company's subscriber and the market share as well. If you look at since FY18, the company has lost close to 22 crore subscribers, and the market share loss has been nearly 24 percentage points. On the financial side, if you look at, the company has been reporting losses for 30 consecutive quarters, and the cumulative loss amount is more than 2.1 lakh crore rupees. Now, because of this drop in the share price of Vodafone Idea, even Indus Towers has been falling because it has a collateral damage that has been happening, because Indus Towers gets nearly 1/3 of its revenue from Vodafone Idea, and any lower capital expenditure or less funding coming into Vodafone Idea will indirectly impact Indus Towers as well.
Okay. Thank you for that, Somit. Thanks for breaking that down for us, both with regard to Vodafone as well as the bit with regard to Indus Towers. Piyush Pandey, telecom analyst, Centrum Broking, joining us on exactly this. Piyush, what do you make of it? And as an investor of Vodafone, what should one do? Because one day the stock is flying, and the other day you have another negative announcement which is keeping a lid with regard to the way the stock has actually reacted the previous day. So how should one look at Vodafone very, very objectively?
See, it has become sort of like a speculative stock. So I would say, despite Q1 being a relatively better quarter, the concerns remain, like concerns regarding loss of customer base, debt remains very high, and also like they need to do a significant part of the 4G and 5G capex. So the company requires some relief from the government. Also, they need to raise funds from the banks and other investors to complete the remaining part of the capex program. And so as such, I would say they have made certain good positives in the first quarter, but challenges remain. And I would say, in the absence of a near-term fundraise, along with some help from the government, the situation remains somewhat precarious. So it's sort of like I would say, more of a speculation is involved, and it might be even best if it gets relief from the government. Then the stock can do well. If it doesn't happen, then it might just remain at current rupees 7 to 8 levels. So fundamentally, I would say the sector has become sort of like a duopoly with Bharti Airtel and Jio, and Vodafone is sort of struggling, losing markets here. So it's just like a duopoly where two players gain markets here, and they have the pricing power. So now you are seeing in a sector-wise better ARPUs and the
right.
Yeah.
So if you look at Vodafone Idea, there have been a couple of rounds of fundraise, one in 2019, one in 2024, I believe, and 2023. Apart from that, there have been multiple rounds of debt conversion into equity. But despite all this coming in, the company has not been able to turn around, has not been able to gain subscriber base. So what is that one factor that Vodafone Idea would need for a turnaround going forward?
Yeah, of course, there has been multiple rounds of fundraise as well as debt equity conversion. But in fact, I would say this was the last Q1 was sort of where some sort of positives were seen, like where the churn drastically reduced and company was able to add a reasonably good number of 4G and postpaid customers. So I would say that the company has reached a stage where I would say any significant fundraise and any help can materially change its condition. Like, so 2 to 3 years ago, I would say the gap was significantly much larger between our top two players in Vodafone. But now I would say they have launched 5G in say 13 circles, plus quality of the network has improved. So I would say the time is, time is right when any sort of help to Vodafone Idea can really help it to, I would say, emerge as a somewhat stronger player.
Well, sir, shifting focus from Vodafone Idea to Industars. Now, one of the other major overhang on Industar, apart from Vodafone Idea, is the fact that they have yet to announce that dividend. So, what is your internal estimates suggesting? By when can the company announce their dividend policy, or will they go ahead with some other form of cash utilization policy? Can there be a acquisition as well?
See, I think currently in the tower industry, we have just two big players. Like say, one is like say Indus, and other is like say Brookfield. And the sense is that like say Indus might look to acquire some of the smaller players in the industry. Like so, industry has roughly 6-7 material players. So out of which Indus might look to acquire, and with scale, they can get a better pricing power. So I would say near term, it makes more sense for Indus to acquire smaller players, build a scale, get some pricing power, and then they might announce a dividends. It looks like more probably towards the end of FY26.
Piyush, in terms of the triggers for the sector going forward, other than tariff hike, any other triggers that you think that can augur growth?
See, tariff hike is one thing which is very likely because you have just two big players. And also I would say, like say, we are seeing more traction in the case of home broadband. So home broadband 5G FWA, where last quarter, in fact, both Jio and Airtel added significant number of players, and that area still looks, I would say, somewhat underpenetrated. So it provides another room for growth in terms of customer addition. So apart from that, you would see like say 2G to 4G migration, and in fact over the last few quarters, postpaid addition also improved. Like so, you are seeing better postpaid addition for Bharti as well as for Vodafone also last quarter. So these are some of the organic triggers. So besides tariff hike is likely. So it makes more sense for the industry to somewhat change the pricing structure. Like so, in the next round, it is very likely that industry might see tariff hike at the upper levels of plans, and some of the voice only plans and lower levels. The increase might be very, very minimal, but at the top range, you might see significant increase, because this has been the argument of both Bharti and Vodafone that pricing structure is somewhat distorted in India, and where people who are consuming at a much higher rate, they are somewhat underpaying. So the range of prices in terms of minimum and the maximum, that range has to be increased. Where people, especially voice only plans, they might remain.
Noted.
Their pricing only, like say, increase will be minimal. For people who are consuming 30-40 GB per month, I think they might see more increase in percentage terms.
Got it. Okay. Piyush, thanks so much for giving us those updates. Really appreciate your time.
Thank you.
That's the view on telcos, Jio versus Airtel, if you can call that battle. And is there a battle versus bulls and bears in the last 1 hour of trade left? Well, what are dealing rooms saying about that battle? Sumit Sarkar Johnson with all the chatter from the dealing room. Sumit, what are you hearing?
Well, multiple stocks remain in focus. Firstly, Edelweiss that we saw today, a big block deal happen around 64.5 million shares, or 6.43 million shares changed hands in the pre-open window, and dealers are indicating that the promoter Rashesh Shah might have sold some of his stake here, and the buyers could be one of the buyers could be a Bacchus fund as well. So keep an eye out for that. The block deal data would be important to watch out here. Aptus Value and Translate Lighting is also in focus. Dealers are indicating that there's a buzz of a potential block deal that could happen very soon in both the counters. For Hubtown, dealers indicate that the company might announce a fundraise via preferential issue, as multiple HNIs and PMS have given their commitment for this fundraise. So keep an eye out for Hubtown as well. For Nazara Tech, the stock has fallen nearly 30% owing to the news regarding the gaming sector. But now the street believes, in fact large HNIs and PMSs believe that the selling is largely over, and there is value buy when it comes to Nazara Tech, and hence there's some buying interest that we're seeing in Nazara Tech in trade today. And lastly, when it comes to Sai Life, TPG completely exited via block deal today, and what I'm picking up from dealing room is the fact that 50% of the block was bought by long-only funds, and few of the prominent buyers of this block was our Invesco Mutual Fund, Axis Mutual Fund, Bandhan, and Goldman Sachs AMC.
Somit, just one quick follow-up here on two stocks. One, typically clean-out trades lead to a stock moving up. In Sai Life's case, that's not happening. Why is that the case? Are dealers saying anything about that effect?
Well, just 50% of the book was actually bought by long-only funds. Well, the
So
remaining
that's the only
50%
reason.
is by most likely hedging companies. So that could be one of the reasons why the stock didn't react the way it should have reacted.
Any thoughts that dealing rooms have around Uptown? Simply because it's a stock that has been in existence for a really long time. I heard you say that multiple HNIs have given commitments. There has to be some very strong reasons for that to happen.
Well, I actually do not know what's the kind of upside that could come in on the stock.
No, forget the upside, but
what
are
is
the
kind
reasons?
of growth plans they have. But what I'm picking up is that existing HNIs who are already invested in the company have also given their commitments to invest, and the fundraise could likely be happen at a higher rate is what the dealers are indicating. But then this has been in news for quite a while that there might be some fundraise. Now the news is that there could be a preferential issue, and they have already spoken to a few investors. So that is important to watch out. But I do not know what are the growth plans here for the company.
Got it. Okay. But Somit, thanks for bringing all of those updates. Really appreciate your time. Let's put some of these questions before we get in the market-wide conversation going. Kush Bora, Vineet Bolinjkar join in. Gentlemen, thanks so much for taking the time out. Kush, I know you look at a lot of things that Somit says very, very attentively. For 3 or 4 very interesting names today. What did you make of any of them?
Sure. Hi, Neeraj. I think first of all, very good afternoon to and wishes of Ganesh Chaturthi to you and to all the viewers.
To you as well.
A couple of names that do actually stand out for me. First one is actually Transrail. This one's actually been consolidating for some time. The downtick is on fairly low volume support near the 20-day moving average. I would keep this on my radar for a sharp up move, in the coming days. The other interesting stock is Uptown. While you were, conversing with Somit, I actually happened to look at the monthly chart, for Uptown. And the last 3 months, the stock has more than doubled, and the volumes have been staggering. So definitely there is some accumulation going on in Uptown. So definitely want to be kept on the radar. And as a contra buy, and in fact, something even that Somit mentioned is Nazara Tech, deeply oversold now. I think the selling seems to be coming to an end. At least the volumes on the downside have actually stemmed 200-day moving average support kicking in. So this could see a rebound, maybe not a V-shaped recovery, but at least, if you want to start initiating some sort of, a buy, Nazara at these levels does make like an interesting, entry point from here.
Okay, all right, that's an interesting one. Nazara makes a good entry point right now, as the view Kush has. But with that, it's time to slip into a very short break. But before we slip into a quick break, let's hear Maruti Suzuki's chairman, R.C. Bhargava, talking about scaling up EV production and demand in the segment. Listen.
So the scaling up is essentially going to depend on how much demand grows. We are using one line of the plant. One line normally has a capacity of 250,000. How much of that we will use will depend on demand, and can scale it up if the demand grows adequately. Even announced domestic sales.
Yes, that's right.
Domestic sales still to be announced yet. Till that time, all that is going to get produced will be exported. Globally, what is happening, what we have seen, is that whether it's the United States or whether it is all the major European countries, Germany, France, UK, Spain, Italy, or it is now even China, EVs and hybrids are both selling, with hybrids being slightly ahead in all these countries except China. China EVs are ahead of hybrids. But in recent couple of years, even in China, the hybrid sales have accelerated substantially. So the picture as it looks globally is that there are customers who prefer EVs and there are customers who prefer hybrids. The government seems to be pretty neutral in all these countries. because the tax rate, again, except China, between EVs and hybrids is very similar in the USA, in these European countries, and Japan, of course, is mostly hybrid.
Tech has changed. So should your tech show.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Tech has changed. So should your tech show.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up
Welcome back. Thanks for staying with us on India Market Close. I want to quickly go across to Kush. Kush, your picks for this afternoon?
Sure, Harsh. I've got two long calls. One is Dalmia Bharat. The stock seems to be holding ground. It has been consolidating with some positive bias, interesting volume moves on this one. Not very big, but still, about 20 days moving average. So that's also a healthy sign. 2390, 2435 are the targets. 2300 is the stop loss. CG Power is one stock that had held the ground for the most part in the slip that the market gave in the last few minutes. It slipped into the red, but it's still consolidating above the 50-day moving average. So can still be considered on the long side. The volumes on the downside aren't really as big. So I do believe that the relative strength is apparent on the CG Power. 690, 700 are your targets, and 670 is where you place that stop loss.
So that's the day coming in. Vineet, very, very quickly on some of the power financiers. Do you have a view? Because we've seen a bit of a slip on both of those power financing stocks. I'm not sure whether we're seeing that same move on IREDA, but Vineet, your take?
I think IREDA is extremely overvalued according to me, but the other two stocks definitely are a good stock to buy into. I like both REC and PFC.
Between the two, Vineet?
Both of them, because one is the parent of the other, right? So both of them are good to go with. Great dividend yield plays and have got a long runway of growth ahead of them. Right?
Okay. So watch out for those. Vineet, just wondering, are you cautious right now or are you constructive?
I'm constructively cautious. So continue to remain skeptical of this bull market. I think as we spoke last time, the credit event is very near now in the US. Their balance sheet is just out of, has got a lot of stress. They need to fund it. And Trump has gone berserk with all his actions and none of them are yielding result. So I think they're going to go in for a hard landing instead of a soft landing. Inflation is going to go through the roof. And that is going to be a tell on interest rates all over the world. So I think, we will see the equity risk premium, contract. And to add to that, we need to get our export house in order because of the tariffs. So long way to go. A lot of headwinds to pass. So, remain constructively negative on the markets.
Well, okay, thanks for that, Vineet. And Kush, we'll come to you in a moment. We want your market view as well. But we have 5 minutes with Jonathan Shizel. He's Deputy CIO, Westminster Asset Management and Johnson right now on the show. Jonathan, thanks so much for joining in. The ask of having you today or having your opinion today is because as things stand, there is additional 25% tariffs on India coming on in the next less than 24 hours. Now, do you think this has been baked in, or do you reckon this can have ramifications for Indian equity markets?
No, I think, good morning, hi there. It's hard to believe, looking at where the indices are, that the additional tariffs is baked in, to be honest. Yes, we all know India is primarily a domestic-focused economy, and the impact will be hard in certain sectors, but broadly speaking, I guess India will be impacted than more export-orientated economies. But yeah, I think your point's a valid one. I don't think it is baked in. I think there is still a certain degree of hope that something will be agreed before the deadline.
Yeah. So should that not be the case, Jonathan, you suspect that there is downside here. Would it be market-wide, or would you believe that investors might make an exception to the domestic-facing sectors and, maybe punish the export-oriented ones? Or would you believe it will be a lower tide which will carry all boats along with it?
I think probably initially you might get some India-focused selling. I think we've seen, the index, we're not at all-time highs. The index has been struggling a little bit of late. So I guess we've seen some of that. You might see a little bit more, but absolutely agree with you. I think the India-focused players might switch to more domestically focused industries and away from the exporters. But, if you look at tech stocks and some of the other sectors, they've already been in a pretty miserable place for some time. So you could argue that there is some negativity beginning to be priced in.
Jonathan, Harsh here. Give us your perspective. FIs have been consistent sellers. What's it going to take to tilt the scales?
Yeah, I think the macro actually is looking pretty good in India. I think the issue has come, India just had done so well compared to China over the last 5 or so years. And obviously Chinese markets have been roaring ahead. And you've just seen money coming out of India to chase that up. How long that can go on, I don't know. I think China still looks pretty cheap. So it probably can go on for a little bit longer. ultimately, with the dollar weakening off, it's good for the entire complex. So, I still think there will be passive money coming into India. But that said, the India growth story still looks pretty good to us. Yes, this wobble with tariffs creates uncertainty. But it's at the end of the day, we're not too far off the highs. We shouldn't get too negative.
And Jonathan, how are global markets, bond yields tying into everything that's happening? Give us that perspective. Rate cuts on the annual as well. So how should one look at it? Where is the risk reward more balanced? What are asset classes you're looking at?
Yeah, I think it's tough at the moment. I guess a lot of people are worrying. They listened to the Fed governor's speech at Jackson Hole, and they've assumed we've got a whole bunch of interest rate cuts coming, ahead. They've begun to question that over the last day, maybe after the initial reaction. But I think probably markets are a little bit too optimistic for the rate cut expectations out of the Fed. Maybe we'll get one and then a long pause. But clearly at the moment, everybody still is focused on what Trump is doing with the Federal Reserve and clearly the balance of that particular committee with some of the actions he's taken overnight. And that is what is leading to a lot of questions from investors' minds. And, clearly, if the Federal Reserve gets stacked with a bunch of, new appointees who are more prone to interest rate cuts, then that's pretty negative for the US in the medium term onwards. I think in the short term, the AI trade continues to push up, particularly US markets, Chinese markets, and continues to support global markets. But if that particular trade comes to a bit of a slowdown, then I think we could see a sell-off in certainly US stocks. I think to the benefit of emerging markets as a whole as well. There might be an initial sell-off, but certainly I think the outlook going forward on a medium-term basis looks quite positive for emerging markets and non-US markets as a whole.
Okay, thank you so much for that perspective, Jonathan. Great chatting with you as always, and thanks for coming in, speaking with us from London. Anyway, we'll switch focus. Kush still with us. Kush, how are you viewing the index and the move today? What's the take like? What should one do? Is this a buy on dips? The Nifty, the Bank Nifty? Give us that perspective.
Bank Nifty it is, and I'll come to the reason for that in just a quick while. I think there's a gap to be filled on the Nifty, which comes at about 24,673. So maybe another about 100 points or so. PCR already at 0.74 and the 20-day moving average support kicking in. What this suggests is on the Nifty, at least don't go short from here on. The risk reward ratio is not favorable, and you've got multiple triggers on the downside. Now, while the structure for Bank Nifty is weak and perhaps even sell on rise, just for the moment, it seems that a small token buy trade on Bank Nifty might not be such a bad idea. The reason for that is there has been this underperformance on the Bank Nifty versus the Nifty that's been going on for some time. But with today's move, it's gone deep into oversold territories. PCR has been at 0.54. This is as low as it gets, right? I mean, of course, it can get lower, but you know what I mean. It's been very, very low on some of the technical indicators. Also, Bollinger Bands also broken down. I think there could be a sharp, short covering trade that might come around in Bank Nifty. So obviously, you can't go short at these levels. But if you're feeling a little adventurous for aggressive traders on a very small quantity, you might want to consider a long trade on Bank Nifty purely for the short covering rally and keep a stop loss at the 54,000 mark. And as I said, just for the short covering rally, nothing else.
Okay, Kush, thank you. We'll leave it at that. We'll let you go on that note. Thank you so much for those views. Of course, if at all you want to pull a trade, Bank Nifty, 54,000 being the stop loss there that Kush was talking about, and only for a short covering. We'll also slip into a very short break. On the other side, we'll get you the bull versus bear. Varsha standing by already, and we'll also have the BTST. Stay with us.
Tech has changed. So should your tech show.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Tech has changed. So should your tech show.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time,
Welcome back. You're watching India Market Close. If you look at the markets right now, the pressure does continue. Let's pull up Nifty 50 and Bank Nifty on the screens as well. We are below that 24,800 mark. 24,750 is where Nifty 50 is hovering at. Cuts of around 0.9% coming in there. Bank Nifty as well. 1.2% is the kind of cuts you're looking at on this front. And let's quickly look at the sectoral indices and then we'll see the broader markets as well. In terms of individual sectors, FMCG was the one which was seeing some gains. That continues. But apart from that, everything else is under pressure. In fact, if you talk about defense, real estate and the PSU Bank Index, they are seeing deeper cuts in today's session. Broader markets as well were pretty much in line with what the benchmarks were doing. So if you look at the mid-cap and the small-cap index, similar kind of cuts that you're seeing at the day's lowest levels. But moving on to our bull versus bear segment today, we put the spotlight on Sun Pharma. And if you talk about Sun Pharma as well, in terms of 2025 as a year, it's not been a really encouraging year for a Sun Pharma because the cuts have been to the tune of almost 15 to 16% in 2025 so far. The stock currently is also trading at the day's lowest levels. What's ailing the counter? Varsha joins us with the bull and the bear case scenario. Varsha, over to you.
Well, thank you so much for that. Sun Pharma is under pressure now. One of the reasons is because BofA has downgraded Sun Pharma. But let me start with the bull case over here, wherein the specialty portfolio, if you see, has seen a strong upliftment. But BofA has came out and they expect slower ramp up in new specialty drugs like Lexilvi and Unloxit. Now this is because Trump has yesterday said that he's going to reduce the prices of drugs from to 1500 to 1800%, and this may, and because of this, Sun Pharma may have to reduce their drug prices. But this is one of the bear case that the company has. But moving on, the good case over here is that inorganic growth. So Sun Pharma will be, the positive thing here is the growth will be led by inorganic growth when it comes to their dermatology and of course their oncology portfolio also. But there is a near-term headwinds and EPS cuts would be there. Now this is because of the increase in R&D cost and of course increase in the taxation part, which will hit profitability in FY26 and FY27. But the good thing over here is, if you see, they are well positioned when it comes to their India formulation growth. So they're going to grow on the back of India branded formulation, which will lead to double-digit growth for the company. But the price cut in their specialty portfolio, which is Illumia, due to the US drug policy, will actually hit their EPS by 4%, and this will impact profitability and also will impact the valuation premium that Sun Pharma has got because of their specialty portfolio. Moving on, the bull case over here is when it comes to the GLP products, Sun Pharma will be first to market when it comes to their GLP product portfolio, which is on the cusp of growth. But if I want to talk about the valuation, it's currently trading at a premium valuation of 32x. If you compare it with their 10-year average, it's trading at a very high premium valuation. It's one of the reasons also why BofA has downgraded Sun Pharma. So overall, the pressure that you're seeing is because of the downgraded by BofA and also the Trump coming out and saying that he'll reduce the drug prices by 1500 to 1800%, which will have a hit on Sun Pharma's specialty portfolio, where the investor is actually betting on.
Specialty portfolio is what the investors are betting on. Thank you, Varsha, for that. Vineet, coming to you, if you have to look at a Sun Pharma with all the details that even Bank of America Merrill Lynch is looking at, with regards to the downgrade, how are you looking at us, taking the US tariffs into consideration as well? What would your view be on a Sun Pharma with the kind of correction that you're seeing today? And in this 1 year itself, the stock has lost 15 to 16%. Would you be a buyer at current levels, or would you go with the bear case scenario and say best is to stay away and look at something else from the pharma pack?
No, see, Donald Trump's tariffs are an overhang on pharmaceutical companies. And my view is to simply let this story play out on the downside and let things clarify before taking a call. I think there is no love lost in not buying these stocks at current levels.
So no love lost in not buying these stocks at current levels. Aditya Agarwala, in fact, let me welcome him as well from Invest for Edu. Aditya, welcome to the show. Your top calls for today, BTST. Let's start with that.
Good afternoon. Thanks for having the show, Edel. So a couple of buy recommendations I have on my list. The first one is Hyundai. Stocks looks quite interesting. In fact, the entire auto sector is doing well. Picked up a Hyundai from that for a target of 2650 on the upside with a stop loss at 2440 on the downside. The second stock is from the FMCG space, ITC. That also seems like it's formed a near-term bottom and can see an upside from current levels. So for a target of 425 on the upside, I'll be a buyer here with a stop loss on the downside at 395.
Okay, Vineet, auto, that's been one space which has relatively done better given everything that's happened around GST. Are you constructive that space? And of course, we had Maruti as well, which unveiled its EV, which is here for export as well. What's the sense on that?
So I would tend to go with Aditya and believe that, the auto space is going to do very well, especially the EV models that are being launched. Mahindra's looks very good. We like Ola. That stock is also looking very interesting. And Maruti also should do very well because, they're launching their e-Vitara globally. And we think that the Russian market is going to be a new growth market for Indian automobile export. Because if you've seen, they've been buying a lot of Chinese scrap, and Indian, auto stocks perform much better than the other engines out there. So we believe that a very big market is opening up there and is going to be positive for all auto companies.
Okay. Okay, the issue though with the market is that we're closing at the lowest point of the day. That is the worry, that we are now right at the low point with the indices 1% lower, 24,800, which was the recent swing low, completely taken out. And the banks are the one which are the leading culprit. You would have estimated otherwise, but the bank nifty is the one which is really sulking in trade. 1.23% lower for the Nifty Bank. So this is not turning out to be a it's turning out to be a weak afternoon, if you will. We started off remotely okay. It's not going down very well. Aditya first and then Vineet, but Aditya, a trade maybe on the Nifty Bank, a view there, because it's looking fairly wobbly today.
Afternoon, Neeraj. Absolutely. In fact, anything, it seems like it's headed slightly lower from current levels as well. So I would not hurry into going long on Bank Nifty just yet. My sense is it can slide all the way down to 54,100 to about 54,000. That's where the real supports lie. Once Bank Nifty settles around those areas, maybe one can actually look at a fresh long addition. Tomorrow being a trading holiday, I would not also like to take any position on the index, either on the long side or on the short side. See how global markets behave tomorrow and how we open day after tomorrow. It will be a better idea to take in trade once markets open fresh on Thursday, which is also an expiry day.
If that's a fair call, and I mean, we know fundamentally Vineet is not very constructive, but Vineet, this banking weakness today in particular, any specific reason, or this is market-wide correction, and because banks such a heavy weightage, they are cracking?
I think it's more got to do with, with the economy kind of slowing down. We've still not seen good follow through despite interest rate cuts. Probably, I think after September or October, once the GST GOM meets and approves it, I think we could see some pickup out there. But I think till that point in time, all across markets are going to be weak and banks are no exception.
Okay, well, so it's looking wobbly, and if growth were to come back, let's see if the GST rates come in and therefore does it bring back consumption and therefore the multiplier effect, but otherwise it's off. You would suspect that today is also the weakness because tomorrow is a holiday. You do not want to go into a weekend where the future is uncertain. What if something else were to happen and you're caught on the wrong foot? I would suspect that could be the other reason. So just go easy into this holiday. I just wonder though, just looking at the derivative positions, Aditya, if indeed there is some resolution between now and the time that the tariffs are to come into effect, could there be a bout of short covering? Could that be swift? Do you see that in the FNO positions as we speak?
There's no build-up as such
okay.
yet on the indices, both on the Nifty and the Bank Nifty. But yes, there could be a short squeeze for sure because positions are very light. If you take a look at the market-wide open positions and open interest data, it's slightly on the lower side. So people are going very light into this trading holiday, and also that tariffs come into play tomorrow, sometime midnight. So my sense is people are going light, but if there is any positive news which comes tomorrow, markets could actually see a gap up open and then could build on to that gap up position, and market could actually then test levels of 25,000, 25,100 on the upside.
It's going to be interesting, in fact, because after the monthly expiry on Thursday, there's a possibility that markets could probably build that hope in terms of GST 2.0, which will be scheduled next week, which is between the 2nd and the 4th of September. So that could be one silver lining that one should be watching out for. But one stock that is in focus is a Nazara Technologies. The kind of downtick that it has seen in the last couple of trading sessions is now literally recovering. There is some buying interest coming back, 1.5% up move that we are seeing on the counter. Let's head across to my colleague Vansh, who's getting us all the details. Vansh, what is the reason for some bit of positive momentum that's come back?
Yeah, so what we have recently witnessed is that the real money segment has increased focus on the casual game. Because of the ban on the real money segment, we have seen an increased focus on the casual gaming segment that is coming in. Now, if I talk specifically about Nazara, now the Nazara is focusing on new IP launches like a Big Boss game in 2025 and other original IPs in 2026. So clearly there is a shift of focus in terms of IP segments in terms of Nazara. Now, if I also talk about the offline expansion for Nazara Tech, we can clearly see that the company has expanded offline by through the expected relaunch of Smash in 2027. Now, the company has announced the relaunch of Smash in FY27, and also 8 to 9 stores of Funky Monkey are also planned for this year. So, if I talk about the details of the offline expansion, now this is on the back of the strong recurring revenue streams that we can see from the offline segment, and a diversification, and this is a diversification into the non-digital segment. Now, clearly this is a diversification move by the company to diversify from the ongoing online thesis. Also, this is on the back of the brand building. Now, this is to acquire the new user across age groups. Now, the company is acquiring to, incorporate all the new age children into the ecosystem. So, moving on with this, if you also talk about the other segments of Nazara, we have Curve Games, that is a London-based video game publisher. Fusebox, again a mobile app launched by the company. We also have, followed by this, we have Kidopia and Animal Jam as the mobile games by the company. But now what's really interesting is we have Nordwin and Sportskeeda. Now Nordwin Nordwin organizes esports tournament like for PUBG Mobile now, which is again a popular esport in terms of youngsters these days. Also, we have heard of Sportskeeda. Now this is again a digital media platform for sports. Now, if I talk about the balance sheet for Nazara Tech, now the company has 500 odd crores of cash and cash equivalents. Now, this is on the back of the cash flows and the recent fundraise which the company has done from Aksana Estates, Plutus Wealth Management and Juno Mineta Private Limited. Also, this will enhance the scope for higher user acquisition that the company can incur and for the global expansion that may be on the cards by the company. Now, if I'm moving on, let's also look at the global opportunities for this particular counter. The analysts are expecting a large opportunities in the overseas market for this company, and also the reports are indicating that they may challenge the real money gaming ban in the court. Now, if it rules in the favor of the company, we can also see it acting as a positive catalyst for this particular counter. So overall, in terms of the picture, the company is at an interesting juncture, and where we are at the risk of the provisioning of 800 odd crores in moonshine technology. We can also see key drivers like new utilities, overseas opportunities, and gaming, which can drive the further uptick in this particular stock.
Okay, thank you so much for that, Vansh, coming in and bringing us that perspective with regard to where Nazara is concerned. But we've fallen 300 plus points now from the day's high, so that's pressure building on markets. While that's not evident on Nazara's stock price, that's evident on the Nifty. We're at the day's low. Shriram Finance down 4, one of those which is really taking it on the chin. Outside of that, some metal counters as well. Something like a Tata Steel is down 3. Bajaj Finance, among the other lenders stroke NBFCs, is also facing some bit of heat. 2.8% lower. Trent is down 2.5%. Coal India down 2 odd %. But the big boys are what is really dragging the index. Something like a Reliance is down 2% as well in trade. So you're seeing pressure coming in. Let's pull up the contributors as well, and you likely see that texture play out, that the heavyweights are chipping in and contributing to the losers, and ICICI Bank sits there. And in terms of the gainers, just very, very few. We're not seeing the breadth on the Nifty 50 index to be as good, and that's what's putting pressure on the index. I want to first take a question with Vineet, and I'll go back to Nazara. Vansh obviously broke it down. Vineet, some of these gaming companies, is it a space which enthuses you? Is it a new age kind of a space which you find interesting? Give us that perspective.
So definitely, we've got one of the world's largest consumer base of youth. And, the fact that real money is out of the way, I think play, and we could see some good spends out here, and that should drive the revenues of Nazara Tech.
Okay, Aditya, anything you're seeing on charts? Because we asked Kush earlier today with regard to Nazara. He was quite bullish. Your sense?
It's a very risky bet, honestly, because we don't know what future holds and how the stocks will react. But you can allocate some money at current levels and see how the stock behaves over next 1 to 2 weeks, and then maybe take a call to whether to invest further in the stock. One interesting fact that I see, Harsh, is a lot of volume action has taken place on the correction. Once the stock had corrected, a lot of volume-backed buying has taken place in Nazara. So yesterday, if you take a look at it from lows of 1,000 odd levels, we did see a good recovery, and that was witnessed a couple of days back as well. So overall, it's not a bad stock to buy in your portfolio, but allocate a very small portion as of now and watch how the stock behaves over next 1 to 2 weeks, and then take a call as to whether you want to build on that position further or not.
Okay, that's going to be an interesting bet in terms of whether to build a position in terms of Nazara from here on. A few of the other sectors which do come into the spotlight on the back of GST 2.0, you're talking about consumption, you're talking about the cement sector as well. Vineet, let me come to you. If you have to look at the cement counters and if you have to look at consumption, what would you bet on, taking into consideration that GST is expected to come in favor? And secondly, the way valuations are currently for FMCG as well, they're slightly below, not the most expensive.
So definitely FMCG will do well over a period of 12 to 18 months. And I think those are the stocks to go with. Cement has already seen a very good run. I expect that run to continue also. But between FMCG and cement, if I have to choose, FMCG is the way to go.
Okay, so that's with cement and FMCG. Aditya, if you have to look at cement names as well in trade today, anything that you would recommend buying?
There are a few stocks definitely here. One is Ultratech Cement, the largest cement player. I think one should stick to that name clearly. And it's more of an investment bet now, not the trading bet anymore, because of the kind of move that we've seen in the stock already. So Ultratech, yes, can be bought at current levels and on declines to levels of 12,200, 300. Look for a target of 14,000 plus on the upside. The second stock that actually looks quite interesting to me is JK Cement as well. So that is also one stock which looks quite interesting after a bit of a cool off. Stock can actually be looked at current levels, and on the upside targets can be 7,500. Not much wait for stocks to actually consolidate and correct a bit, then maybe you can look to add more into cement names.
A couple of stocks also buzzing on the back of fundamentals. You have an Ashiana Housing up 5% on a project launch which has come through. Unichem Labs is the other one which is in focus, doing very well again on a tough day of trade. The US FDA has classified one of its facilities as voluntary action indicated, which is positive for a Unichem. Aditya, I know more fundamental, but do you have a quick technical check on any of these, because we've seen wild moves on them?
Ashiana definitely looks very interesting, Harsh. In fact, a good volume-backed move that we are witnessing in stock today after a good consolidation as well. So overall, I think one should look at buying the stock even at current levels after this kind of an up move of 4.5%. And on the downside, place a stop loss somewhere around 310 and look for a target of 370 to about 400 on the upside. Hold it. It's more of a positional bet that I think stock will give you good returns in the medium to longer term.
Okay, so that's Ashiana Housing Finance, the stock nearly at the day's highest level, some cooling off happening, but 4% upside is what you're seeing currently. But staying with GST, 3 p.m. meeting that has started. In fact, a couple of reactions are pouring in from DTRI and FIO. Sorry, this is not with regards to GST. This is more with regards to packages for the exporters. Let's get in my colleague Rishabh, who's on board to tell us what is it that he's picking up. Rishabh, we've been talking about this meeting. It's been 20 minutes into it. Some reactions coming in from the GTRI as well in terms of the quantum of exports that could go down. I think $49 to $50 billion is what they're pegging versus $86 billion to the US. What are you picking up?
Right. Some very clear-cut analysis coming on in terms of the sector-wise sector fallout that will happen once these 25% additional tariffs come in, taking India's total tariff burden to 50%. India's exports to the US, the goods merchandise will fall from about $87 billion to roughly $50 billion, and so on due to the new tariff regime that is set to come in. What we're seeing is that while about 30% of India's exports to the US will remain duty-free, these will include, of course, pharma, semiconductors, all of these exempted and electronics, all of these exempted make up about 30% of India's exports. 4% will face roughly 25%, but a bulk of India's exports, 66%, will face 50% tariff, which will render them uncompetitive versus other manufacturing economies like China, Bangladesh, Vietnam, Philippines, Indonesia, as well as Vietnam. What we're also seeing is that exports from these particular sectors, which include apparel, textiles, gems and jewelry, shrimp, carpets, and furniture, these exports now are at the risk of falling by roughly 70% to only about $18 billion. And this will, of course, put a lot of jobs at endangerment as well. What we're picking up from the Federation of Indian Exports Organizations, this is a cluster of Indian exporters, remember, all of them have also raised alarm over potential sectoral fallout that might happen post these 50% tariffs coming in. What they're saying is that a pricing disadvantage of about 30 to 35% will kick in once these tariffs come in. And this disadvantage is, again, vis-a-vis manufacturing economies like China, Vietnam, Cambodia. What we're seeing already as a result of these tariffs is the fact that you have textile manufacturers and apparel manufacturers in Tirupur, Noida, Surat, already having shut down. They're already witnessing quite a bit of a slowdown in their respective sectors. What we're also seeing is that they are calling desperately for government support. That is something that is possibly being discussed in the meeting today, an export promotion mission that is worth about 25,000 crores over a 6-year period. And that is something that we have our eyes peeled on so far.
Yep, most certainly. Something to watch out for sure. And all means that come in domestic, keep an eye out for that. Rishabh, thanks so much for getting us that. And we'll, of course, get you updates from this, or the outcomes of these as and when they came in. You know, we kind of just taken trading ideas, but 6 minutes left to go. And with the way we are ending, it might be prudent to try and see if any of the charts have worsened or contrarian, if there are any stocks which are bucking the trend and be worth logging into. Aditya, I know we're asking too much, but because the markets have just come off even more and below 24,700 now, anything else on your list?
Nothing really. I like I mentioned, I do not want to take a lot of positions tomorrow being a trading holiday. I'm okay missing out on some kind of a gain, even if we witnessed on Thursday morning. I'll prefer looking at markets on Thursday morning and then take fresh trades.
Vineet, just before we let you go, I heard you say that you are largely, what was it, constructively cautious? Did you use that term? So let's assume if that is the case, right? You expect the markets to drift down to a particular valuation multiple where you could turn constructive, or is it that the scenario needs to change in the West before you turn constructive?
See, the scenario in the West was always going to pan out the way it is. So we have to understand that the American and the European economies are beyond repair. They don't have economies, their demographics are negative, and the debt in the US is unsustainable. So this trend was obviously going to play out either ways, right? Here we are seeing some geopolitical stunts being played by Donald Trump to ensure a better deal for his company and, make the others think also so that the US economy looks relatively better. But, for India, it's a good long-term wake-up call in the sense that, we will start looking beyond Americas, and that process has already started. And so while that would take a little bit of a while to shape out, we will see the markets correct. It's going to happen. It's going to happen not only because of the tariffs, but it's also going to happen with what is happening to the United States, interest rate increases, and subsequent valuation declines globally.
We need so much for giving us your views overall in terms of what you're expecting, taking into consideration that the markets are down. And in fact, they're literally probably digesting the MSCI outflows, the US trade tariffs, and the monthly derivative expiry, which is on Thursday. But moving on, Ola is in focus as well. The PLI certifications that they've got for Gen 3 scooter, and that is what is leading to the surge. Puneet is with us to tell us more. Puneet, a quick one in terms of what's working.
Well, thank you for that. So generation 3, which is the lower cost effectively scooter to manufacture for electric, is now compliant by PLI. That's what the company has said. Now this is very important for the company's gross margin targets, because at the end of Q1 they've said that once they get PLI for these generation 3 scooters, they will add roughly 1.8% to their gross margins for the year of FY26. For Q1, they did about 25.1% of gross margins, with the whole year target is roughly between 35 to 40%. So while market share has been faltering for the company, they will be focusing on PLI as well as the added benefit of cells, which they had spoken to our colleague Tamanna about as well. So both these factors will be effective in lowering cost as well as increase the gross margin to 35 to 40% with the overall target of 3.2 lakh scooters to be sold. So this looks to be step one. The other aspect has to be followed up with cells to be integrated by Navratri of 2025.
Of 2025 is important for a lot of people, not only for the Ola. You're looking at the domestic oriented sectors, which will see GST benefits coming in as well. But Aditya, very quickly, do you think there could be a possibility that all the negatives that the markets are looking at could be priced in today's day of trade, and the positive developments from Modi visiting Japan, China and the GST meet is something that markets will take into consideration? Markets could make a bottom on Thursday and start building long positions. Do you think that could be a possibility?
A possibility, yes, Hiral, but I don't think so markets will see any kind of a sharp up move as well. It's more of a range that we are trading into, and that range is likely to continue. I don't see any big bang upside move or any correction in the market either ways. And then, as you mentioned, most of it is priced in. The 50% tariff is priced into it. This was known in the market previously that it's coming. There was some hope that there could be some kind of a deal between India and US, but it didn't turn out. My sense is today's correction is just pricing into that. I don't see any major fall in the market because of that anymore. But yes, you need some kind of triggers for any upside movement as well. And that's also limited as of now. GST is also factored in. Now the rates could provide some kind of a fillip on the upside. But again, I don't see any big bang up move on the indices as well. So it's more of a sector in a stock specific market that is prevailing in the market at the moment.
Okay, excellent. Thank you for that, Aditya, for capping that off. We're down 2% now on the small cap index. We'll let you go on that note. Thank you so much for joining us and giving us those views this afternoon. Half a minute to go to close. 1% lower. We are holding 24,700 at this point. So that's probably the only positive at this level. When you're looking at the Nifty Bank, it's down around 1.3. So that's where one of the pockets of pressure is. It's also IT, which is contributing, and some of the heavyweights are also chipping in. Let's pull up the heat map and you'll likely see that the breadth is extremely tough in this market, but you're seeing some sparks with regard to consumption playing out. ITC, Maruti, HUL, Nestle, some of those names doing okay. TCS surprisingly sitting in the green, 0.5%, despite the Nifty IT down over 0.5% in trade. So that one is a bit of an outlier. Asian Paints has closed absolutely flat as well on an otherwise weak day, so not bad. What's not doing well? Some of the lenders, of course. Trent within the consumption basket is sitting in 2.5% in the red. Also, you have RIL, which is down 2%. I did speak about that. Dr. Reddy's also. So some bit of pharma also impacted. Let's look at the sectoral heat map on your screen now. FMCG up around 0.9. So that's the one pocket which is doing okay. Auto has outperformed, but still down 0.5% odd. Realty taking a bit of a knock, 2.3% lower. Now that Realty index is below the 900 mark. The Nifty India Defence Index also down 2+%. The small cap index down 2 as well. PSU banks, pharma in pain, evidently so. Metals too down 1.7. The private banking index is down 1.4, relatively okay, but still underperforming the Nifty Bank, which is down 1.25. So it's not looking pretty, at least as we close today. When you're looking at the advanced decline as well, largely it's just worsened, very, very likely. It has nearly 2,000 declines to just about 400 advances, so that's not looking pretty either. The Nifty mid cap and small cap, the small cap was down 2. The mid cap also down 1.5% now. At the day's low is where we've closed on the mid cap. The small cap too, very similar texture right at the day's low, 1.9% lower on the Nifty small cap. So real pressure building up. We'll have to wait and watch as to what Thursday does essentially. Let's look at the BSE 500 top gainers, top losers, and that too more tilt towards the losers. Some of the losers have slipped even more. JK Paper down 8 now. Second straight day of decline on a JK Paper. Some of those stocks were showing some zing yesterday, sorry. So down 8% after what it did yesterday. Balrampur is down 6 as well. Naveen Fluorine down 5.5. So some pain evident there. The gainers far and few, but still there are a couple of them, especially within the auto space, which is standing out, and also IT, HUL also within the consumption pack. Britannia, HUL, both of those Nifty 50 plays sitting there. Now let's look at what to watch out for, and of course the key is going to be what happens with regard to tariffs, or whether any change happens with regard to tariffs. Let me put it differently, but those are some dividend related adjustments which are likely to come through, so you'll have those to look out for. Also you will have expiry of lock-in on an Orient Tech, which is likely to happen 53%, and you'll have IPO listing of Mangal Electricals, that's a transformers company, which is also expected to happen Thursday. So you want to watch out for some of these cues. But completely out of time on an otherwise very, very difficult day, and from all of us here, of course, wishing you and yours a very, very happy Ganesh Chaturthi and a great festive 10 days from all of us. Well, for the moment, from Neeraj, Hiral, Mahima and myself, thanks so much for watching. Stay with us here on NDTV Profit. Market Express will take the action forward.
Tech has changed. So should your tech show.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profit.
and welcome viewers. You're watching Market Express and I'm your host Himakshi Bahugna. And firstly, wishing you all a very happy Ganesh Chaturthi. Now, let's just get started with the show. Let's see how the markets have fared today. So, Indian markets slumped in trade today as Trump's tariffs on India dragged down overall sentiment. Nifty and Sensex also dropped substantially to end near their intraday lows. The Nifty lost over 250 points to end below its long-maintained support level of 24,800 levels. The 30-pack Sensex also saw cuts of around 820 points to wrap up the trading below 81,000. Now, which is less than 1/4 of the listed counters ended in the favor of the bulls. Broader markets traded under a lot of pressure. The mid and small cap indices ended almost 1.5 to 2% lower. Reliance, Bharti Airtel and L&T were the biggest draggers on the Nifty, while HUL and ITC collectively uplifted the index by over 20 points. Now on the sectoral front, Defence, Realty and PSU Bank were the top laggards. FMCG was the only sector in the green today, and on the back of expectations that consumption would actually improve. An early festive season is also expected as the government eases interest rates and also cuts the GST. Although the market momentum dragged the Nifty FMCG index lower, it still ended the day about a percentage point in the green. HDFC Bank shares trade ex-bonus today ahead of the record date. Shareholders to get one bonus share for every share held. Record date falls on a public holiday, so price adjusted today. Bonus aims to reward investors and improve stock liquidity. Karur Vaishya Bank is back in the bonus spotlight with its first issue since 2018. The bank has announced a 1:5 bonus ratio, meaning shareholders will receive one bonus share for every 5 shares held. Now, this move is aimed at rewarding long-term investors, improving the liquidity in the counter and also encouraging more retail participation. So the announcement was made on 24th of July 2025, marking a strategic step to widen the shareholder base and also enhance the trading volumes. Protean eGov wins a 1,160 crore order from UIDAI to actually run the Aadhaar Kendra across 188 districts for 6 years. So the project includes enrollment updates and walk-in services. This also comes in after losing the PAN 2.0 contract despite handling PAN 1.0. FY25 sees a dip in the revenue, margins and profit. MK says the anticipated GST rate cut is delaying the auto conversions, but demand may surge 10 to 20% in Q3 or Q4 due to a nearly 7.5% on-road price drop. So dealers can claim ITC's later easing inventory concerns. However, high stock levels may dampen festive stocking, and also the cess treatment remains a key watch point. RBL Bank plans to raise up to 3,500 crore rupees through a QIP. It also seeks to borrow up to 3,000 crore rupees in debt. The board will discuss these proposals on August of 29. Now, this follows the expiry of prior approvals from August 2024. Bank of America has downgraded Sun Pharma's rating from neutral to underperform, cutting its target price from 1,730 rupees to 1,570 rupees. Now, the brokerage cites concerns over the company's specialty business, including execution risk for new launches. Now, also, the premium valuations are at risk, and the ongoing issues with its largest specialty drug, Ilumya, remain an overhang. India's stock market is pricey but justified by high returns and strong growth potential. A robust regulatory system lowers perceived risk. However, short-term slow growth and declining returns are concerns. India remains the costliest among emerging markets. Here's a look at stock calls on different sectors by Jefferies. So the oil marketing company space first. BPCL stock fell 10% but has a solid earnings outlook. It also trades at similar valuations to HPCL despite entering a high spend phase. HPCL faces higher risk from new projects and potential tax hikes. Jefferies also prefers BPCL for its strong earnings and attractive price. Now to Jeffries on the auto sector. So auto registration rose in August with tractors up 32% and two-wheelers or trucks up 6 to 7%. Passenger vehicle sales also stayed weak, growing just 1%. Buyers are delaying purchases, expecting a GST cut to boost the demand. Jeffries favors M&M and TVS with Maruti and Eicher as next picks. Now let's move to Nomura's take on India's cement industry. The brokerage house says the industry is set for higher prices, a potential GST cut and brand upgrades by mid-tier players are also driving the price increases. West Bengal announced a hike of 11 rupees per bag, and the smaller players also struggle to hold the market share. CLSA strongly backs Avenue Supermarts, predicting a 36% stock rise. DMart leads in customer ratings and engagement. Low prices and wide product range drive its success. It excels in review quality and volume across metro and small towns. Morgan Stanley keeps an equal weight rating on Aavas Financials. The target price is cut to 1,750 rupees from 1,860 rupees. Loan growth forecasts for 2026 to 28 are lower to 16%. Slower growth leads to reduced returns and valuations. Morgan Stanley boosts target prices for HDFC Life and SBI Life. HDFC Life's target rises to 890 rupees, SBI Life's to 2,250 rupees. Now both maintain overweight ratings. ICICI Lombard's target increases to 1,910 rupees with an equal weight rating. Morgan Stanley raises HDFC AMC's target price to 5,415 rupees from 4,910 rupees. The equal weight rating remains unchanged. Asset under management forecast for 2026 to 28 are increased by 1%. The outlook reflects steady growth expectations. Morgan Stanley raises AB Capital's target price to 330 rupees from 320 rupees. The overweight rating stays unchanged. Earnings forecast for 2027 to 28 are up due to lower provisions in the NBFC business. Higher revenues and lower costs boost the HFC business outlook. BofA retains an underperform rating on Siemens, raising the target price to 2,800 rupees from 2,564 rupees. So BofA views that one round of earnings cut is done, but anticipates another due to ongoing challenges. The brokerage sees the smart infrastructure segment as overly optimistic by the street, while the digital industry segment suffers from weak private capital expenditure. Despite the valuations near long-term averages, earnings are expected to disappoint, largely due to execution issues and sluggish demand. BofA projects limited growth with an earnings CAGR of just 10% over FY25 to 27. This is amid the margin pressures and also the macro uncertainties. Bernstein initiated coverage on Titan Company with an outperform rating and a target price of 4,200 rupees. Titan, originally a watchmaker, has expanded into jewelry and also aims to become a global lifestyle brand. Bernstein notes the jewelry market is evolving formal contemporary styles amid the growing competition. Despite this, Titan has under-leveraged growth opportunities. A key long-term risk is the rising share of the natural diamond and lab-grown diamond dynamics, which could hurt margins on studded jewelry sales. However, Bernstein expects the near-term 1 to 2 year impact to be muted, with growth driven by product innovation and brand strength. Prime Minister Narendra Modi has inaugurated Maruti Suzuki's production line for the e-Vitara, a battery electric vehicle to be exported to 100 countries. He also launched the TDS lithium-ion battery plant, a joint venture between Toshiba, Denso and Suzuki. So the plant will manufacture lithium-ion battery cells and electrodes for hybrid EVs. PM Modi also hailed the occasion as a significant step towards India's self-reliance and green mobility goals. BlueSmart, the electric vehicle startup, is facing insolvency proceedings. Nearly 200 applicants, including Catalyst, Trusteeship and IREDA, have staked claims worth over 500 crore rupees for BlueSmart's assets. The company's co-founder, Puneet Goyal, and former executives have also filed claims. Bids for settling these claims are likely to be invited in 4 weeks. The Association of Healthcare Providers of India has reached out to the Insurance Regulatory and Development Authority of India to address several issues faced by its members. However, AHPI is currently waiting for IRDAI chairperson Ajay Seth to formally take charge before actively engaging with the regulator. AHPI plans to approach the Competition Commission of India shortly and host a summit on September 13 to discuss the ongoing concerns with insurance companies and regulators. Gamescraft has announced it won't challenge the recently enacted online gaming bill. The company has stopped all real money gaming services and cleared regulatory dues. Gamescraft is also committed to operating within the law and has initiated internal discussions to explore new opportunities. Now, this move comes after the government has passed the Promotion and Regulation of Online Gaming Bill 2025, which bans all forms of real money online games. Bihar has launched a new scheme to promote entrepreneurs HIP among specially abled persons. Now, under this initiative, the state government will provide a 5 lakh interest-free loan and a 5 lakh subsidy. Now, this move aims to empower individuals with disabilities and enable them to start their own businesses. Mercedes-Benz Pensions Trust has sold its entire 3.8% stake in Nissan Motor for approximately $325 million, marking a complete exit from the Japanese automaker. The shares were sold at around 341 yen each, about 6% below the previous close, which led to a drop in Nissan's stock price by around 6% on the Tokyo Stock Exchange. So Mercedes-Benz stated that the stake was part of pension assets since 2016 and not strategically important, describing the sale as portfolio streamlining. Nissan is also undergoing restructuring amid tariff pressures and intense industry competition, with efforts to restore profitability underway. Apple is set to launch its 4th retail store in India, and it's coming to Pune. Located at Kopa Mall in Koregaon Park, the store will open its doors on September 4. This marks Apple's 2nd store in Maharashtra, following one in Mumbai. The new store will offer customers a chance to experience Apple's latest products and services, including the upcoming iPhone 17 series, which is expected to be unveiled on September 9. Ola Electric has received the production-linked incentive certification for its Gen 3 scooter portfolio. Now, this certification is expected to boost the company's profitability from Q2 of FY26 onwards. The PLI scheme aims to incentivize domestic manufacturing and increase India's share in global supply chains. Elon Musk's XAI filed a lawsuit against Apple and OpenAI in US federal court in Texas, accusing them of conspiring to stifle AI competition through monopolistic practices. Now, the suit claims Apple's partnership with OpenAI, embedding ChatGPT into its operating systems, unfairly excludes XAI's Grok app from App Store rankings despite high user ratings. XAI seeks billions in damages, arguing the duo locks up the market. OpenAI dismissed the action as harassment, while Apple offered no immediate comment. Musk amplified the claims on social media. Experts note that Apple's smartphone dominance bolsters the case, but it may also be seen as a business tie-up. The litigation could actually set precedent for an antitrust battle. The Enforcement Directorate conducted raids at the residence of AAP leader and former Delhi Health Minister Saurabh Bharadwaj and 12 other locations in connection with 5,590 crore alleged hospital construction scam. The investigation focuses on financial irregularities, cost overruns and delays in 24 hospital projects sanctioned during the AAP government's tenure. Despite spending 800 crore rupees, the flagship ICU hospital project is only half complete. AAP leaders claim that the case is politically motivated, while the BJP alleges widespread corruption during the AAP rule. The case originated from an ACB complaint filed in August 2024. The Supreme Court of India formed a special investigation team to probe complaints against Vantara, a zoological rescue center in Jamnagar, Gujarat, conceptualized by Anant Ambani, hearing petitions by advocate Jaya Sukhin alleging illegal animal acquisitions from India and abroad, mistreatment, financial irregularities and money laundering. A bench of Justices Pankaj Mittal and P.B. Varale ordered an independent inquiry. The SIT is chaired by former Supreme Court Judge Justice J. Chelameswar, includes former Chief Justice Raghavendra Chauhan, ex-Mumbai Police Commissioner Hemant Nagrale and IRS Officer Anish Gupta. Heavy rainfall has triggered landslides and mudslides in parts of Jammu, causing several roads to close. In Doda, which remains one of the most severely affected areas, a girl died after a house collapsed in Bhalesa. Almost all the rivers and streams are flowing above or close to the danger mark, submerging a number of low-lying areas and roads. President Trump has fired Federal Reserve Governor Eliza Cook, citing alleged mortgage fraud. Trump's letter on Truth Social claims Cook falsified loan applications in 2021. Cook, the first black woman on the Fed's board, denies the acquisitions and vows to fight the dismissal, calling it unlawful. Critics warn this threatens the Fed's independence. US President Donald Trump has announced that American universities will admit 6 lakh Chinese students. Now, this comes despite his administration's earlier visa policy to aggressively revoke visas for Chinese nationals. Now, the move has sparked criticism from his own supporters, with some calling Chinese students CCP spies and a threat to US opportunities. The American president, however, warned Beijing to ensure Washington access to rare earth magnets or face 200% tariffs. But he assured that trade tensions between the world's 2 largest economies will not affect Chinese students and they would still be allowed to study in the US. Chinese President Xi Jinping will gather more than 20 world leaders at the Regional Security Forum in China next week in a powerful show of global South solidarity in the age of Donald Trump, while also helping sanctions hit Russia pull off another diplomatic coup. Aside from Russian President Vladimir Putin, leaders from Central Asia, the Middle East, South Asia and Southeast Asia have been invited to the Shanghai Cooperation Organization Summit, that is the SCO Summit. So this will be held in the northern port city of Tianjin from August 31 to September 1st. Liverpool 16-year-old prodigy Rio Numoha made history on Monday, scoring a dramatic 100th minute winner in a 3-2 Premier League victory over Newcastle United. At 16 years and 361 days, he became Liverpool's youngest ever goal scorer and the 4th youngest in Premier League history, just 1 day older than Wayne Rooney's record. So the Nigerian-born star subbed on the 96th minute, sealed the Reds' perfect start, leaving St. James Park stunned. Indian shuttler Lakshya Sen faced a heartbreaking first-round exit at the BWF World Championships in Paris. The 24-year-old lost in straight games to world number 1 Shi Yuqi of China in a 54-minute battle at the Adidas Arena. So, despite a spirited fight and the long rallies, Lakshya Sen could not win. This marks another setback for the 2021 bronze medalist, with India's hopes now resting on PV Sindhu and HS Pranoy. Indian weightlifting star Mirabai Chanu made a sensational comeback, clinching gold in the women's 48 kg category at the Commonwealth Weightlifting Championships in Ahmedabad. The Tokyo Olympic silver medalist lifted 193 kilograms to 84 kilograms snatch and 109 kg clean and jerk, setting new Commonwealth records. Despite injury setbacks, Chanu's triumph secures a spot in the 2026 Glasgow Commonwealth Games. India's Chanabam Rishikanta Singh also won gold in the men's 60 kg, lifting 271 kilograms. Chaos erupted at the US Open as photographers sparked a 7-minute delay during Daniil Medvedev's loss to Benjamin Bonzi. Akar, who entered the court at match point, claims he was instructed by a security official and now calls the backlash a lynching, saying, "I'm a victim and totally innocent." The USTA revoked his credentials and Akar is seeking legal advice. Medvedev, who raged at the umpire's call, faces a potential fine. Well, with that, viewers, it's a wrap on this edition of Market Express, but please don't go anywhere. And once again, wishing you all a very happy Ganesh Chaturthi from the team of NDTV Profit.
Tech has changed. So should your tech show.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold
buy time to invest in
CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Wall Street ends lower as US trade tensions weigh on Indian indices. Both the benchmarks close 1% lower. All sectoral indices except FMCG end in the red. Mid and small cap indices underperform. The Commerce Ministry, along with select key economic ministries, meet officials at the Prime Minister's office to deliberate on the implications of the additional 25% tariffs imposed by the US on Indian goods, which take effect from 9:30 a.m. tomorrow.
आज से भारत में बने इलेक्ट्रिक व्हीकल्स 100 देशों को एक्सपोर्ट किए जाएंगे.
Prime Minister Modi flags off the Maruti Suzuki's electric Grand Vitara in Gujarat, set to be exported to over 100 countries. He also inaugurates a new lithium-ion battery plant set up by Suzuki, Toshiba and Denso. Vijay Sales banks on GST rate cuts this festive season. Director Vijay Gupta projects sales growth of 15 to 20% over last year. It's an NDTV Profit exclusive. Nearly 200 applicants take claim of 500 crore rupees on Blue Smart's assets. Sources say the original petitioner, Catalyst trusteeship, accounts for nearly 250 crore of the claims. Good evening. You're watching Profit 360 on NDTV Profit and I'm Sanjana. Let's get into our top story this evening. Maruti Suzuki shares gained over 2% after Prime Minister Narendra Modi flagged off the company's first electric Grand Vitara. The automaker is positioning this as its first global EV with plans to export to more than 100 countries. The Prime Minister also inaugurated a lithium-ion battery manufacturing facility in Ahmedabad set up by Suzuki, Toshiba and Denso to support hybrid and electric vehicle production. Marking the occasion, the Prime Minister said, now EVs made in India will run in dozens of countries around the world. Let's listen in.
Make in India, make for the world. हमारे उस लक्ष्य की तरफ एक बड़ी छलांग है। आज से भारत में बने इलेक्ट्रिक व्हीकल्स 100 देशों को एक्सपोर्ट किए जाएंगे। साथ ही आज हाइब्रिड बैटरी इलेक्ट्रोड मैन्युफैक्चरिंग भी स्टार्ट हो रही है। आज का ये दिन भारत और जापान की फ्रेंडशिप को भी नया आयाम दे रहा है। साथियों, भारत के पास डेमोक्रेसी की शक्ति है और भारत के पास डेमोग्राफी का एडवांटेज है। हमारे पास स्किल्ड वर्कफोर्स का बहुत बड़ा पूल है, इसलिए कि हमारे हर पार्टनर के लिए विन विन सिचुएशन बनाता है।
Meanwhile, NDTV Profit's Danish Anand spoke to Maruti Suzuki's ED Rahul Bharti on the company's plan to service 100 markets for the sale of e-Vitara. Let's listen in.
Today you have officially entered the EV space and you're starting from exports. First of all, what is the rationale behind this decision that instead of launching the car in India first, you are focusing on exports?
See, there are about more than 100 markets that we have to service. So some sequencing has to happen. And we'll try to cover all markets, but we'll try to cover all of them within this financial year itself.
So how important is the Indian EV market for you, considering that your local competition, the other companies, they already have many EV products, and legacy player like Maruti is entering EV space after such a long time. So how do you plan to really compete with the local companies here?
Having a product is not sufficient. One, you should have an excellent product. Two, you have to back it up with after purchase support. And Maruti Suzuki has devised an E4Me program, which gives customers a lot of confidence. If anybody is in doubt whether he should buy EVs or not, our E4Me campaign ensures that he gets total confidence and peace of mind. For example, first, of course, the product. So it's a product which is designed fresh on an EV dedicated platform. It's not an IC engine converted platform. An IC engine converted can have several design compromises, but it's freshly designed as an EV. It has several safety features like fire safety, advanced fire safety, advanced crash protection, 7 airbags as standard, and many more such features, 500 kilometers range. The performance is really good. So that's about the product. But at the same time, customers are worried about what happens. They have many apprehensions. So Maruti is here to give them total confidence. The first thing is we'll have a home charger with every car. We will have fast chargers in at least the top 100 cities of India. And while the top 100 cities account for more than 90% of sales, we will go 10x. We will cover the 1,000 cities with service support. For those service, we have trained technicians. And we are going one level deeper, and only a market leader can possibly go to that level of depth. We are covering about 130 ITIs in the country to churn out 4,000 trained service technicians who can handle high voltage products like EVs or hybrids. 4,000 every year, and at the end of that, they're free to join anybody, whether Maruti, Suzuki, or competition. But at least it will help increase BEV adoption in the country.
Right. So considering that there is only just one production line which is dedicated to EV manufacturing, in the months or years to come, what are your bigger plans for EVs? How do you plan to bring up and scale up the EV production in comparison to ICE?
So we have three production lines in Gujarat, each one of capacity 250,000. Our third line is making this e-Vitara. It is flexible to make both EVs as well as IC engine vehicles. And we will be adding a fourth line, which will be an EV dedicated line. So we have sufficient capacity.
Meanwhile, let's take a look at how the markets fared today. We saw benchmark indices falling sharply by over 1% as investor sentiment weakened after the US drafts notice on additional tariffs on Indian imports. Sensex dropped 910 points to 80,700 level, while the Nifty declined to 24,690. All sectors closed in the red, barring FMCG. But to bring us more, my colleague Puneet joining in with more details.
Well, it was a day which was under pressure for the Nifty, and we've seen that across the day today, with the advances just at roughly between 420 to 430 stocks and the declines at roughly around 1900 stocks today. We saw continuous pressure. The Nifty lost over 200 points from the day's high, and that pressure continued in the mid-cap and the small-cap index as well. For the Nifty specifically, it closed at its lowest point over the last 7 days, and barring the FMCG index, largely we saw all the other indexes being in the red today as well. Some notable stocks which were lower were Vodafone Idea as well as JK Paper. We saw some gains on stocks like IPCA as well as Craftsman Automation on the BSE 500, but that largely seems to be a day which was under pressure and continued to do so. Apart from that, we've seen Shriram Finance as well as Sun Pharma fall the most, and that was specifically for the Nifty. I mentioned Nifty fell 200 points from the day's high, but something like a Midcap 150 saw drags from Vodafone Idea as well as FACT as well. The Midcap 150 has fallen for the fourth consecutive day, and there seems to be any kind of lack essentially of a particular trigger to boost the markets going forward. Apart from that, we also saw the small cap 250 fall nearly 2%, and that was led by Swan Energy, Balrampur Chini Mills, amongst some of the key stocks that impacted the small cap index today. Finally, in terms of sectors, we've seen the realty index largely, along with the PSU Bank and oil, have the major essentially drag on the Nifty, while we've seen that all sectoral indices largely continued to be under pressure throughout the day as well. The Nifty FMCG was the only one which offered some kind of solace, up 1% in trade today. We saw some positive gains on stocks like Britannia and as well as something like an HUL, but that largely seems to be one of the key aspects of a continuous pressure that we've seen across the market, and we'll be hoping of some positive start on Thursday morning, with tomorrow being a market holiday. So very happy Ganesh Chaturthi to all of you.
And meanwhile, plenty of primary market action today as 4 companies made their market debut. Shriji Shipping, Gem Aromatics, Vikram Solar and Patel Retail all listed on the bourses. Anushi now joining us with more details.
4 new IPOs which have listed today. Firstly, I'll start off with Vikram Solar. Now, this is amongst the largest renewable energy space players that we are looking at, with a production capacity of 4.5 gigawatts. Now, total size of this one was about 2,079 crore with a fresh issue component of 1,500 crore. As if we saw that the IPO had received decent subscription of around 56 times. So this was in focus. Along with that, something which clocked in strong gains today was Patel Retail. Now, if you look at this company, this is a supermart chain with about 43 outlets across suburban Maharashtra and under the brand Patel's R Mart. Now this total size of this one was 243 crore. IPO consisted of 217 crore of a fresh issue size and was subscribed about 96 times at the end of day 3. Gem Aromatics, also another one in focus, Mumbai-based manufacturer of essential oils, aroma chemicals and other specialty ingredients as well. This was a relatively smaller one with a 451 crore of an total issue size with a fresh issue component of 175 crore. This one had also received a 30 times of an IPO subscription level. So all these three that we've seen have received decent subscription numbers as far as we've seen. The last one is Shriji Shipping Global. Now this majorly operates on the west coast of India, focusing on non-major ports and coastal trade. IPO proceeds, the PC will majorly go towards buying dry bulk carriers in the Supramax category if you are looking at. Total size of this one was 411 crore and this included, this is a total fresh issue of that we are seeing about 410.7 crore with IPO receiving about 58 times the subscription that we are seeing. So these are the 4 listings in focus today.
Thanks for that, Anushi. And moving on, according to a report by the Global Trade Research Initiative, the US's new 50% tariff regime is set to hit India's exports hard. The move is expected to weigh most on labor-intensive sectors like textiles, gems, jewelry, shrimp, carpets and furniture, making them less competitive against global peers. My colleague Rishabh now joining us with more details from GTRI and FIO's statements and the latest on the Prime Minister's office deliberations. Rishabh, what are you hearing?
Right. What we're picking up is that a meeting is underway between the PMO as well as key economic ministries, including the Commerce Ministry. What we're hearing is that talks will revolve around the status of India's
Right, we seem to be having some connection troubles with Rishabh. We'll try and get back to him in just a moment, but this is the latest that's coming in right now. This is a report that has come out by the Global Trade Research Initiative saying that the US's new 50% tariff regime will hit India's exports hard. We're looking at most amount of impact in labor-intensive sectors like textiles, like gems, jewelry, carpets and furniture, making them less competitive. Let's just move on now, and we'll try and get back to Rishabh in just a moment. But the deadline for the potential 50% tariff from the US is set to expire tomorrow. But to understand the gravity of the situation, we also spoke to several prominent figures, including the President of Seafood Exporters Association of India, the Vice President of FIO, the President of the Textile Association of India, and the Chief Economist at Yes Bank. My colleague Hiral asked them about the ongoing uncertainty, especially given the initial anticipation of a 21-day negotiation window. Let's listen in from this insightful discussion.
We're not really changing our GDP numbers yet. Because I think the critical issue is, yes, the tariff takes hold, but on the other side we also have a GST rejig that is coming on. So we are talking about two different segments of the economy, one being very significantly negatively affected, which is the export segment, and the downside implication of that on employment in the country, because most of the exports to the US that we are talking about is also labor-intensive exports. So there is a downside implication in terms of the employment as well as the purchasing power of the population. But on the other side, we are likely to neutralize that to a certain extent by the GST rejig. So it's a very difficult story at this point in time, and there are two diverging sort of pulls that are present in the economy on the growth side. And from that perspective, we have still not altered our headline GDP number, though some of the internal numbers may actually be changing. The other important issue is that while the GST positively impacts from a price perspective the services sector, we still don't have tariffs on the services sector, and that restricts itself to the goods sector. So that should be another enabler in terms of the headline GDP number that we look at. In terms of the overall hit purely from the tariff, we are estimating a 0.2 to 0.4% sort of hit, depending on about a 20% sort of exports to the US from India being critically impacted. That's the first round hit that we are estimating.
0.2 to 0.4% in terms of GDP hit, Mr. Pan, is basis 25% tariff. So you're saying basis 50% tariffs?
So it's basis the 25% tariff. It's very difficult to assess what happens in terms of the 50% tariff. I think other guests on your panel will be more sort of suitable to answer this particular question. So at 25% tariff, what I've heard from exporters is that they'll possibly be able to absorb a certain bit, and they would not really cancelling orders. But the situation may drastically change with the 50% tariff, and therefore I would expect other guests on your show to actually sort of pin down in terms of the sectoral perspective how it impacts the overall performance of the sector.
Absolutely. So that's going to be more important. In fact, let me also get in Ravikant Kapoor, Vice President for you. Ravikant, welcome to the show. My question coming to you is, negotiations have been going on. You have, as an association, you have been in touch with the Commerce Ministry as well. What is it that you're picking up now from an impact perspective, representing the exporters? Do you think there is a way forward from here on?
There's always a way forward. But I believe that we have to take it one by one. We have to look at the current situation as it is. It is really a major disaster for exporters to the US. It's still a fresh wound. The pain will set in. It will take some days and weeks, probably some months, if they do not come to any settlement. And for the exporters, we do not see any alternative, especially the ones who are levied the 50% reciprocal plus the earlier normal duties. It is something that we have to now look at: damage containment, hand-holding by the government. The first thing that's going to hit you is what do you do with all your inventories? What do you do with your documents which are of goods on the high seas? It's going to lead into a kind of a financial situation where a moratorium will definitely be called for and should be done within a day, because people need to know what they are going to do. It's also going to affect employment in a big way, because the ones that are paying duty are apparel, they are leather, they are carpets, they are shoes and chemicals. So these are the ones where there are big employment running into crores of people. So how are they going to be managing it? And a lot of this is going to the US, which has been a primary market.
Meanwhile, the Communications Ministry has sought an extension on America's postal duty order as India Post is facing technical and operational issues. This is ahead of the order by the US scrapping duty-free parcels valued up to $800. The request has been placed with the Commerce Ministry and the MEA. My colleague Aishwarya Patil now joining me on the phone line with exclusive story details and more details on this. Aishwarya, over to you.
Well, as you rightly mentioned, the US did pass an executive order which earlier had exempted up to $800 of duty-free allowance. Now, what the Communication Ministry has done is requested the Ministry of Commerce as well as Ministry of External Affairs to extend the implementation time of this US Postal Service executive order. Now, India Post is saying that in order to streamline the operations and also to ensure technical readiness, that is the reason why they need an extension for all of this. Essentially, what the executive order does is that all of these parcels that are being sent to the US under $800 or so will now not be able to be processed by a lot of these airlines as well, because what they're asking of the airlines is to collect duty on behalf of the US government and then get these parcels to the US. And airlines such as Air India, Lufthansa Cargo, Swiss Cargo are all unwilling and do not have the systems, as they say, to collect the duty for US bound emails as well. Of course, a little bit of a background, if you will, on this order is that it was effective The order came through and it is effective. It will be effective from August 29, 2025 for all countries, including India. India Post has already suspended all the parcels from the 25th of August. Going forward to the US, only letters and documents or gift items under $100 will continue to be accepted going forward from here. So that's the story so far. We'll keep you updated as and when we hear on the developments further from the ministry sides as well.
Right, Aishwarya, thank you so much for that update. The Communications Ministry seeking this extension will continue tracking these key developments and bring you all of the details. Moving on, Vijay Sales is betting big on the festive demand and GST rate cuts. Director Nilesh Gupta told NDTV Profit that he expects sales growth of 15 to 20% during the festive season this year over the last. Here's a snippet on how the retailer is gearing up for celebrations.
Today, we are at a very special location. We are at Vijay Sales store talking about the new GST reforms and the boost in consumption that is to follow, and of course the festive demand and how are the sales looking like. And to discuss as to how things are faring at Vijay Sales, we are joined by Nilesh Gupta, who is the director at Vijay Sales, joining us now. Always a pleasure speaking with you, Mr. Gupta.
Thank you for having me here.
My first question to you is that, I want to understand that with regards to this new GST reform that we are talking about, where GST will come from 28 to that 18% mark for ACs, plus your 32 plus inches TVs as well as dishwashers. How is the industry viewing this, and how is this move being welcomed by the industry?
So I think the industry is viewing this as a Diwali gift by the government. Definitely, both the categories are very important.
Yeah.
The 32 plus televisions as well as the air conditioners.
Right.
And especially in the light of the air conditioning summer season not doing so well because of the rains, erratic rains, I think this is going to be a real breather for us, and it will definitely boost the sales.
In terms of the overall view as well, from a Vijay Sales point of view, from a retailer point of view, how do you think that this consumption boost, it's not just GST alone. There's lots happening that the government is in fact doing to boost the consumption, right? There was income tax cut, there was also rate cuts that's come in, there's 8th pay that's going to come in, plus this new GST reform. Lots, done by the government to boost the consumption. How do you think this will incrementally benefit Vijay Sales? If you can give us a perspective in terms of percentage as to what growth can come in from this consumption boost.
So what we are seeing is already the income tax rate cuts which were announced in the finance budget has translated into extraordinary sales for us. So the sales have gone up, and we are already seeing, in spite of a poor summer, we are already seeing a growth of around 10 to 12%, which otherwise would not have been possible. And now with this GST cut coming in, the positivity all around happening in the country, and the very fact that we are able to stand on our own irrespective of what's happening outside, I think it's a very positive impact. And in consumer durables especially, what matters most is not whether the consumer has money or not, but what matters is sentiments. So right now the consumer sentiment is up, plus he has money in the pocket. So it's a double whammy. So we expect a real good sales to begin once the GST sets in.
And that's all the time we had on this edition of Profit 360. But before we go, on the eve of Ganesh Chaturthi, leaving you with some lovely snapshots as the state of Maharashtra gears up for the festivities.
Tech has changed. So should your tech show.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Tech has changed. So should your tech show.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company? Hello and welcome. You're watching KYC. I'm Harsh Saita. With me is Puneet Javeri, and we're going to today talk about an auto company which is guiding for 20% sustainable growth, or rather, let me change that a bit, tweak that a bit. They're talking about 2x the growth of their industry, and it's on a very small base. They're tapping into export as well. So all of that likely to aid the numbers overall. But let me start off with what I want to know with regard to SJS Enterprises. Very, very strong clip of growth is what they're guiding for. I want to know whether they're doing the 20% sustainably is what one can expect over the next 5 years. The second piece is with regard to Walter Pack. Now this has been, this acquisition has dragged the business a little bit where Q1 FY26 is concerned. I want to know, and that's because of client concentration. I want to know whether that can turn a corner and how quickly can it do that. The third piece is with regard to client concentration. Is there a thought process within the company to acknowledge that and to change that is what I'd want to understand. Fourth one is with regard to margins. They do 26% margins, so high growth clip plus high margin plus a unique business. It meets all of those parameters. I want to understand whether those margins can be maintained and what the downside risk could that well be. Fifth piece is with regard to growth. Where will it come from? Current client cohort or a change in product mix, or a little bit of both? I'd want to try and understand some of those levers. Sixth piece is with regard to competition and moats. And I'm rushing through this because we've already done the interview. It's a long one and we want to make sure that you listen to the entire interview. So that's the sixth piece. The seventh piece is with regard to CAPEX and revenue visibility. How much of CAPEX is getting penciled in and how much can the top line go to given this CAPEX? So no future CAPEX till what point in terms of top line? All of that and more on KYC today. Let me start off with about the company. What it does, it designs, develops, manufactures decorative parts for vehicles and appliances. I'm going to quickly tell you briefly what it means. Your car dashboard, on it there is of course the speedometer. They manufacture that part of the car. They manufacture the glass on top of it. So all of those parts. Your steering wheel has the logo of the car on it. So does your two-wheeler, and therefore all of that is what they typically manufacture: logos, overlays, dials, all of these. And it's a fast evolving business, because if you see some of the new age cars which are coming through, and some of the more expensive ones, the higher ticket ones, they have digital logos as well. So all of that is what they've pivoted to. In terms of product categories, that's quickly coming up on your screen. It has decals, graphics, 2D dials, 3D dials, which is typically a display on the car, and the branding on the vehicle. Domes and 3D badges, overlays, which is typically your logos, different types of logos both in 3D as well as in 2D, aluminium badges and in mold parts, which is high quality, durable branded parts within a vehicle on the appliances of the vehicle, giving it its nice shape, or the branding inside the car. All of that is taken care of. Optical plastics and cover glass, which is lots of glasses all around the car as well as on your other appliances. I'm restricting this to cars, but they also do other appliances, and that's a fast growing piece. So for example, your two-wheeler, on top of the dial you'll have the glass, which is what some of this is. The lens mask is typically the mask on top of, say for example, your headlight on the car or the bike. The mask on top of it, which is a transparent plastic mask, is also manufactured by them. Chrome plated, painted parts on the exteriors, handles, etc. All of that is taken care of by them. The aftermarket transformation. Now, this is a large market. We've come to acknowledge it. And the aftermarket, there are a lot of customers looking to transform their vehicles, make it look newer, jazzier, cooler. All of that is taken care of by them, and illuminated logos. I did speak about that. The revenue mix quickly coming up on your screen. Two-wheelers is around 39%, currently was at 34% in FY25. Passenger vehicles around the 37 to 40% number. Consumer is around 18 to 20%, and others is around 6% odd. That's the broad breakup of the revenue. The geographic mix, currently domestic is around 92% with exports of around 8%. Exports expected to double in terms of overall mix in the next few years is what they're targeting. They're targeting a 15% export number very, very quickly. Now let me allow Puneet to start off with the income statement in terms of the metrics.
Well, definitely. It's been a very strong performance by the company over the last 3 to 4 years. From FY22, the revenue has grown at 27% CAGR, and that's passed on to the margins as well. Over 26 to 27% is what they've done in this particular time frame. Profits subsequently have grown at 28%. So this acoustic as well as aesthetic products that they manufacture for automobiles has been working very well, essentially with the premiumization of this particular space, and that's visible in the company's numbers as well. So there's no doubt it is a big thumbs up given on this particular metric. Balance sheet, Harsh.
So equity quite decent in terms of its size, 680 crore, fast growing because it's extremely profitable in the sense it's got a strong profitability. Also, it's trading at around 6 times book value, so something to be taken care of, but very, very low to no borrowing. Your cash bank balance is also decent. There's some capex in the pipeline. We'll speak about that with the management. Cash flow, Puneet.
Well, again, cash flow, we spoke about the profits that subsequently almost doubled in the last 3 years. The cash flow from operations also has gone from 87 crore all the way up to 163 crores in FY25. We've seen the cash flow to profitability or ratio as well on your screen right now doing very well. While net cash flow, while lower, has been lower because of the investments that they've done over the last few years. They've also done roughly about 45 crores of capex. They're expecting to do that in FY26, but that largely seems to be investing for the future. So we've given this a thumbs up as well based on the company's future outlook, as well as the efficiency with investments, which is showcasing in the numbers as well.
Excellent. Let's talk about return ratios, and you see that above the 20% mark, no questions asked, and therefore a thumbs up. It's a sustainable 20% given that there is some bit of confidence with regard to margins, and if that continues, top line growth, margins, well, no reason why this should not be sustainable. Shareholding, Puneet.
Now, shareholding has largely been stable from the promoter family. We've seen from roughly about March of 24 when they've held 21.8% stake. We've just seen in the previous year that private equity firm Everstone had actually sold roughly 29 to 30% of their shareholding. So you see the promoter holding has actually gone down from 50% to 21%. But that's largely the exit of the private equity investor. Promoter family continues to have confidence in the business. We've also seen subsequently this selling by the PE fund lapped up by foreign investors. Roughly from 5%, they've gone to 17% in terms of their shareholding, while the investors, roughly 1/3, remains with the general public as well. So keeping an eye on these niche businesses has been one of the key aspects of individual investors, and that seems to be visible in the numbers as well.
Street cred, you look at a 12% 1 month return, 60% 6 months, year to date is 21%, and 1 year is 38%. Since November 2021, since listing, it's a 3-bagger for investors. Clearly a thumbs up, no concerns here. Puneet, I'll allow you to take both valuations and coverage.
Well, let's start with street coverage first. It has 8 buy calls and none of them are hold. The other key aspect is that currently, out of the 8, we've picked out a few brokerages like JM Financial, Elara, as well as IFL. These were some of the ones which were very well known to the street as well. All of these have a very positive outlook on the company. Roughly the target price ranging from 1400 all the way up to 1700. For Elara, they've actually raised that post Q1 earnings as well, which was in the end of July. So it is a positive outlook on the company, and you'll hear from them as well. In terms of valuation, while there is not so much comparison available in terms of listed players, because the company also mentions that this is a very wide industry. A lot of players do a lot of smaller aspects of the business, but with SJS largely organizing it and getting it under one umbrella, that seems to be one of the company's moats, and currently trading at over 34 to 35 times price to earnings. For FY26, based on the coverage from the analysts, it trades at roughly around 28 to 29 times price to earnings. And while there are much more established players amongst the auto ancillary space that trade at similar valuation, the lack of any one particular company with this kind of segments as well as granularity seems to be why Street is giving this kind of valuation to a company sub 5,000 crores in terms of market cap. But hence we've given this a neutral on that aspect, but it's definitely positive on the growth the company is projecting.
Excellent. Let's therefore stack up all of the rating parameters, and it gives us a very, very healthy 6.5 out of 8 on our KYC ratings. We spoke with Sanjay Thapar, both Puneet and myself, the group CEO and ED at SJS Enterprises, listening to that entire conversation. So you've guided for very strong growth. FY26, yes, you've given that guidance of 20%. So I'm trying to understand a slightly more long-term perspective here. For how long can you continue to grow at this kind of clip? Because as your base grows as well, and you're growing at nearly twice the industry, can you continue to clock this 20% kind of growth clip is what I want to understand first off.
Let me put this a little bit in perspective. So the global market for aesthetic decorative products is close to about $4.7 billion. And at SJS, we've historically, over the last 3 years, we have a revenue CAGR of close to 27.2%, which means that we've outperformed the underlying industry by a factor of 2x or more than 2x actually. The industry in the same period has grown just 10.5% if I combine the volumes of two-wheelers and four-wheelers put together. So we are quite hopeful that because of the trend of premiumization, our focus on new products and new technologies, which are higher in value and higher in value add, we will continue to grow around the same clip. So that's what my expectation is.
Oh, so would 5 years be the right kind of view or visibility to take in terms of this 20% growth guidance? Can we pencil in that next 5 years at least the 20% growth clip will continue at the very least?
We don't guide in terms of percentages. So what we say is that there's an underlying industry that we will outperform. So our guidance for the current year was that we will be 2x of the industry growth, and we'll continue doing that. So think of us as a high growth, high profit company, which is still tapping the opportunity set globally. So we've positioned ourselves as a global supplier, and we are very excited about the opportunities that lie ahead of us.
Mr. Thapa, very good morning to you. Thanks so much for joining in. It's Puneet this side. We spoke recently post our Q1 earnings as well, and largely you seem to be quite positive with the acquisition of Walter Pack as well as your consumer business as well. Given that you are outperforming the industry, you're roughly at about 760 odd crores for FY25 in terms of revenue. Could we anticipate that this could lead to almost doubling in the next 3 to 4 years, given the new products that you integrated are still to see a bigger impact in your existing businesses? So could that be a fair assumption given the strong margin profile as well?
I think that's a fair assumption. So I'd be disappointed personally if we don't double our sales in that period of time. So yes, directionally you are absolutely right.
And Mr. Thapar, essentially in terms of growth, it's quite obvious that you are outperforming the industry. Just talk a little bit about Walter Pack as well as the consumer business, because your auto business is growing at a fair click, and that's well known. With chrome plasting as well as something that you've spoken about is a very big business, as well as with the export opportunity. Which business do you think will lead the growth for you specifically? Is it these two new verticals that you expect? And what is the expectation of some that you can quantify for the consumer business as well? What can we look at?
Look, the way we look at ourselves in terms of a growth opportunity is through the lens of the customer. So what does the customer want from a global supplier? He wants a company that can offer him the best-in-class products at a cost that is very competitive and with no delivery hiccups. So over the years, we've proven our supply chain capability. I export to more than 220 locations across 22 countries, whether it was COVID, whether it was the container blockage. So we've earned that trust. So that makes us very confident that we are a company who's recognized by marquee OEMs across segments, whether it is automotive, whether it is consumer. So we've grown well, and we have a track record of growing large mega accounts. Coming back to Walter Pack, so I think that is a game changer as far as us. So we've, with that acquisition, created a capability set that we lacked at SGS, both in terms of tooling for complex in-mold form parts, also some specialized know-how in terms of 2K molding, and that is a carrier. Think of it as a force multiplier for SGS, because we have a very strong printing background, printing on different substrates. And with this acquisition, we've actually, what we've done is we've created a very niche set of components. And Walter Pack is one of the very few suppliers, Walter Pack Spain I talk of, is one of the very few suppliers globally in this area of in-mold formed decoration parts. And with this acquisition, I think we are at the forefront in terms of technology. These are expensive parts, but we see the trend of premiumization that happens in India. So typically you launch high-end expensive parts in premium top-end segment of vehicles. Slowly, customer demand for such aesthetics percolates down to the mid segment and the entry segment, and we see the market growing very rapidly once that happens. So we are, I think, strategically in a very good position as far as Walter Pack goes, both in terms of technology, This is a long lead item because tooling is very complex. It takes close to about 8-9 months to make a tool. So I would say in the period of 4-5 years, you should see significant contribution coming from the in-mold form parts. We see a lot of demand for chrome plating, especially in the export markets. So we could possibly see a lot of business growth in that area as well. And largely to say, what are the growth drivers? So four-wheelers as a business segment will grow very rapidly for us, as will consumer businesses, thanks to the new technologies that we are launching.
Mr. Thapar, on Walter Pack, Q1 was a slightly softer quarter. When do you start to see recovery there? Of course, reasons well known. There's some bit of drag coming in with regard to clients. When do you see a recovery there in terms of your top line? And what does Walter Pack do to your margins? Are you able to maintain that 25-26% kind of margin number?
I think we've proven that. So historically, we've maintained margins north of 25%. So 25-26% is what historically we've delivered. Maybe 3 years or 5 years now, and after the acquisition of Walter Pack as well. So I think the truth lies in the numbers. So Walter Pack is an important component to our overall strategy. Where do we see? So since this was an acquired business, there's a legacy set of customers that we have. So as a company, we de-risk ourselves by saying we should not be too dependent on one single customer. So in fact, consolidated basis, no customer constitutes more than 15% of my top line. But that is not true for the subsidiaries that we have. These are basically acquisitions. So there is a legacy set of customers. So we are fast gaining traction with other customers as well. And I expect that balance of customer concentration should also reduce over time. And we already have good visibility for orders that are coming in. But as I said earlier, Walter Pack parts are large in-mold form parts which require tooling time. So I would imagine that over the next 1 year or so, we should see Walter Pack coming back and it being a more diversified play, reducing the customer concentration that we currently have.
Mr. Thapar, one question on your kit value specifically, because we've spoken about this in the past. You were at somewhere around 1,200 to 1,500 for passenger vehicles. You've now gone to roughly between 4,000 to 5,000 post Walter Pack's acquisition. Now, you've had some huge guidance. You're mentioning that this will double in the next 3 to 4 years. Could you specify if this will be done via new products like cover glass amongst others? Or will this be with increasing your current business with your current clients, the top 7 to 8 that you cater to? So where should the growth come from?
So growth comes from both these areas that you mentioned. So yes, displays continue to be a very strong opportunity set. SGS is well poised to address this market because of our inherent nature of the products that we've done for a number of years. So aesthetic parts, and cover glass is also an aesthetic part that requires printing. And we are in the process of examining what more can we do in the cover glass business. So we don't want to restrict ourselves to cover glass. The overall displays as a category is very interesting for us. And we are positioning ourselves to address that market. The kit value that you mentioned, you're right, from 5,500 odd rupees potentially per four-wheeler. It is likely to go up to 10,000 per vehicle over the next 3 to 4 years. And SGS is, I think, strategically absolutely in the right direction.
And Mr. Thapar, just a follow-up, what would be, the kind of addition that you think that cover glass could do to your products? Is it one of the most game-changing aspects? Because it seems to be that your current products are adding a lot of value, but this one is a high, the price of that per vehicle is also high and the margins are also better. So what kind of addition do you think that could get you?
So my guidance really is that we continue adding new products. So cover glass is one, in-molded electronics is another area that we are working on. So all these are new technologies. At the moment, there's nobody who makes cover glass in India. So as we move forward, I think we will have an early mover advantage, and they will continue to deliver revenues for us. But our revenue growth, even in the other lines of businesses, are very strong. So we have a great opportunity for cross-selling. So every time that I order new customer, I have maybe 40 different product technologies that I can offer to them. So our ramp up is pretty rapid. And every time that we acquire a new customer location, so there's a lot of opportunity for growth. So where the growth will come from will be both. This cover glass business and display related businesses will grow, as will our other product lines that we've created over the past years. So it's a secular growth. But as I said earlier, automotive four-wheelers are likely to drive growth because they're larger products and larger cover glass, larger everything. So both interior and exterior. So that's a great area that we've pivoted to. So maybe 5-6 years ago in 2019, 70% of my sales came from two-wheelers, which we've successfully transformed, and now it's equal weight. So maybe 35-36% from two-wheelers and 35-36% from four-wheelers. So I think I'm quite happy with the way we've been able to pivot the company.
So where does this go in the next 3 years? Do you continue to add product lines, and therefore that will not only expand your market share within this segment but also allow you to capture market share in other segments? Is that how one should think of SJS?
Yeah, our products are fairly agnostic to the end use. So typically if you have a treadmill, that requires overlay we make. So those are the markets that we've not addressed yet. But growth will come across all segments. So it's hard to call out any one area, but broadly, appliances and four-wheelers will drive growth for us, especially in the export markets. India, of course, we continue to retain our position and consolidate our market position.
Mr. Thapa, just one final question from my side. Essentially for two-wheelers as well, you mentioned that the share has gone down from roughly 70% in 2019. You are adding new clients. You've added Hero in the last couple of quarters. Could you just give us some sense of the competitive intensity in this space? Because it's a high volume product. We're also expecting some kind of cost increases because of ABS. So what does that do for you, for example, in terms of the cost increasing essentially? So what is the current conversation that you're having with clients, and who are you actually competing with? Because for the first time you've gotten Hero, and Hero sells over 50 lakh motorbikes. So just some sense on that sense as well.
No, so let me correct you. Our two-wheeler business has not come down. It has increased.
The share of course, four-wheelers has also increased. Understood, sir. The overall revenue.
Businesses have grown tremendously, so therefore that weight has come down. So that's the point. Yes, we are very optimistic about Hero, so that's a good addition to our portfolio. And we continue to develop new models for them. And as I've stated earlier, we would potentially look to consolidate and gain a significant market share with that, as is our endeavor with all customers. So coming back to ABS does not impact us really, because what we do are PVC films and special materials for their logos. So there is not much of a challenge in terms of ABS, because we don't do plain vanilla molding. The business that we are in is high value add decorative products that are long lasting. And that is what is our DNA as a company. And that translates into, it's a very complex business, batch mode operation. So competition intensity is extremely difficult. So there is, I don't know of a single company in India or overseas which has as many products as I have in my portfolio. So we have close to about 14 different technologies, and most of the competitors that we have focus on just one or two. And I think what helps us with that is to position ourselves as the supplier to go to when a designer looks at improving aesthetics in a vehicle. So they're happy to do that. We have a styling studio which designers come and work along with our designers to formulate specs, and we do this pro bono. So we also have rapid prototyping capability. So we supply products with a very short turnaround time, and that I think engages us even more deeply with our customers.
Well, you also spoke about CapEx, and he said that CapEx, which is in the pipeline over the next 2 years, will take their top line from the current sub 800 crore to 1400 crore nearly. So that's broadly the guidance. But that's all the time we have from Puneet, myself, and everyone who puts this show together. Thanks so much for watching. Hope you found it productive. Of course, stay with us on NDTV Profit.
Tech has changed. So should your tech show.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Tech has changed. So should your tech show.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in?
Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. Today, it's all about calculations. On the one hand, we're going to talk about how you should pay back your loans. When is it beneficial for you to prepay your loans? And what is the order that you should consider prepaying your loans or getting rid of your loans? if you are paying different rates of interest. That is, if you have a personal loan and a home loan or some other type of loan. There are a few strategies that you can employ. And the second part of this conversation is a very interesting calculation which actually might throw up a situation where you can earn more on an EPF in your employee provident fund than you could earn in equity post-tax. I know that it's not a like-to-like comparison, but still it's an interesting calculation to consider and to look at. But first, let's talk about loans. And joining me on the first part of this conversation is Mrin Agarwal, who's a financial educator and founder of FinSafe India. Mrin, thanks so much for taking the time. First up, let me ask you this. From a prudent financial planning perspective, how much loan is okay and how much should your EMI be as a percentage of your take home?
Good evening, Alex, and nice to be here today. Well, from a prudent financial planning perspective, the EMI as a proportion of your take home needs to be limited to 30%. And, the strange thing is that I see a lot of people who are at this 50, 70% of their take home going towards EMIs. That's just too high. You're just living your life in debt. So I think smart way of borrowing is to keep your EMIs limited to 30% of your take home. And this is all your EMIs. It could be a home loan, personal loan, car loan, whatever it is, total EMI does not exceed 30%.
As much as the prudence makes a lot of sense, I think, and a lot of young people, Mrin, are buying into this idea of prudence and they want to live their lives on their own terms. But the old situation was that you start earning, you work towards buying a home. And unfortunately, the reality of it is that places like Mumbai, places like even Bengaluru now, places like Pune, real estate, New Delhi, real estate is getting so much costlier than it was even 5 years back, that buying a home is incredibly difficult. And so the argument that people make is that in the initial years when they're earning slightly less, they can stretch a little bit, and when their earnings go up, then automatically as a percentage of their take home, the percentage goes down. Is that the right approach in your opinion?
Yes and no, because finally I always say that, we can do all these calculations on Excel, but then if you're not happy about it and it's feeling very bad and it's affecting you, then obviously you should do what you want to. But, the issue in doing the stretch is that, you kind of get attuned to living your life on that stretch. And that's what we are seeing today, right? Like we're seeing such a high incidence of loans when you look at the whole household debt, right? So I think the issue, what happens is that you get used to living on that particular stretch, and then like bringing it down to the 30% is a little tough. So I would actually say wait it out for some time. And, of course, there's this whole buy versus rent argument that is there to say that why buy at all, just stay on rent. So I would say enjoy your life on rent when you're young, and when you can really afford it, then look at buying that house.
Yeah, it makes a lot of sense, which is not to say that you should never buy. You should absolutely buy, because when you stop earning, that is a security that you will have. But Mrin, absolutely buy into that philosophy. But what if you have a home loan? And this comes to the first calculation that you've shared with me. Can you take me through it? Because you've assumed a loan amount of 80 lakhs, which I think is normal in a city like Mumbai. You can't get away with not taking a large loan. And I'm glad that you've taken a slightly larger loan, because I think a lot more people can relate to this then. The tenure is 20 years and the interest is 8%, which again is a pretty normal amount if you consider the longer term, right? You might be able to get it less right now because the interest rates are lower, but then the average cost will be that much. So how do you work out something like this? What are the strategies that you would employ?
Yeah, so this was more, because I get a lot of questions from people saying that I just received my bonus, or I've just got some extra money, and should I prepay or should I invest? Because what happens is that, typically one thinks of it like this, that my loan is at 8%, and what I can maybe generate from my investments, especially if it is in equities, is going to be between 10 to 12%. So then, the question then remains that why should I prepay the money? Why don't I just go ahead and invest? So we'll take this, I'll give you the answer in two parts. So the first part of it is really in terms of what happens if you do a repayment? So let's say that, in this particular case, you have some extra amount of money and you're prepaying 1 lakh rupees every year, right? So what happens due to that is that you, of course, save a lot on the interest. So versus the 80.5 lakh rupees as interest, you're almost saving around 17.5 lakhs as interest. The bigger aspect is that your loan tenor is falling from 20 years to almost 16 years, right? So you're repaying your loan 4 years earlier, right? So that is if you do the prepayment every year. Now, if you say, no, I don't want to do the prepayment, I want to go ahead and I want to invest this money every month. So, assuming a 12% return, in 20 years, that amount, the 1 lakh rupees invested annually every year, will lead you to about 76 lakhs, right? Now, this is where the numbers are concerned. So what you're weighing for yourself is, do I want to prepay my loan 4 years earlier and save on 17 lakhs interest? Or do I want to have 76 lakhs wealth? And, Alex, there's no right or wrong in this. It all depends on your mindset. If you feel that I want to get debt free earlier, then go in for prepaying the debt. If you feel, no, I want to create wealth and utilize it for other purposes, and of course you believe that your income will increase and due to that you'll anyway be able to prepay the loan earlier, then go in for that. But yes, you should have this perspective of what you can get on both sides.
It's important that you point that out as well. And for everybody tuning in that's not familiar with this scenario, in a home loan, what happens is that you're better off prepaying in the first half of the home loan, because the way that the EMI is constructed is that in the first half, the interest component of the EMI that you pay every month is much larger, and in the second half, particularly towards the end of the home loan, the only thing that you're paying effectively in that EMI is the principal. And so if you get rid of the principal early, the interest incidence comes down quite dramatically. Now, Mrin, it's important to point out that this is a pretty simple calculation. We haven't even taken into account the fact that a lot of people in the past were also taking advantage of the old tax regime, where they were saying interest cost is deductible from your taxable income, and to that extent they were saving a maximum of 60,000 rupees per individual practically, and if it was a repayment by 2 individuals, then you could save potentially double of that, right? So we're not taking that into account because I think a lot of people have moved to the new tax regime. Would you agree?
Yes, of course, the calculations did not take into account the tax regime. And the other point that I do want to point out is that at the end of the day, you're still paying the interest, right? So even if you're getting the tax benefit, there is still an interest outgo that is happening.
But then it comes to a few scenarios, right? We've assumed in this first scenario that you will get 12% over the course of the lifetime of the investment, which at this point, Mrin, it must be said it makes sense. But then who knows, in 10 years, you might have a lower rate of growth for India and you might have to reset lower. So we're making certain base case assumptions. And of course, interest costs could also, by that argument, go down quite dramatically. It may not stay at 8%. So equally, that is fine. But having said that, there are a few more scenarios that we can build in, right? To say that apart from this home loan, you might have other loans as well. So if you have multiple loans, what kind of strategies would you employ if you're trying to pay them off?
Yeah, so the typical strategy always when people have multiple loans is to always focus on the high interest loans first. So like credit card loans or like personal loans, right? Because you always believe, okay, I'm paying 17%, 40% out here as interest. So let me first get rid of these loans. But I think that strategy works when you have only like high interest loans, and typically most of them are lower tenor in nature. But when you have a combination of loans, so for example, when you have like a personal loan and you have a home loan together, that strategy may not work because, by the very fact that the home loan, the actual absolute outgo that you have every month and for a longer tenor as well, creates a very big impact. So if I can just explain this through an example, that let us say you have a home loan for 50 lakhs at 8% for the next 20 years, and you also have a personal loan for 12% for the next 5 years, right? So the total outgo, the total interest outgo that you're going to have in both the cases is, put together is going to be about 52 lakhs over this 20-year period, right? Now, typically, if somebody has money and they decide that I want to prepay the personal loan first, and of course, everything is assumptions here that we've taken. And, one of the things that I want to call out is that each person really needs to sit down with their financial advisor and work this out for themselves, because there are so many different situations that can happen. And, and it all depends on which is the year that you want to do the repayment as well. But let's say we've assumed over here that the repayment is going to be in year 3. And then from year 4 onwards, you're utilizing that extra amount to repay the home loan, right? So in this case, what happens is that your total interest outgo from 52 lakhs becomes 41 lakhs, right? Now, let us assume that you think that I am going to close the home loan first, right? Because there's a higher amount of outgo. So you're going to close the home loan from the second year onwards. You're going to start paying 2 EMIs. So of course, here what happens is that because you're closing the home loan first, and again, as you explained, that in the first 5 years, it is basically the interest component that is higher than the principal component. So due to that, the total outgo on interest will reduce to about 38 lakhs. So as I said, there could be a lot of permutations. It all depends upon what are the loans that a person has. Ideally, what you need to do is make a list of all of these loans and then, work on an Excel to really see what makes sense to basically pay off first. But I would think that when you have high value loans, your focus should actually be on paying off the high amount loans first.
Okay, so that makes sense. Let's talk about a couple more things. One in particular, right? Because in the current juncture, you have the interest rate regime, which is moving to a lower rate regime, right? So the Reserve Bank of India has been cutting interest rates. It is possible that you might have another couple of rate cuts. And a lot of people are assuming that a further 0.5 percentage points or 50 basis points will be shaved off. And that means that home loans will be heading lower, the cost of home loans, interest cost. So therefore, the question arises that in a falling interest rate regime, what should your approach be? Because the two levers that you can use to adjust, Mrin, one is the amount that you pay every month, and the other is the duration or the tenor that you pay. And that is true either when the rates are going up or when the rates are going down, right? So what is beneficial?
So when the interest rates are falling, clearly maintaining the same EMI is good, because what will happen is that the tenor is going to reduce. Since the interest rate has gone down, you're still paying a higher amount. So if you were to recalculate the EMI, then it will be a lower EMI. But you have decided to keep the higher EMI, which means that the tenor is going down. And it also really means that you're going to have a lower amount of interest outgo, and you're also going to close your loan faster. Right. So, of course, in the falling interest rate environment, it does make sense to ensure that you keep the EMI the same and let the tenor reduce. And of course, it's always helpful, irrespective of whether rates are going up or rates are going down, it's always helpful to make part payments, because part payments will always ensure that your interest outgo reduces. And, Alex, I think this is one of the things, right? Like, people don't realize that, even though the interest rate is at 8%, one feels that it's a very low rate and I'm generating a higher return on my investments. But the reality today is that the principal of the loan and the interest outgo is the same. So, for something that's worth 100 rupees, you're actually paying 200 rupees, right? And that's where I think the focus on any loan repayment really needs to be on reducing that absolute number.
Yeah, 100%. I think it's a very important point that you raise. When you're thinking of your returns from investments, you think about how quickly it will double, right? And that simple rule of 72 formula. So in a very simple example, you divide your 72 by the rate of interest that you're earning. So if you're earning 7.2%, then you're doubling in 10 years. This is true when you're paying something as well. So I think you raise a very, very important point. The last point has to do with how to, a few things to get debt-free faster. You want to run through the list?
Yeah, I think taking a loan only if it's necessary. These days you have all sorts of loans. So of course, I would say just try to stick to the home loan. And certainly you don't need early wage access and BNPL and these sort of things. And of course, like keep increasing your repayments with the increasing income, and look at using windfall gains also to repay loans, and of course keep that whole this whole aspect of getting debt free should be at top of your mind.
Got it. Absolutely. So, Mrin, thanks so much for this very important conversation. Hopefully, we've got people to look at their finances and drop their own calculations, because ultimately that's what you'll have to do. Thanks so much for taking the time. All right, now let's go to our second calculation, moving from a calculation on loans, which is on expenses, to returns, which is investments. And we're talking about the Employee Provident Fund, which is something that employees have to do. Of course, you can bring it to the minimum, but that's not something that most people talk about what you should do. And joining me now is CA Nitesh Buddhadev, who's a founder of Nimit Consultancy. Thanks so much, Nitesh, for taking the time. I saw this post that you had done on social media, and I thought it was an interesting conversation. Let's get into the scenario building first. What is the thesis that you are presenting?
Thanks a lot. Thanks a lot, Alex, for having me. When I'm looking or analyzing any number, I would like to go behind the headline number. That's exactly what happened when I was researching on the EPF numbers. So my book claim is quite bold when I'm saying that your 8.25% EPF can deliver better return than the 16%, maybe the equity one. Why I'm saying that, Alex? When I'm investing into the EPF, okay, as an employee, now there is two scenarios that either I have opted for EPF or I have opted out of the EPF, and the third scenario is that minimum 1800 of the contribution going from my end and also the employer's end. This is the normal three scenario exists when it comes to EPF. Now many people are just putting 1800, or I have seen many of the prospects which we come across are not putting into the EPF, and that's why the whole research started, that why EPF contribution is something quite relevant for your retirement corpus, considering the debt component and also in the new regime, Alex.
Important, and this is particularly after the shift to the new regime has become much more lucrative, I think, after the latest changes, and the fact that you're not getting ATC anymore, right? So your contributions to the EPF, which fell under that 1.5 lakhs of the ATC in the old tax regime, is no longer available to you, but the contributions that your employer makes is still relevant in that EPF calculation. But why are we looking at, first of all, Employee Provident Fund and comparing it with equity? These are two entirely different things, aren't they, Nitesh?
True, completely, Alex. But I wanted to highlight the benefit of 8.25% interest, because people are just going by the headline number. So, Alex, let me give you a case study, which I, of course, did on the social media, like you rightly mentioned. Let's say there are two colleagues, okay, working in the same organization, having the same basic salary. One has opted for the EPF, other has not opted for the EPF. And let's assume that 1 lakh rupees is the basic salary. So the person who has opted for the EPF, even in the new regime, he will contribute 12,000 rupees, which is 12% of basic. His employer will also contribute 12,000 rupees, 12% of the basic. Now, the Alex, like you rightly mentioned, even though I am in the new regime, the 12,000 contributed by the employer will not form part of the taxable salary. That is how it is adding a lot of value in terms of your return. So the 12,000 contributed by your employer, you have contributed the 12,000 rupees, which means you are investing 24,000 a month. 12,000 contributed by employer and 20,000 yours. 24,000 a month you are contributing. If I see the calculation at 8.25% return after 5 years, the corpus at 8.25% interest is 17.75 lakh rupees. Okay. Now, another scenario, the person who has not opted for EPF, now he will not be able to contribute whole 24,000. I am considering that because the 12,000 benefit which employer might have put into the EPF, now because he has not opted, so his taxable salary would be higher than his colleague, because this 12,000 not contributed by his employer into EPF, his CTC is same, but just because of that 12,000 is tax free for his colleague, for him, it would be taxable because he is not contributing to the EPF. Now,